Let's first take a look at how the Asian markets have opened this morning, and it's a slightly mixed to negative start across the Asia Pacific as we speak. The Hang Seng continues its streak of underperformance. It's down over 1.5% at the start of the day. The Taiwanese index is also trading with cuts of 0.5%. The Japanese and the Korean indices were also trading lower at the start of the trading session. So negative cues coming in there from Asia. Australia reported its inflation figures for the month of April, where the inflation rose 3.5% on a year-on-year basis, which was the highest in 5 years. So negative cues coming in there from the Asia Pacific. Pull up the GIFT Nifty as well, and that was also indicating a gap down start for our own markets. The implied open suggesting a 100-point downtick as we speak. So not good going for the Asia Pacific, and an implied open also suggesting a negative start for Indian equities as well. But from there we move to Wall Street, which was back in action after Monday's holiday, and it was a mixed session there, with the Nasdaq closing at a record high above the mark of 17,000 for the first time ever, fueled by who else but Nvidia. The 7% rally in those shares there. S&P 500 ended marginally higher, while the Dow Jones was dragged 200 points lower by the healthcare sector stocks. The US 10-year Treasury note jumped 5 basis points to 4.67%, pushing stocks lower. CNBC's Kate Rogers gets us a wrap of all the action on Wall Street.
U.S. markets were mixed across the major indices as the Nasdaq hit a new milestone on tech gains and the Dow fell on health sector losses. The Dow shed 217 points. The S&P 500 was up 1. The tech-heavy Nasdaq, which closed above 17,000 for the first time, added 99. Ryan Salem, a former top lieutenant of FTX founder Sam Bankman-Fried, sentenced to 7.5 years in prison today and ordered to pay more than $11 million after pleading guilty to conspiracy and fraud charges. Bankman-Fried was sentenced to 25 years in March after being found guilty of stealing more than $8 billion in customer funds. Salem is the first of several members of Bankman-Fried's executive team to be sentenced. And Porsche revealed its first ever 911 hybrid sports car today. The automaker says the new Carrera GTS can accelerate faster than the previous non-hybrid version and can reach a top speed of 194 miles per hour. The car starts at about $165,000. If you want the convertible version, it will cost $178,000. Deliveries are expected to begin by the end of the year. That's what's happening here in the U.S. Back to you in Mumbai.
And the Fed needs more time to assess where the economy is headed, and that is according to Neil Kashkari, the Minneapolis Federal Reserve president. He also said that they are confident that they have the right tools to get inflation down. Let's listen to what he had to say.
In the beginning of this year, just as Chairman Powell said, it has moved sideways, and that's raised questions in my mind. Is the disinflationary process continuing, or are we landing to more of a 3% inflation level? I think it's still too early to know, and we need to wait and see to get more confidence. What's unclear to me is maybe some of the dynamics of the reopening of the economy has raised what I call the neutral rate, or what we call the neutral rate, the policy stance that is the minimum level that we need to get to, where we're not stimulating or restraining the economy. If that neutral rate has gone up in the short run, then that means the policy would need to be even higher in order to get the inflation back down to 2%. That's very unknown right now. It's very hard to judge that in real time. And so I think we just need to take more time to assess where the economy is headed. I don't think we should rule anything out at this point. We are all committed to getting inflation all the way back down to our 2% target. The most recent inflation print that we got on the CPI data was marginally better than the earlier prints from the first 3 months, but still not where we need it to get to. So it wasn't getting worse, but we just need to wait and see. I think right now we're in a good position because the labor market remains strong in the U.S., so we have the luxury of being able to sit here until we gain confidence on where inflation is headed. Many more months of positive inflation data, I think, to give me confidence that it's appropriate to dial back. You know, the U.S. economy has remained remarkably resilient. GDP growth has been strong, much stronger than forecast. Most people thought that we'd be in a recession toward the end of last year. That didn't happen. Instead, we had very strong growth. U.S. consumers have remained remarkably resilient. The housing market has remained resilient. So I'm not seeing the need to hurry and do rate cuts. I think we should take our time and
Moving across the Atlantic to the European markets now, and it was a weak day of trade for them as well. The French CAC slipped about 75 points. The German DAX lost about 100 points, while the British FTSE also settled with losses of over 60 points. The Pan-European Stock 600 closed over 0.5% lower, marking its biggest single-day drop in a month. Now, as investors await next week's ECB decision, a survey by the central bank showed consumers in the region lowered their inflation expectations last month to the lowest since the September of 2021. Wholesale prices in Germany dropped 1.8% in April on a year-on-year basis. That is the softest drop since August of last year. And the markets will track the Eurozone inflation print due on Friday, along with the consumer price data from Germany, France and Spain. So cues coming in there from the European markets as well. But that's the wrap we have on the global market front. But how will all of these overnight cues impact our own markets? We have our research team joining in with the trade setup, the stocks that are likely to be in news and the F&O setup this morning. I'll first tell you about the markets and the cues that you need to watch out for this morning. It's become a bit of a trend for the Nifty over the last 3 trading sessions. We made new highs on Friday, on Monday, but failed to sustain above that. And there you can see they're making intraday highs, but closing in the red. And that is exactly what happened. And that was absent on Tuesday, because we failed to make a new high. We even failed to cross 23,000 on Tuesday and ended lower below the 22,900 mark and close to the lowest point of the day. So that is something that will not please the bulls. Now, institutional flows will show you otherwise, because the FII, DI buying both was a positive figure, but that is also because of the 5 block deals that took place in yesterday's trading session. So we need to keep that at the back of our minds as well. What is another factor of concern as the expiry and the exit polls date draw closer is the volatility is increasing. The VIX crossed the mark of 24 in yesterday's trading session, another 4% higher there for the VIX as well. Now, on Monday, when the Nifty was struggling, at least there was some comfort for the fact that the Nifty Bank, the broader markets, all of them were doing well. But even they got swept under the selling pressure yesterday. Both mid-cap and the small-cap indices were underperformers. And when that happens, the high-flying sectors usually take a beating. And as you can see, the real estate, PSU banks, the non-banking PSUs, all of them were the biggest underperformers in yesterday's trading session. And vice versa. Also, that happens when the market turns. They are the ones that lead the moves as well. Now, there are stocks like Aditya Birla Fashion, IRCTC, NBCC will react to earnings. Plenty of earnings today as well. And as we spoke earlier in the show, the GIFT Nifty is suggesting a gap down start for our own markets as well. Now we head over to Sudarshan, who would list out the plenty of stocks that you need to watch out for in today's trading session. Sudarshan, good morning.
Good morning, Harmas. So first I'll start with Hindalco, as Novelis has announced IPO roadshow for its NYSE listing, and price range is $18 to $21 per share, and total dilution is seen at 7.5% equity, and Hindalco is likely to receive 6,700 to almost 7,800 crore from this, and Novelis is valued at 7.228x EV to EBITDA, which is higher than street estimates. Coming to Reliance Industries, company has signed 1-year deal with Russia's Rosneft to buy at least 3 million barrels of oil per month in Russian currency. Next is PNB Housing. Block deals of 2.7% equity is likely today, and Asia Opportunities and General Atlantic Singapore will likely be sellers, and floor prices for this is likely at rupees 717 per share, which is at a discount of 5% to closing price of yesterday's. Now coming to all the earnings, first we'll start with IRCTC. It was operationally mixed Q4. Healthy revenue growth, but margin across the segments has dipped. Overall revenue was up 21%, but margin is fallen 220 bips year-on-year. Biggest segment, that is internet ticketing, for this margin has fallen almost 800 bips if you compare with the same quarter last year. Coming to AB Fashion, loss is widened, but operationally there is an improvement in earnings. Revenue is up 18%, EBITDA has increased 47%. Madura Fashion's EBIT has increased 3 times year-on-year, but Pantaloons and Ethnic continue to report EBIT loss. Coming to GNFC, there is a sharp fall in headline numbers. EBITDA has fallen 61%. Margin has slipped almost 1,000 bips year-on-year. Chemical business EBIT has dropped 70%, and fertilizer segment continues to report EBIT loss. NBCC, it was a healthy Q4 led by PMC segment, which is known as Project Management Consultancy, which formed 91% of revenue in Q4, and PMC business revenue was up 47% year-on-year. Last is MedPlus. Earnings have improved year-on-year, revenue is up 19%, and EBITDA has risen 30% against the same quarter last year.
Final leg of the earnings season, plenty of reactions to watch out for. Sudarshan, thanks a lot for that. And lastly, Mangalam is joining in cues from the F&O space. Mangalam, FIIs have now turned net long, but that is not reflecting on the index whatsoever.
Well, it doesn't matter because over the last 5 days, we've already seen a big move, irrespective of the volatility that we're seeing. You know, yesterday was one of those instances, for instance, where the frontline indices, all of them ended at the low point of the trading session. But, you know, if you account for or if you take that away, in the last 5 trading sessions from last Tuesday's close to now, the Nifty is up 1.5%. The Nifty Bank's up 2.2%. So nothing really to worry out there for the market as well. It is the Nifty Bank monthly expiry today. So that's something we will keep an eye out on in particular. And what's also doing well for the markets are not only FIs buying in index futures, but cash markets as well. There has been net institutional positive flows. So yesterday the FIs bought just about 66 crores. So the good part is that DI has bought 32 crores, and that's reflecting in the positive moves, positive flows that we saw in the cash market. And they've turned vociferously long in index futures. I mean, yesterday there was purchase of another 2,000 crores, 10,000 long contracts added, 15,000 short contracts covered. And as a result of which, the chart that we've been talking about regularly, we've been tracking for the last 5 days from 31% all the way up to 54%. And the net long exposure has gone up to 47,000 itself. The Nifty Bank that I spoke about will be extremely crucial today. Active options on the Nifty Bank are both 48,200 call as well as the 49,200 call and the 49,100 put, telling you that the option writers are positioned for a 48,900 to 49,350 sort of range on the Nifty Bank itself. The GIFT Nifty indicates a 100-point downtick, and that will be extremely crucial to watch out for, largely because the 22,900 put on the Nifty is extremely active, making 22,800 the first leg of support for the Nifty itself. On the way up, 23,000 call, of course, is equally active as well. Watching out for a couple of stocks. Everyone spoke about ABFRL and their results. It's entered F&O ban today. And also GNFC has exited F&O ban. So those are a bunch of stocks that we'll be watching out for.
Mangalam, thanks a lot for that. Some important levels to track for the index as we draw closer to expiry. But time for a short break. On Power Breakfast up next, Hindalco's US subsidiary Novelis has filed for an IPO on Wall Street. More details on the other side. Stay tuned. We'll be right back.
Domestic economy seems to be having more momentum, higher growth, better macro stability than the global economy. And two is that even from a valuation perspective, some of these themes we think are, given the kind of growth that may happen, given the kind of multi-year cycle they are in, we think the valuations are pretty reasonable. But once you recognize the risk profile, I think it's such a big event, you're better off not taking too much risk. So I think it's perfectly natural for like a fund manager, if they were to go closer to the index, I think that would be perfectly natural and a decent way to handle this event. And typically in a bull run, newer sectors get uncovered.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more.
Back with us on Power Breakfast. Now, in a first large US listing by an Indian-owned company, Aditya Birla Group's Hindalco is set to raise $1 billion from the Novelis IPO, valued at over $12.5 billion for its NYSE listing. Nisha Poddar is joining us with more. Nisha, over to you.
In what could be the largest first US listing by an India-owned company, well, Aditya Birla Group's flagship company, Hindalco's wholly owned subsidiary Novelis, it has kick-started its IPO process with the investor roadshows for an NYSE listing. Hindalco is the parent company and Novelis is the wholly owned subsidiary, and therefore, and the whole IPO is offer for sale, and therefore close to $1 billion is what Hindalco could be raising from this particular IPO. Also important to note, as per the filing of the fundraise details, well, $12.6 billion is the IPO valuation for Novelis as per estimates on the higher side of the price band. Price band is 18 to 21 dollars per share, which means about $800 to $900 million can be raised. And with the green shoe option, it can be raised close to $1 billion for Hindalco through this particular IPO process. One more important thing to note is that Hindalco will own, post this particular IPO process, close to about 91.5 to 92.5% stake. In terms of the impact on India-listed company Hindalco, first is the fundraise of close to $1 billion. Second, the valuation impact, because Hindalco is trading at about $18 billion. And with Novelis, with a valuation of $12.6 billion, it will impact the SOTP valuation of Hindalco, which generally the brokerages have been estimating about 2/3 of Hindalco's value coming from Novelis. And third, the fundraising ability for Hindalco will improve with the equity fundraising, and also in future they can take more debt for furthering their future capex plans.
Nisha, thanks a lot for that. Time for a short break here on Power Breakfast. Up next, we get you cues from the commodity space. Stay tuned. Back on the other side.
Celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential artists.
Back with us on Power Breakfast, and we continue to watch developments around West Asia, where Israeli tanks reached the city center of Rafah in Gaza for the first time, defying international pressure to stop an offensive there. The move comes after an Israeli airstrike on a tent camp in that area that killed at least 45 displaced civilians who were sheltering there. NBC's Raf Sanchez reports.
An NBC News crew inside of Gaza confirms that Israeli tanks have now pushed into the very heart of Rafah. That's an indication Israel has no intention of slowing down its military offensive just days after that deadly and disastrous strike on a camp for displaced people, which killed at least 45. That's according to the emergency services in Hamas-run Gaza. We are starting to learn new details of Israel's preliminary investigation into that strike. The IDF says they dropped 2 precise bombs on a structure where senior Hamas leaders were meeting, but that the explosion caused something else to ignite in a neighboring structure. That caused that firestorm, which just ripped through the camp. People sleeping in tents made of woods and of plastic, those tents going up in just a matter of seconds. Now, the White House calling those images heartbreaking, saying Israel has the right to pursue Hamas, but that it must protect civilians. We're also learning that the U.S. military has been forced to suspend delivery of aid into Gaza by sea after its temporary pier was damaged in heavy seas. That's according to a U.S. official, a UN official, and an Israeli official. The UN official tells us it could be up to a week before that temporary pier system is repaired, before aid can be flowing in again. And this is just the latest setback for the American aid operation. A U.S. service member is in critical condition in hospital here in Israel after suffering a non-combat injury on the pier last week.
Some images there coming in from Rafah, not good sights. But Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. What are you picking up?
Harmaz, well, the renewed geopolitical unrest in the Middle East, and especially with what's happening between Israel and Rafah, has clearly led to some premium in many of these commodities. So I'll start with the crude oil prices, which are now trading at a 4-week highs. We are holding above $84 a barrel now. The gains in prices have come in with the uncertainty now in Middle East and fear of escalation of concerns there. Apart from that, it also is the U.S. summer demand season. Well, we've just done a long weekend, and the expectation is that what the numbers we're looking at is the highest in a couple of decades. I mean, that's the kind of driving that the U.S. markets could be looking at in this season. Apart from that, it is going to be the OPEC and allies meeting on 2nd of June, where they are discussing output policy with an expectation that you could see the 2.2 million barrels per day of a cut continuing beyond June as well. It also has to do with the U.S. inventory data. Well, that comes in today with an expectation that you could be looking at a decline in numbers also is supportive. And then a very interesting UBS report which says that they expect the crude oil prices to gain on from here, and they also are looking at healthy oil demand globally, expecting an expansion of 1.5 million barrels. Good gains is what we also are looking at in metals. Silver is trading at 11-year highs. Copper price is trading firm as well. Most of the commodities doing well again in Asia.
Manisha, thanks a lot for all of those updates. Now, as traders look ahead to the OPEC Plus meeting scheduled this weekend, let's listen in to what Francisco Blanc, the head of commodities research at BofA Securities, expects from the meet and also get his take on the recent copper rally.
I think OPEC is going to extend the cuts into the second half of the year. That's the most likely outcome of the upcoming meeting. They are, however, quite bullish on demand for oil, and that's perhaps a bit of a surprise. I mean, they are at 2.4 million barrels a day in terms of their demand growth expectations for 2024, compared to the International Energy Agency, which sets itself at the other end of the spectrum at around just 1.1. Remember, the base is about 100 million barrels a day. So OPEC is constructive on demand. They will likely keep the cuts and expect that prices lift a little higher. The issue, I think, with copper right now is that it's moved a little ahead of fundamentals. Remember that consumption growth is weak, given the fact that, yes, we're looking at potentially positive data points, but PMIs globally are soft on the manufacturing front. We're also seeing weak industrial activity in many countries, limited trade. So I think as producers around the world, as manufacturers, rebuild their inventories of raw materials and intermediate goods, we will see a run-up in industrial metals, and copper will be a big beneficiary.
On to some weather updates now. Northwest and central India are reeling under scorching heat. New Delhi recorded the highest temperature yesterday, with the mercury touching nearly 50 degrees Celsius, 9 degrees above normal for this time of the year. Uttar Pradesh, Haryana, Rajasthan and Punjab also experienced extreme temperatures. The Met Department has issued a red alert in several states in North India, including Delhi. The weather department said that the extreme temperatures and heat wave conditions are expected to gradually decrease from the 30th of May. Before we wind up, some flashes there on your screen. The IMF has raised the 2024 GDP forecast for China to 5% from 4.6% there. So some positive news from China. We'll see if that has an impact on the Asian markets. But with that, it's a wrap on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call takes the action forward.
And politics, the key news makers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 20. India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's midweek, Wednesday morning, and inching closer and closer to the election results. Markets, of course, showing signs of nerves like what we had yesterday, the selling off from the day's highest point and ending down on a day-on-day basis. We're coming to you from the CNBC TV18 Motilal Oswal studios. Lots to track, lots to cover. I am Prashant. With me, my colleagues Sonia and Nigel. Guys, good morning.
Hi, good morning. Good morning, Nigel.
Morning.
So some volatility, little bit of, resistance at the 23,000 mark, but nothing concerning. Just a little bit of trepidation ahead of the election results.
Well, that's right. And, I think a week or so ago, we were talking about NVIDIA's numbers and, they were good, but the stock has gone up considerably. I'll tell you what, post the numbers in the last 1 week, the stock is up another 15%.
Wow.
That's the kind of...
1,100 or...
It's more than $1,100 right now. Overnight, it was up close to around 7%. So that's clearly in a world of its own.
Absolutely. You know, it goes through, I was reading something, it goes through phases. I mean, the new product which has come, Blackwell, which is the new sort of GPUs which they produce. I mean, it flatlines saying, well, how much more can it grow? And then they come out with earnings and a new product, and then goes up another $200. It flatlines, and then it goes up. So I don't know how long it'll continue for, but it's been an incredible ride over the last 2 years or so. Well, let's just talk about here and now, right? And what you need to know as we begin another trading session. And, you know, I'll start with yesterday where we left off, not in a very good way. But again, I mean, I said this yesterday as well. Is there really something sort of, insightful to take away from yesterday's trading session, except the fact that it sold off from the day's high before 12 noon and then selling accelerated in the last hour? Not really. I mean, looking at yesterday, you can't make sort of, trading strategies or anything over the next couple of days, except to say that there is, of course, nerves in the market because one doesn't know till one knows, which is, of course, Saturday exit polls. And by the way, on Saturday's evening, you'll get the exit polls. That's the 1st of June, once the last phase of polling ends. Typically, I mean, the exit polls will tell you broadly the direction of the result in the right way. They underestimate the extent of the win, etc. But, I mean, they'll tell you, so Monday essentially is going to be a big day. And then, of course, Tuesday, you'll get the actual results. Now, I'll just come to two data points, which we've been sort of talking about non-stop, which is, what FIs have been doing. And that's been the big sort of incremental marginal impact to this market. They've been big sellers. In futures, they've been shorting. In cash market, they've been selling. And in index futures, they continue to add longs now. So they're net long about 47,400 contracts or so. This is as of yesterday's close. This is, a big change because they were short 2 lakh contracts 4 days back. On the cash market, and we've said this, the selling intensity has been going down. Yesterday, there were small sellers. There were small buyers, beg your pardon, very small. The big sort of bulk of the heavy lifting has happened from DIIs and local institutions in that sense. Now, equities overnight ended, I would look at the NASDAQ more than the Dow. The NASDAQ was up about 0.6%, so I'd go with that. But, I mean, you look at the Dow and the NASDAQ, it would appear as a bit of a mixed picture. The US 10-year yield jumped 8 basis points. We are now back about 4.5%. Remember, the 2-year is already closer to 5%. You had a non-voting member of the Fed, that's the US Federal Reserve, who made some comments. This is Kashkari, who essentially said that many more months of positive inflation data would give me confidence that it's appropriate to dial back. So not yet exactly putting his neck out and saying, well, what we have is good enough for us to start cutting. Dollar index was flat, 104.7. Oil prices have moved up a little bit at about 84.5, 84.5 for dollars. But again, I mean, we're around the 100-day moving average and the Brent here. Now, just to sort of look at the market levels, again, it remains a very tightly ranged kind of a market without any big breaks on either side. Supports for the Nifty will come in at the 40-hourly average, which is now at 22,817. Very close by, 70 points out, and we are there. 22,888 is where we left off yesterday. And then you look at the 22,700 levels broadly. So let's hope that doesn't come into play and these supports are held. Now, on the way up, of course, I mean, 23,110 is the immediate upside level. And beyond that, you look at fresh highs. Nifty Bank also posted a negative daily close. And Nifty Bank had been sort of underperforming in the last couple of days. It did better than the Nifty. Here, the support comes in at 48,812 and pretty close to where we left off yesterday. And that's also the 40-hourly average. I think, volatility is the name of the game. There's going to be nerves and there's going to be sort of a little bit of nervousness as we go into election results. That's been, I think that's very, very reasonable to expect as well. So if you expect anything otherwise in terms of a big move, directional move over the next couple of days, I think that would be foolhardy. GIFT Nifty will come up on your screen. I'll tell you at least the opening kind of levels this morning. I think we'll have that up in just a bit. Yeah.
So the GIFT Nifty, is indicating a fall of around 115 odd points. Yeah. So I think this morning there's a little bit of trepidation, right, that you can see on the screen. And there are a couple of reasons for that. Of course, the market has been facing hurdles at the 23,000 mark, so that's important. But let's look at the flow situation yesterday. There was large buying from domestic institutions, and that's something that continues. So we've got that relentless support from domestic institutions, almost 3,300 crores of buying. But let's put that into perspective, because yesterday's FII and DII data includes 5 block deals worth 4,100 crores. So better to, just keep that in mind when you look at this large number as far as the DII data goes. Now, in the month of May so far, money has been pumped in thick and fast. So 45,000 crores has been put in from DIIs. So keep that in mind. The US markets were mixed, but the important bit is what happened in the NASDAQ. It topped 17,000 for the first time ever. And of course, we've had some really strong moves coming in from the likes of Nvidia. So that is a space to look at. Now, as I said, the Nifty is facing resistance at 23,000, but there are some stocks that you can watch out for. Hindalco, of course, will be in focus as the company looks to raise $1 billion from the Novelis listing on the NYSE, and now the pricing is also out, so more details on that coming up, but that will definitely be front and center today. Apart from that, we have three important numbers coming out. There's Tata Steel, there is Bata, there's also Mazagon Dock, and Mazagon Dock has had a dream run. So let's see how those numbers shape up. And then IRCTC will be also reacting to their numbers, which was a mixed bag actually this time around. The revenues went up fine, 20%, but the margins were under pressure, down 220 basis points. A couple of other stocks like Amara Raja Batteries, etc., also reported a good set of numbers. So keep your eye out on that. But largely, you'd have to say the market is facing a bit of heat at that, 23,000 mark. Gift Nifty suggesting a lower start.
Well, that's right. And you have the Asian markets as well that are under some pressure with Brent crude prices spiking up. So global headwinds are there up against us today. But yesterday we ended virtually at the low point of the day, but it wasn't really selling that was intensifying. There was lack of buying ahead of a big event. The money flow seemed to have dried up a little bit, and that explains why the broader markets were under more pressure rather than the frontline names. So that's one pocket. We'll wait for a couple of sessions out, and then things will normalize once we get the election verdict out of the way. The Nifty Bank, that plays out the weekly expiry today, so that's going to be the swing factor. Yesterday it ended virtually at the low point of the day. What do the FIs do? They added 10,000 long contracts. They covered some shorts as well, and that's why now you have the long position that's moved to around 54% or thereabouts. So the swing factor yesterday was around 25,000 contracts, and if you pull up a chart, you'll see now the FIs are net long, and it's the highest net long that we have seen all the way since April 2024. So just keep that in mind. We were short. Then, in fact, we moved into net long, and now we're close to around 50,000 contracts on the net long side itself. What about the options data? 23,000 call, 23,100 call. Last few sessions, you've seen aggressive writing out here, and the premium has come down to around 80 and around 45. A couple of sessions ago, the premium on the 23,100 call was close to around 100 rupees, and also the 23,200 call was far higher. We're facing resistance at higher levels, and that's pretty clear. Last couple of sessions, we're going to around the 23,000, 23,100 odd mark and doing a U-turn from there. Even on the Nifty Bank, that 49,500, 49,600 odd mark seems to be a bit of a congestion zone. So going by the options data, going by the resistance points, let's get to the levels. The Nifty seems to be in this broad 500-point range, and I have been maintaining this for the last few sessions as well. On the downside, 22,700, which was a bit of a resistance when we were going up. That becomes a support. On the upside, the 23,200 odd. The Nifty Bank is going to be crucial today because it plays out the weekly expiry. Resistance from where we did a U-turn a couple of sessions ago. Earlier, we had a bit of a resistance at this level. That's 48,700, which now becomes a bit of a support. And then the 20 DMA in terms of a reference point. Since it's a stock-specific market, the one thing that I'm looking at is Cummins. It comes out with its numbers today. The delivery volumes that we saw a couple of sessions ago was close to around 15 lakh shares or thereabouts. And that's the highest that we have seen in nearly around the last 7-8 months or thereabouts. So big delivery is what we're seeing. Yesterday the stock ended at a fresh 52-week high as well. And if you pull up the chart, you'll see that though the markets are under pressure, that one ended virtually at the high point of the day. So Cummins is a stock that I'll keep on my radar.
Okay, as always, thanks a lot for that. 42% higher in the last 3 months. Definitely a stock to look at. But let's get straight to individual ideas now. In the sense, let's get you some opinion. This is a big week for the market, and Mahesh Nandurkar of Jefferies says the domestic equity inflows during 2024 so far are a staggering $7 billion per month, which would be nearly 2 times the previous high and more than 3 times year on year as domestic investors position for strong election results. He says at near 20% of financial savings and with the predictable flows to equity at less than half, the risk of domestic flow reversal is rising. He also says potential regulatory action on derivatives could be a trigger. He adds FPIs would likely buy the dips, limiting the downside on the large caps.
Okay, well, we've got Vikash Kumar Jain of CLSA who's also weighing in. He says that from the F&O universe of 183 liquid stocks, they've identified 54 companies which are perceived as direct beneficiaries of PM Modi's policies. Half of these are PSUs. He says remarkably 90% of Modi stocks have beaten the Nifty in the election-focused rally over the past 6 months versus only 42% of other companies outperforming, and this may continue in the case of a strong election result. He says L&T, NTPC, NHPC, PFC, ONGC, IGL, MGL, Bharti, Indus Tower, Reliance are some of the preferred Modi stocks for CLSA analysts. However, he adds this narrow election theme-based rally may end in June or July, and they see banks as the best risk-reward India growth play in the second half of 2024.
Okay, let's also get you some money market views on the rupee. Kunal Sudhani of Shinhan Bank says Fed Reserve officials flood the news wires. Inflation concerns weigh on the dollar. But Minneapolis Fed President Kashkari's comments on rates did bolster the dollar. He adds the dollar index continues to find support at 104.1, while Brent crude saw some up move. For the dollar, INR 83.10 acts as a support, while 83.30 is a resistance.
Okay, all right. Well, those are views coming in on different asset classes at this point in time. All right. On bonds, we've got Neeraj Gambhir who weighs in. Bonds rallied after RBI approved transfer of 2.1 lakh crores as dividend to central government. Government securities auction also strong demand with the 15-year paper cutoff coming in better than market expectations. The 10-year G6 saw profit booking near 6.97 levels. They expect the 10-year benchmark bond to now trade between a range of 6.95% and 7.05% before the general election outcome early next week.
Well, we've got a lot of stock-specific action to track for you. We get to that in just a bit. For the time being, we run you through the list. We'll look at Hindalco, Amara Raja, Aditya Birla Fashion, RR Kabel, MedPlus Health, Aster DM, Campus Activewear and NBCC. All of them will be reacting to positive news flow overnight, while we have PNB Housing Finance and IRCTC that will be reacting to negative news flow.
Okay, well, we got our first sort of voice on the show. John Stoltzfus is Managing Director and Chief Investment Strategist at Oppenheimer Asset Management. John, great to have you with us here back on the program. Good morning. Thanks very much for joining us. Prashant this side. Markets here a little up, a little down, but nerves, of course, before the election results now, which are a couple of days away. But from a global arena, with what we've seen overnight, Fed's Kashkari talking about how he'd like to wait a few more months of data before he thinks it's appropriate to dial back on interest rates. Dollar sort of strengthening a little bit, yields up about 7-8 basis points in the 10-year. What do you make of it?
Well, thanks for having me on the show. Great to be here with you tonight in New York and the morning in India. Pardon me. It's been a long day. This is the 16th hour for me. What I must say is related to the market. Coming into this year, the impression was the Fed had intimated that it planned to cut rates, or likely would, 3 times this year. We thought it would be likely to only cut 2 times at that time. And then the market thought that the Fed would cut something like 3 to 5 times. And I've even heard some people thought it would cut to 7 to 11 times. Quite frankly, I think the inflation rate is really what you need to look at. We've got sticky inflation here stateside. The Fed has now raised rates 11 times and done 7 pauses at the highest level that when it stopped raising rates on the 11th hike. So that's 18 different meetings. And effectively, they have not pushed the U.S. economy into a recession. It would appear to us that the Fed has really thus far accomplished a remarkable thing in that it has brought down inflation. In 2022, we were at 40-year highs. Inflation was almost 10%, about 9.6, I thought, thinking back then. And now we have inflation running at about 3.4%. If you look at the various indices on inflation, maybe 3.2. The idea to get to 2% is going to be tough because what you've seen is we have resilience in jobs creation. We have resilience within the consumer and resilience in business. Just looking at the earnings for the S&P 500 earnings, Q1 earnings season so far shows earnings up around 7.8% year over year on back of 4% revenue growth, with 8 sectors of the 11 showing positive earnings growth. And of those 8, you've got 6 showing double-digit earnings growth and only 3 sectors posting negative earnings growth. And among the the sectors where you see the growth in earnings, it's mostly growth oriented and cyclically oriented. So the Fed has its job ahead of it. But we think a lot of the drama that's being created out there, a lot of it is folks who really, when they look at this, they don't recognize the fact that we were at free money for a large part of the last 15 years because of the great financial crisis, followed by the pandemic and the effort to get the whole supply chain going. So essentially, we're not surprised. We think it just requires a little bit of patience and diversification to come through it.
Okay, John, hi, good morning. That's been a long day for you, 16 hours and counting. I think someone needs some rest. But thank you for being with us, irrespective of such a long day. You know, for the Indian viewer, right, what matters is whether he should top up his investments or stay cautious. How are global investors looking at India now? Because India has been a top favorite, but we've also had a steep run-up in the last 1 year. How are things looking now?
You know, related to India, I think that the global investor, particularly the U.S. global investor, is looking for great things coming from India in the years ahead, and beginning, it already has begun. I mean, years ago, we were working with ordinary shares and then primarily ETFs, and then we had ADRs on stocks from India. Now, what's happening is the diversification of the global supply chain away from one country's centricity that we've had for over 30 years and looking for an expansion of partners, I think is terrific for India. The prospects are fabulous. From our viewpoint, I think what we're looking for as U.S. investors, we're looking for increased preparation in terms of infrastructure, training of teams of people for new operations that will be brought to India. And if anything, we think India will be the new growth stock of the Asian theater.
Hi, John. Good morning, and appreciate you staying up late for us here in India. You know, the other problem, I think, from an India investor perspective is China seems to be coming back, or maybe not. How do you read the Chinese recovery? You know, we have some statements coming in from the IMF earlier today, and they have upped their growth guidance by close to around 40 basis points. Your view, is China recovering, and is that a risk to this entire Indian stock market recovery that we've seen?
I think the issues around China, some of it is related to policy, domestic fiscal policy and direction by the government of China. And the other effect really is China seemed to have wanted to rely less on the rest of the world. It just hasn't worked out too well with the problems they have in their real estate market that they're working to change, and the problems they have demographically in the country that are challenging. That said, I think China will continue to grow, but there's plenty of room for other partners now, because the key thematic, I think, here is the diversification of the global supply chain away from one country centricity. And we would expect it would be the beneficiaries will be, and we've already seen that in many ways, India, Vietnam, Korea, and Japan also. On a global basis, it'll be both emerging and developed international countries. And other ones will be Mexico, Brazil, Chile, Peru. This is a broader participation of globalization. And China certainly is in a position today in terms of its capability of manufacturing, logistics, and technology to be a worthy competitor of everyone. But it just will no longer be one road. It won't be like they used to say, all roads would lead to Rome. For many years, in terms of the global supply chain, at least most roads led to China, and that centricity, we think, is being diversified, in part because COVID proved it was very impractical. It's got to be a multiplicity of partners to have a successful process of globalization. And I think China knows that itself.
Got it, John. We leave it at that. Thank you so much for joining us once again and appreciate your time here on CNBC TV18. That's Oppenheimer Asset Management with their view, but plenty of stocks to look at. Hindalco will, of course, top the chart. So more on that coming up on the other side with our list of top 10 stocks. Stay tuned.
YouTube.
In the last couple of weeks, the aluminium prices have spiked up, but they've been fairly volatile. There have been sort of $100 swings each way, currently running at $25.50. I think that, we are sort of working with the fact that the numbers are going to be a little bit more stable around 2,400 rather than the current 2,550 or 2,600. I think our input cost, especially coal cost, there's enough coal available. So I think our cost of production in Q1 is probably going to be a couple of percentage points even lower than Q4. So I think that the EBITDA per ton in Q1 will be certainly higher than the Q4 $967 per ton.
My role would be focusing more on strategic financing and M&A, because I think that these are very important.
Good morning. Welcome to Bazaar Morning Call once again. You have the Nifty that is facing a bit of resistance at the 23,000 mark. So this morning as well, not looking like a good start, a bit tricky, but let's see how it goes. Our research team is standing by with CNBC TV18's list of top 10 stocks for the day. And of course, the big one to focus on will be Hindalco and Novelis. Nisha is joining in to give us the latest on that. Nisha, over to you.
Thanks for that. Yes, the price band is out and so is the valuation. And as we had earlier reported, $1 billion is what the India-listed Hindalco, the parent company of Novelis, is seeking to really raise from this large monetization exercise from its US-based Novelis. Now, as per the amount and the other numbers that have been stated, it's $12.6 billion at the higher end of the price band, which is the valuation that they are looking to achieve. In terms of green shoe options included, the total fundraise could be about $1 billion. Without the green shoe option, it could be around $950 million as per the higher end of the price band, which is at $18 to $21 per share. Now, also to note will be that Hindalco will be left with 91.5 or 92.5% stake in Novelis after this IPO process is over. We know that it's a wholly owned subsidiary, 100% is owned by Hindalco. So in terms of impact, first of all, it's the largest and the first large US listing by an India-owned company, and in terms of monetization and SOTP valuation, again, has seen a slight positive movement with the valuation of Novelis in IPO, and the future fundraising ability of Hindalco also improves.
All right, thanks a lot for that, Nisha. When this news first came out, that was in February odd, the stock was at around 520 rupees. So from there, the stock is up close to around 25% approximately. Some part of this good news has been, priced in. And also you've seen that aluminium prices have moved up. So the base, business that's here in India has got a bit of a bump up. So, from that 510 odd mark, it's seen a big recovery. Just a couple of points out here. Post-listing, there will be a holding company discount. So just keep that in mind. So that's why the stock may not run away. And point number 2 is the FI is close to around a fourth of the entire holding of Hindalco here. If they list Novelis, then some of the FIs will say, maybe, just maybe, we'll take direct exposure to Novelis itself. So just 2 points I wanted to add on to what Nisha said. So keep that in mind as well. Stock opens up in the green, but it may not run away because of a couple of these factors. Let's go to Sudarshan. Sudarshan joins us to tell us about PNB Housing. Morning, Sudarshan.
Morning, Naja. So yesterday we saw block deals of in 5 equities of more than rupees 4,000 crore, and today there is another block deal likely, and that's in PNB Housing. 2 foreign portfolio investors, for Asia Opportunities Mauritius and General Atlantic Singapore, are likely to sell 2.7% equity. Talking about the details of the book, size is of 500 crore. Floor price is seen at rupees 717 per share, which is a discount of 5% to yesterday's closing price. And as of March 2024, holding of General Atlantic Pacific Singapore was at 9.82% and Asia Opportunities Mauritius at 9.88%. The reason I'm going with red because of two reasons. First, floor price is at a discount of 5% to closing price of yesterday. Second, Asia Opportunities Mauritius had bought 9.88% stake at a price of rupees 821 per share. Now it's likely selling at 717 per share, which is a discount of or like fall of almost 12%.
All right, so thanks very much for that. IRCTC is the next one we're looking at. Mangalam is here with details on this one. Mangalam, morning.
Good morning. So it was a mixed set that came in for IRCTC. What was good was that the revenue growth came in at around 20-odd%, but the margins of the company actually did see a bit of a compression. So as a result of which, we have seen margins for the entire segments of the company, all the segments come lower. So about 19.7% in terms of top line. The company's reported revenues of around 1,155 crores. The EBITDA actually has grown just about 11.5%. That implies that a margin compression of nearly 220 basis points. The key segment of the company, which is ticketing, internet ticketing, out there the revenues grew 16%, but the EBIT grew just about 5.5%, implying a margin decline of nearly 800 basis points. So I expect the stock to see a bit of a red at open today.
Okay, so that's on IRCTC, but plenty of other stocks in focus. Let's see how IRCTC opens up in trade today. Amara Raja Batteries is the other one that I'm looking at. Good set of numbers coming in, so I'm going with green over there. Strong top-line growth of 15% is what Amara Raja has seen this time. The margins are also quite stable, although the operating profit margins are flat at 14.5%. The gross margins have come in at 34.5%, which is a growth of 150 basis points year-on-year and 54 basis points quarter-on-quarter. So the street will definitely like that. And the profit growth is up almost 63%, coming in at 228 odd crores. But it's important to remember two things. One is that the stock has rallied quite a bit. In the last 6 months, the stock is up 80%. So maybe a lot of the good news is in the price. And the second is the stock is now higher than its, average multiples it has traded at in the past. So it's currently trading at 18.5 times FY25 price to earnings ratio. So just keep that in mind. But numbers are good nevertheless, and going with green on the stock. But Upasana is joining in. She has AB Fashion and RR Kabel on her radar. Upasana, good morning.
First up is ABFRL. The company's losses have widened, but company has recorded a strong revenue growth and margins have also expanded sharply. The company has seen a revenue uptick of 18% on a YoY basis, and margins have seen an expansion of 170 basis points at 8.5% on a YoY basis. While the losses have widened from 194 crores to 266 crores on a YoY basis, and company says that currently in a weak demand environment, management is focusing on improving its profitability. It has also said that consumption has continued to remain sluggish in the past 6 to 8 quarters, and company's net debt currently stands at 2,862 crores, meeting its FY24 debt guidance. The next up is RR Kabel. The revenue has seen a strong uptick of 16% on a YoY basis, which was mainly led by the company's main segment, that is wires and cables. Coming to wires and cables, the company recorded a revenue of 14% on a YoY basis, and margins saw an uptick of 50 basis points at 8.7%. In terms of revenue mix, wires and cables contribute 87%, and loss-making FMEG contributes about 17% of the overall revenue mix. The company's consolidated EBITDA margin stands flat at 6.6% versus 6.7% on a YoY basis, and PAT has seen an uptick of 21% on a YoY basis. Hence, I expect both these stocks to open in green today.
Thanks a lot for that, Upasana. Well, let's hop across to Ekta. She's here to tell us about Aster DM and MedPlus Health. Ekta?
Morning. Well, I'll start with MedPlus. The revenue was up around 19%. The margins improved to 7.1% versus 6.5%. So there was a marginal improvement which took place, but still in single digits. Profit 33.4 crores increased. 1.1% increase in private label sales this quarter. So that was a bit of a dampener, but it has been the case in the past couple of quarters. But the diagnostic losses are reduced to 1.1 crores versus 3.4 crores Q-on-Q. So that is a positive. Aster DM, revenue was higher. Remember, it's only the India business which is reported this quarter. 973 crores, margin 16.4%, which was better year-on-year. Loss of around 24 crores. The average occupied beds for FY24 was up 12%. The RPOP, which is average revenue per occupied bed, was up around 10%, which is also positive for FY24. I expect both these stocks to probably be in the green. Aster DM could be weighed down because of the reported net loss.
Right. Lisa, thanks very much for that. We'll, of course, have the management of MedPlus join us a little later to talk about the numbers as well. But back to Mangalam, Campus, Activewear and NBCC in focus. Mangalam.
Well, Campus Activewear, the revenues grew by about 4.6%. One would say that it's a small revenue growth given their history of growth, but FY24 was a tough year for all the footwear companies. What was positive was that their EBITDA grew by 13%, implied a margin improvement, and the net profit also surged by about 42.8%. The companies renewed their focus on trade distribution, ASPs increased as well, and they repaid some debt. So see some green on Campus today after a big drubbing that the stock has seen already. NBCC, on the other hand, has reported a very good set of numbers. The revenues grew by about 43%. The EBITDA too grew by over 130%. Margins improved. And all of this was led by their PMC business, where the revenues came in near 3,700 crores versus 2,500 crores itself. So good numbers for NBCC. See bright green on that stock.
Okay, thanks a lot for that. Well, let's move on and get you a quick recap now of our top stocks. Stocks with positive news flow: Hindalco, Amara Raja, Aditya Birla Fashion, RR Kabel, MedPlus Health, Aster DM Healthcare, Campus Activewear and NBCC, while stocks with negative news flow: PNB Housing Finance and IRCTC. But let's also get a quick word on what's happening in the world of commodities this morning. Manisha Gupta is joining in. Manisha, what's the one commodity that you're tracking today?
Well, I'm looking at the dollar, which is steadied ahead of the U.S. inflation data. I mean, that is going to be the big thing to watch out for the rest of this week now. And ahead of that, with the dollar strength, we're looking at a bit of profit-taking that you can see across metals as a sector. So whether it's about gold, we have seen prices hold around that $2,355 an ounce there. The markets are also looking at the silver prices trading very close to 11-year highs. The physical silver buying for industrial use has been higher, and that's exactly what really has been supporting platinum as well, which is trading very close to its 13-month highs right now. Copper prices also gained up by 1.5% overnight. So metals as a sector continues to do well. What also is doing well is the crude oil price is now trading at a 4-week highs at $84 a barrel. Well, the U.S. summer demand season seems good. The renewed geopolitical unrest in Middle East also has added premium to prices. The street will also watch out for the U.S. inventory data today and the OPEC and allies meeting on 2nd of June. That is where the new direction would come in from.
All right, Manisha, thanks very much for that. So that's commodities and oil with a bit of a bump that we saw last night. We'll take a break. Deven Choksi of DR Choksi Finserv will join in with some stock-specific conversation on the other side. Stay with us.
the company is now looking at to transform itself into a global top 10. I think, see, this role is going to be, more, as I mentioned to you, on strategic financing, M&A, and I would also have, to be involved a little more on the subsidiaries itself. Ashok Leyland has a lot of subsidiaries which are today, on value generation mode. So this is another part of my role where I would be interfacing with the management of these companies to look at opportunities for value enrichment. At the moment, it's a little too early for me to state what the specific M&As would be. As and when they happen, you will certainly come to know of them.
The passenger vehicle, two-wheeler and four-wheeler stocks have become slightly more fairly valued versus last time. Incrementally, I'm a bit more bullish on CVs because, see, traditionally what we've seen with CVs is that it goes through deep down cycle and a sharp up cycle. But the sustained momentum in the economy today could mean that the last 1 to 2 years of consolidation we've seen in CV volumes, unless we see a bit kind of global recession or big unexpected shock.
Welcome back. Hope you're having a good morning. Well, we've listed down all the stocks for you. Let's get some fundamental analysis going as well. We have Deven Choksi, Managing Director at DR Choksi Finserv, who joins us on the show. Hi, Deven. Good morning. Always good to see you in. Well, plenty of stocks that will be reacting to news flow. Let's talk about the top one, Hindalco, looking at unlocking some value in Novelis, which is good news. And the valuation that's coming out of there is a little higher than what the street was ascribing to it. The problem is now there'll be a holding company discount, and also the FIs have an alternate. The stock has already run up, Devin. How do you approach it closer to around the 680, 690 rupees?
And Nigel, good morning. Well, on one side, definitely, I think this particular move will result into a higher amount of balance sheet play for Hindalco in particular. I guess I think the amount of money that they are raising around 7,500, 8,000 crores, I think, which is basically definitely going to help the balance sheet of Hindalco per se. Could help Hindalco in a way. Ultimately, I think from the point of view of not requirement of funding for Novelis A, at the same time, I think getting cash generated for the brownfield greenfield expansion out here in India per se. And there is the bandwidth per se, I think, from the point of view of taking for the debt. So that is all in positive. Maybe I think the shareholders may not get enough amount of regular level because of the discount that you mentioned about. But I would think that I think overall this particular push should act as a positive for the company. The commodity cycle in particular, I think we remain distinctly positive. Both the aluminum as well as the copper cycle remains, I think, extremely positive. And that should give the opportunity for Hindalco to continue its march. Maybe in the recent times, the stock price is already adequately priced every event or every such kind of news. I would think that one will have to wait for corrections in the market to re-enter into the stock.
Okay, Devin, hi, good morning. What are your thoughts on these battery manufacturers? Both Exide and Amara Raja reported very good set of numbers, but the stocks have run up a lot. So at this price, are you cautious or do you think that the risk reward is still favorable?
Yeah, good morning, Samir. Well, I guess I think this is a story for most of the stocks. I think you have most of the companies have factored in the development, the news, the price, whatever is talked about. I think it's all fully discounting the developments. Yes, I think I do agree the Maharaja's working has come up really smart. And I believe that I think if this trend continues, then the momentum will follow for this company. However, in the recent times, the stock has done everything which it should have done. I think as far as I think the price outlook is concerned, I believe that, again, corrective markets would be the better times to buy into the stock. Current valuations are adequately pricing all the events or the possible growth in the working in the financial year 24-25.
Devin, hi, morning. You know, we have this CLSA note that we were talking about earlier, and we'll put out more details on this one, right? They're essentially, and I've been asking people who've been on the show, what is the best way to get exposure for continuity, which is the baseline for the market? I mean, you know, of course, upsets aside, no one can say. You know, which is the best pack? Is it PSUs? Is it CLSA has got a note out and they list out a bunch of companies, you know, L&T and PFC, a few others out there as well. Just that question to you, Devin. I mean, if one is looking ahead a little bit, a week from now, in terms of where the market will be and what should one do now, what would your advice be? This is near term, of course.
Yeah, Prashant, good morning. Well, I believe that I think the focus should be on the consumption and focus should be on the B2B space in which I think the manufacturing companies are positioned. Certainly, I think the likes of Larsen, the ABB, Siemens, all of them have suggested that they have got a very healthy order book and next 3 to 5 year visibility is extremely strong. But most of the news are definitely priced in and I think the stocks are putting at a premium. So in such situation, I think keeping an eye on these companies is more important because I think once the event of election and the results gets played out, and after that, whenever the corrections of any degree comes in the market, probably this manufacturing sector would be the one where we will remain more comfortable buying into the portfolio because we see a horizon of next 3 to 5 years. Now here, I think you can also go for the consumption space, wherein I think particularly in auto and auto ancillary, where we believe that I think these companies are likely to produce continuously better performance going forward again for 3 to 5 years. Each of the verticals within auto, be it I think the commercial vehicle vertical, be it farm equipment vertical, the passenger vehicle and the two-wheelers. In each one of them, I think we are seeing a steady to healthier growth continuing, particularly in commercial vehicle, where we are distinctly confident about, I think, the way forward. So maybe I think this kind of companies like of Tata Motors, Ashok Leyland, though they may have moved up recently, I would think that I think there may be relatively better opportunity to buy into the portfolios.
Okay. Devin, just stay on because we have a company joining us now, Responsive Industries. It is one of India's biggest players in the vinyl floor manufacturing space, and they cater to sectors like the Indian Railways, to the Vande Bharat project. So, the numbers have improved quite a bit. I mean, in Q4, they reported a very strong set of numbers. Revenues jumped 21%, margins expanded to 23% from 17% year on year. In fact, the company expects to continue its status as a zero debt company. So this stock has also doubled from the 52-week lows. We have the company's CEO Rishabh Agarwal, who's joining us now to talk more about that. Rishabh, hi, good morning, and thanks a lot for joining in, and congratulations on a strong set of numbers. Now, we do know that you do have, an exposure to some of these high growth sectors like Indian Railways, etc. But just tell us, what is the kind of growth rate that you are looking at in FY25, and where is the largest opportunity for you in terms of orders?
Good morning. Thank you. It's a pleasure to be here. So in terms of the growth rates and in terms of the results, railways has certainly played a large part of it. India continues to invest in its rail sector. Vande Bharat's a key partner for us. But apart from Vande Bharat, all the initiatives from the railways, Garib Rath, Vande Bharat, the bullet train project, all of these play into a key segment for us on the, the high-end resilient flooring. In addition to this, the growth sectors come in from domestic bus manufacturing. There is a big push for electronic buses. EV buses is, big push from the Indian government side. And a lot of the bus bodybuilders have very, full order books. And as a, consequence of that, we have pretty good order books going into the bus flooring, the bus vinyl flooring and things like this. In terms of the growth, sorry, yeah.
No, just one follow-up question there. So you said railways and EV buses, right, are a big part of the order book for you. How much is the contribution from railways and from EV buses right now, and how much can you grow it to?
Right. So the contribution is about 25 to 30% is the contribution from these businesses. We can grow that a further of about 20-25% in the following year. And the rest of the revenues is coming from the confluence of the US-centered business, actually. It's being driven from exports. Because, we are at the intersection of the diversification away from China, being the leader in resilient flooring over 30 years, having the scale capacity and ability to produce the high-end floorings needed for the US marketplace, having distribution in place, and actually being able to meet the moment and meet the demand. So, from the Indian perspective, we've got the buses and the railways. From the export perspective, we've got the US business. And, we made a big foray into the residential business with the luxury vinyls, which is factored at close to $10 billion, actually, as we speak.
Okay, all right. Absolutely. Rishabh, hi, good morning. Good to see you on Bazaar, I think, for the first time. Prashant, this side. So margins, I'm just looking at it, and profitability as a result of the net level went up. I mean, it's a big step-up jump, 24 over 23. Can you briefly tell us what led to that? Because top line is kind of steady, right? 1,087 crores compared to about 973 in FY23. But margins and bottom line, big jump. So that is one. Second, railways you've been supplying for, I mean, it's not a business you've started now. I was looking at your investor presentation. You've been sort of long-time suppliers. So how has that changed? Is the volume has gone up quite a bit, or your profitability there has gone up because of some of these newer trains, etc. So just give us some sense, Rishabh, there.
Great question. So on the railway side, the railways has been focused on increasing the customer experience and improving the customer experience in a meaningful way. So the railways has transformed its mindset more from performance-driven materials and trying to get to international standards. As in previous years, cost was a bigger driver necessarily than being able to hit the really the benefit of the consumer experience. And this improvement of standards and this improvement of service leads to more technocentric and more performance-driven kind of products. And that's where, the margin, positive margin impact with the railway business has transformed in the last few years vis-a-vis the business that we were doing before. Now, in terms of the overall margin expansion, there's been a transformation in the mindset to do value-added items, right? So in the flooring scale, we are really focusing where the aesthetic performance, the performance on durability, on 100% waterproof, those kind of things. So even when we talk about the US sales and US market, what we are really talking about is developing product which is intended for the right kind of use. So, we are driving margins and driving the right product through the system. So to your point, the margins, the revenue has grown up, ticked up by about 11-12%, but the real impact has been on the EBITDA and on the margins. And that's been the...
Just to complete that point, Rishabh, so whatever unit you track for railways, what is the improvement in sort of profitability at a unit level for you, now compared to earlier years, say 5 years ago? That is one. And second, can you guide the market to for FY25? You did 161 crores in profits. What could that number look like in 25?
So in 25, we are looking to, increase revenue. So we expect EBITDA percentages to remain consistent. So the 25% baseline EBITDA that we achieved for FY24 was the consequence of this transformation that I talked about. Now we intend to grow and, maybe a top line of around 20-30% in FY25 and maintaining the margins. So we expect this kind of growth to continue. And, in terms of the railway metrics, the way we track the railway performance is more on a per square meter basis. So it's improved by about, 25-30% vis-a-vis what it is in previous years. But it's not only a consequence of margin, the volumes have also gone up. So there is this big push in infrastructure investment in the country. So the railways, again, is a consequence of that. So, it's been margin and volume. So it's a combination of two. So I would be, misstepped if I spoke only in terms of margin. It's both effects.
All right, Rishabh, very quickly then, before we let you go, at peak levels, what kind of revenues can you do? You did around 1,100 crores. With the current investments, what can you do at peak levels?
We can get up to about 2,500 crores with the current investment.
Okay. All right. And do you think by FY27, you get to around that 2,400, 2,500 crores with margins in mid-20s? I ask you this because there's only one brokerage that's really covering all this, Ventura, and they believe so. You think going by the run rate, FY27, you'll be looking at 2,400, 2,500 crores, margins at 23%?
Absolutely. We have a really large opportunity in front of us. We've got a good order book and we are in the right. So it's very achievable.
All right. Working capital days are still relatively high, though, at around 180 days. Do you expect that to come down a little bit? And since you're debt-free, will you look at tapping the markets, raising some equity, working capital, as well as raising any money? Go ahead.
So right now, we are pretty well capitalized. The working capital is used really to drive a lot of the US business because when we go down to the consumer level in the US, the cycle is pretty long, But in terms of the raising money and debt and things like that, as the business continues to grow and as we continue to get more business coming through the system, we will look into that in a future date. But as on date today, we are pretty.
Could you just leave us with one number, which is the current order book, and what is the order visibility that you have over the next 12 to 18 months?
Yeah, so we have the visibility for up to 2 quarters worth of business. So we have visibility of about, around 500 crores already in terms of the order book. And, we keep replenishing this order book quarter on quarter. Now, we are pretty optimistic through the summer months right now and through the next 6 months. It's a pretty nice period for the business. So, we, remain in a pretty good place.
Okay, all the best. Thanks a lot for joining in. The street is definitely very excited with the way the business is growing and has rewarded the stock quite handsomely, and shareholders as well. Thanks a lot for joining in. That's a stock that has doubled in the last 1 year. Devin Choksi is still with us, so let's get his view in. Devin, vinyl flooring, right? I mean, it's picking up quite a bit, especially for Indian Railways, for EV buses, and the street is confident of that. But at this price, do you think a lot of the good news is in, or do you think there's more to go?
So from the perspective of looking at the growth, I think there is still a long way to go. I think because the first time India is experiencing the alternate space floorings, I think, in a big way in different applications. So to a greater extent, I think we believe that this is one space. Plus, innovation is happening big time in this particular space with the new product quality coming up. So from that perspective, I believe that the growth prospects are very bright. At the same time, I think one area where probably the higher amount of prospects also lies is in the area of exports. And particularly, I think with the BIS in, I believe that the export is going to be, more rewarding proposition even for the domestic players, who are basically going to take the advantage out of it. So we believe that there is a good growth prospects going ahead. maybe some amount of play would be on the margin side. But I believe that I think as long as the petrochemical prices are remaining steady, probably I think the margins are not going to be affecting these companies in a weak, in an adverse way. And as I heard the management also saying, this is the same kind of a hearing, the same kind of I think sentiment being echoed by most of the other management was supplying to railways. The government is now spending money for quality, and they are basically giving margins to the players as against earlier period. So that is once again, I think, giving some amount of clarity of higher growth and higher margin continuing in the business. So we remain positive on this space per se.
All right. If you take a 25% growth on what they did and maintain sort of net margins at similar levels, they do about 200 crores in FY25, 8,000 crore market cap. So this year, I mean, they basically are trading at about 40 times earnings. The issue is just not the growth or the visibility, etc. Valuations. I mean, nothing comes, of course, cheap. We'll take a break here. We'll talk about technicals. Kush Bora and Sudarshan Sukhani will be with us with their trading ideas for today and beyond. Stay with us.
The CV cycle bottom out at these flattish volumes.
The car. We are in fact here at Yerwara police station. There are 3 FIRs right now which have been registered in the Pune Porsche drunk driving case. One of the FIR is by the driver's family who would allege that he was kept illegally confined inside the staff quarters at the family household. He was in fact, he had also mentioned that he was kidnapped and was not allowed to speak to his family for a very long time. Now this car is the car which was used to pick up the driver. Cops have now taken this vehicle into their custody. In fact, my Vijay Vasant will show you visuals of how there is a notice that has been put in the car as well. In this very car was where the driver was taken, following which he was kept illegally confined. Now cops have taken this very vehicle. They've seized it and kept it in the custody at Yerwara police station. Along with that, the Porsche car also in this case has been kept.
Okay, welcome back. The pre-open session is 7 minutes away, and we'll get to that in just a bit. 100 points lower on the GIFT Nifty. That's the opening indication. Kush Bora and Sudarshan Sukhani are with us with what they make of things. Gentlemen, good morning. Good to have both of you here. Sudarshan, let's start with you. What's the setup like? Near term, how would you trade it, and in what way?
Yeah, good morning. As you said, the chances are the Nifty may open a good 100 points lower. I think that would be a buying opportunity. This market is simply getting a little nervous ahead of the exit polls and the real results and whatever else. So this is just minor nervousness. Maybe large traders have already built their positions and they are not interested in adding anymore. I can't answer why this is so, but this nervousness has been found to be there even in earlier election results. Just prior to the election results, irrespective of the opinion polls, the market gets nervous. This is a buying opportunity. I'm repeating that. So I can't give you a number because it's difficult to say where the markets will land up, but somewhere around 22,700, look to start building long positions.
Hey, that's some sane advice, saying that the market generally gets nervous ahead of election results. So don't be too perturbed by that and continue to stay long. Got it. Kush Bora is also with us. Kush, would you agree that this is a buy on dips market? And is that the best way to look at it? That, if we do get some nervousness, then one should still maintain their long positions?
Hi, Sonia. Very good morning. Well, I agree almost entirely to that, because see, what's happening is before the big event, the markets are, or the traders rather, are going light on positions, and that is absolutely understandable. So what's happening is that this is a healthy sign. You wouldn't want to take a very heavy position, moving into the big result. What this does is that it also leaves a bigger room for an up move on the day of the result. So from my perspective, this is entirely a very healthy move. Now, while in all honesty, we do believe that the markets could make a near-term top following the election result, or maybe a couple of days after. Very difficult to time, but perhaps some a scenario like that. But up until the election result, running into it, the only position that you can take right now is long. And till the time 22,700 is held, I think this is still a buy on dips market. The confidence also comes from the fact that the bank Nifty is also starting to participate. Yesterday was just a mere profit booking. So even here till 48,800 is held. Bank Nifty is a long trade.
Okay, all right. Got that view on the indices then. Kush, you go ahead and tell us what are the stocks you're tracking?
Well, I think the infra theme will continue and I know has been rewarding for a while. So PFC is on the radar. From a near-term perspective, we're looking at a 530 and a 555 kind of a target. 500 is a good support zone, so should act as a stop loss. Torrent Power, this stock is really wanting to move higher for the past 5 sessions. It's been knocking on the doors of that 1460 level. So the more you attempt, the more likely you are to break that level. So 1465 is the target, the first target, 1495 being the second target, and the stop loss comes in at 1400.
So Darshan, what about you? What would your ideas be, both on the buy and the sell side?
Yeah, well, as I explained, the focus should be on the Nifty today. But for individual stocks, I have 2 intraday shorts to start with. One is Lupin, which is in some kind of a minor downtrend. Sell short intraday with a stop above 1715. And BHEL, which has seen a handsome rally and could consolidate. It's an intraday short with a stop above 319. There are 2 buying opportunities. The first is HDFC Life. It's also a positional trade. Consider buying it with a stop under 546. And IGL, buy with a stop under 437.
Okay, thanks for that. Gentlemen, we'll do one thing. We'll take a quick break. When we come back, we'll have the pre-opening rates. Also, Pradeep Kheruka, the chairman at Borosil Renewables, will be joining in to discuss their Q4 performance. Stay tuned.
Few cars away from this vehicle. Yesterday at this very spot was where technical analysis of the car had taken place. This is a part of the investigation, so this car would also be used for further investigation in the case. So this is the progress of the investigation so far at Yerwara police station. But parallelly, when you speak of the blood samples, crime branch is looking at that case. Details in this very case emerge, show how the sequence of event that took place on Sunday. At around 11 a.m. on Sunday was where the blood samples had reached Sassoon Hospital. Both of the accused in this case were using iPhone. So they had made a WhatsApp call so that the call cannot be traced. So that WhatsApp call is where the conversation took place. It was Dr. Ajay Tavre, whom the father of the accused had spoken to, asking for the blood samples to be changed. On the recommendation of Dr. Tavre was where the CMO, Dr. Halnoor, ensured that the blood samples are changed. There's a middleman that could possibly be involved. Cops are trying to investigate and find out who that middleman actually is.
Domestic economy seems to be having more momentum, higher growth, better macro stability than the global economy. And 2 is that even from a valuation perspective, some of these themes we think are, given the kind of growth that may happen, given the kind of multi-year cycle they are in, we think the valuations are pretty reasonable. But once you recognize the risk profile, I think it's such a big event.
Welcome back. This is Open Exchange live from the CNBC-TV18 Motilal Oswal studio. Let's get straight to some F&O action now. We have Chandan Taparia joining in. He's a derivative and technical analyst at Motilal Oswal Financial Services. Chandan, hi, good morning. This has been a volatile market, but how does one approach it today? And what are the stocks that you're looking at?
Good morning, Sonia. Thanks for having me. So we have seen some volatile swings in the last two trading sessions. Nifty 2 days back made high at 2310, but on last trading session it formed a bearish candle, corrected by around 100 points from its higher levels. So major trend is intact, but some sort of volatile swings cannot be ruled out for next couple of days. India VIX is at 24 levels. In the entire month, we have seen a jump of more than 100%. VIX rallied from 10-11 to 24. So rising volatility is the reason of some sort of volatile swings in the market. And as per the standard deviation model, we believe that 350 points range could be now new normal for next couple of days. So one need to fasten the seat belt to deal the volatility. If I look at the entire rollover setup, we are in the expiry week. Tomorrow is the week monthly expiry for Nifty, and month-on-month basis or expiry on expiry basis, Nifty is just up by around 1%. So only the decline and the recovery was happened during the month, and volume weighted average for the week or month is at 22,500. So we are slightly higher than the volume weighted average. So because of that, buy on decline could be there. Broader range for the index based on all the data fact is likely to be in between 22,500 to 23,100 levels. Now looking at the Bank Nifty index, we have Bank Nifty monthly expiry today, and month-on-month basis is up by around 1.3%. Volume weighted average for the month is 48,500, and we are slightly higher than the volume weighted average. So 48,800 and 48,500 could act as immediate support, and because of that, it may see positive to range-bound bias. So in both the indices, we are expecting some sort of volatile move in a broader range, but major bias could remain positive as major trend of the index is bullish as of now. Now looking at the stock wise, first is buy on Exide Industry. This stock has given a breakout from its pole and flag pattern on the weekly chart, which has bullish implication. Overall, we have seen built up of long position and longs are rolling from the current month to the next month. It has given a consolidation breakout of last 28 trading session, and because of that, we are expecting a fresh rally, which can take it towards 535. One can buy Exide Industry with a stop loss of 495. Second trading idea, that is buy on Divis Lab. We have positive on the selective pharma name, including Glenmark, Divis, and Divis has been making high tops, high bottom on the daily and the weekly scale, comparatively holding well. So we believe that this stock can see some outperformance. One can buy with support of 4,300, and we are expecting a move towards 45.50 in the Divis Lab. Last trading idea, that is sell on Ramco Cement. We believe that this stock can correct by 5 to 7% from current level. Major trend is negative. It has been making lower top, lower bottom, finding hurdle at key moving averages. So clearly the negative structure is visible on the data and the chart study. So one can sell Ramco Cement with a stop loss of 780, and stock can drip down towards 730, 720 zone.
Chandan, pretty comprehensive, and those three trading ideas as well. We'll come back to you. Thank you very much for joining us with some of that trading strategy from an F&O perspective. Pre-open is on your screen now. The Nifty is down 100 points. The Sensex is, just finding its feet, but it is down. It is red. So it's like continuation of where we left off in trade yesterday. One more interesting company is, of course, Borosil Renewables. Subdued set of numbers for the fourth quarter, and actually FY24 has been pretty tough, right? We'll put the numbers up on the screen for you, but let's welcome in the management. We have Mr. Pradeep Kheruka, chairman of the company, with us. Mr. Kheruka, good morning. It's always great to speak with you. Prashant this side. You mentioned in your presentation as well that the dumping from China after the removal of the duty in August of 22 essentially is completely turned things in a negative way for your business. And it's not just your business, but others in the sector as well. And as a result, of course, FY24 has been a pretty tough one. How has 25 started? And what can we expect, sir? On a standalone basis, for example, margins have fallen to about 12% compared to some 26% the year before. What are expectations for 25?
Well, there's a saying in English that says one man's meat is another man's poison. So the problems with shipping in the Red Sea have caused an increase in freight rates, and freight rates from China to India have risen from some $700 a container to now $3,500 a container, causing the landed price to rise. And what sometimes the basic customs duty cannot achieve, or non-implementation does not achieve, is achieved by a change in the logistical cost. So I would say that the year has started with a situation where the price of imported solar glass is higher than what it was, say, during most of last year. And that means that we get a better price realization. So it started off well. I would say that in Europe as well, which is where we have some 350 tons per day, the government is finally getting into its act together, and they are yesterday passed some law that says that they're going to action the provision of solar power from domestically produced modules and domestically produced components. So with that coming up, we would be in pole position to supply that demand. We've had a rough time in Europe as well. And fortunately, the good thing both in Europe and in India is that we have a first-class manufacturing setup. We have a first-class team. So if the demand is there, we are ready and waiting for it.
Could you put numbers to it, Mr. Kheruka? What would this mean? India's looking better. That's interesting, the tariff bit that you spoke about. So that's causing the landed price of imported solar glass to be much higher. So which means you're in a better competitive position. Europe is looking. So what's the number? Give us some numbers, sir, for 25.
That's one thing I never do. I never give any kind of number which is predictive. All I can say is that there are two things. One is that I've been meeting people in government across different ministries and so on. I have been given assurances that the basic customs duty on glass, which is about 15%, which is not small, was set to be, there's an exemption circular, which is exempting imports from duty. And that exemption was going to end on the 31st of March. But that circular has hundreds of items in it. And they decided to postpone the whole thing till the 30th of September. And they wanted the new government to decide what to postpone, what exemptions to remove, and what exemptions to retain. So I've been told that the exemption on imports of basic customs duty, so far as solar glass is concerned, is definitely going to be removed. We have to keep in mind that in the year 2022, we were the only company actually manufacturing and supplying solar glass in India. Today, there are 5. So with from about 180 tons a day in India in 2019, we're up to 2,300 tons a day with 5 companies. So the 5-year anti-dumping duty that had been imposed in 2017 caused an increase in production by nearly 13, 14 times. That is the power of the tariff for you. And the strange thing is that imported cells are 25% duty, imported modules are 40% duty. For some reason, glass got left out. But anyway, that's going to be corrected. So we are looking with confidence to the future.
All right. Hi, Mr. Kheruka. So you're sounding optimistic about the future, which is always a good thing. And you're saying the policy measures as well could support you. So your shareholders will take heart from that fact. You had commissioned your SG3. So as of now, the India utilization levels are at optimum levels?
We had commissioned a furnace, which was 500 tons a day. So we are drawing 500 tons a day from that already. But being Indian, we are not happy unless we're drawing 550 tons or 575 tons from that furnace. So all of that is in progress. So I would say we hit rated capacity fairly early. And we're producing and selling everything that we make. On the 31st of March, you could play football in our warehouse.
All right. I like the way you put that, Mr. Kheruka. The reason I asked you is because what about SG4 then? You had plans earlier. It was postponed, I think, a little bit. So two-part question. One is you have taken an approval to raise some money, which could possibly be by the rights issue route. So tell us, what will you use this money for? Will it be used for additional capex, or will you be looking at paring down some debt? Give us some clarity.
We're likely to pare down debt. We have a total of about 500 and something crores. We'd like to see debt at about 200. So, that would be very comfortable for us. And that would give us, frankly, we are all ready for another 1,000 tons or another 1,200 tons. Our batch house is good for 2,000 tons. We're only drawing 1,000 from it. Our electrical installation is 45 megawatts, which is good for another 1,200 tons. So these are two important items of capex, which we have already been able to sort of spend, and it's there in reserve. So the next furnace was not going to have as high a capex as a new furnace that somebody else would set up.
Got it. So you're looking to, sure. So sorry, Mr. Kheruka, this is Sonia. We have just a couple of minutes left before the market opens. I wanted to squeeze in some more questions. What is the market share currently? I think you were at 20% in 2023, but where are we at right now?
The market demand has been rising. The production of solar modules has been rising. It's very volatile. The only thing I can say is that about half the production of other manufacturers is lying unsold, or half the capacity only is being utilized. We are able to sell everything, but well, we are, you know.
I just wanted that one number in terms of market share, sir.
I would say about maybe 750 tons. I haven't done the homework. The market share for Indian glass is about 35%. So we're still importing 65, for all Indian glass. So we're selling everything, and then the balance is coming from the other manufacturers. But with the new schemes, you know, the ALMM that has come in from the 1st of April has given a very great fillip to domestic manufacturing. And the other thing is the Pradhan Mantri Yojana for the rooftop. So 1 crore households are going to get solar modules, all made in India. So the demand in India for glass is going to really rise exponentially. And the question is at what price are you going to sell? And hopefully the price would see better numbers, you know, going forward, more or less immediately, because the land price has gone up immediately.
Got it, Mr. Kheruka. You know, everyone is waiting for the election result. You are too, but you know, there's of course that tariff bit which you said, officials indicating there is a new government which perhaps will take a call and may come through. You remain confident that something
the indication, sir, is that so far as solar glass is concerned, the exemption is going to go. That's what the indication is. So they'll take a call on the hundreds of other items, but for glass, I think they've taken a call. But we have to see.
Wait. All right, great conversation, and thank you very much for your time as always here on CNBC TV18. Well, that's Borosil Renewables, stocks at about 480. But it's election time, election results times. Everyone has got a view. CLSA this morning has come out with a note, and they are talking about what's the best kind of way to get exposure to what the market is betting on, which is continuity. Hormuz has got that up for you. Hormuz, morning.
Morning, Prashant. And CLSA has identified 54 stocks which it classifies as quote-unquote Modi stocks, which are projected to be direct beneficiaries of the government's policies. And they are expecting that this outperformance that 90% of these Modi stocks have had over the last 6 months will continue if the current government is re-elected back to power. Now, some of the Modi stocks that they have identified include L&T. Most of them are PSUs, NTPC, NHPC, PFC, ONGC, and the telecom stocks as well, Bharti Airtel, Indus Towers, and of course Reliance Industries. And the bets beyond the Modi stocks, they include the likes of HDFC Bank, Axis, ICICI, Bajaj Finance, and of course Zomato and Avenue Supermarts as well. Now what they say is, however, on the flip side, they are saying that this narrow theme-based rally which the market has seen over the last 6 months in anticipation of these election results may end sometime in June or July, and as a result of which banks are the best risk-reward play in the second half of FY24. And what they also say is that most of these positives may have already been baked into some of these names, which may result in profit booking in some of the less patient investors of these Modi stocks. And they allude to the last two results, election results, where PSU stopped out a few weeks after. So a mixed bag coming in from CLSA, but 54 stocks identified. Back to you.
Okay, thanks a lot for that. Before the market opens, let's put the focus on Paytm, as sources say that Vijay Shekhar Sharma has reached out to potential investors to buy a stake in OCL. Ritu is here with more details on that. Ritu.
Well, Sonia, first, that, Vijay Shekhar Sharma is in exploratory talks with several potential investors sounding them out to buy a stake in 197 Communications, which is the parent company of Paytm. And Adani Group, we understand, is one of the potential suitors that Vijay Shekhar Sharma has directly engaged with. There is no clarity yet on what the status of the discussion is or any possible closure of the deal just yet. If you recall what the shareholding in Paytm is, in 197, that is Vijay Shekhar Sharma, the promoter, he directly holds about 9.1% stake, another 10.28% through Resilient Asset Management. So that's a 19% plus stake. And SAF Partners, another 15.4%, with Chinese and Fin close to 10%. So, which of the investors may be selling, that is unclear. And there's no direct talks of any stake sale in the bank yet. That is also something that we picked up.
All right, fair enough, Ritu. Thanks very much for that. Market opening up on your screen. The indices are going to come up. The mid-cap index is down about 0.4. Sensex is down 0.3. Nifty is down about 75 points. So it's a lower start. And the bank Nifty is down about 1/3%. So uniform, near 0.5% cut coming through across at least the frontline large cap indices. Advanced decline on the BSE is also up on your screen, and about 100 stocks separate. Losers from gainers, more down than up. But this is just the start this morning. But all about stocks, Sonia has got that. Sonia.
Well, thanks a lot for that. As you rightly pointed out, right, the main focus area really is the Nifty, which is under a bit of pressure right now. So down almost about 90 odd points. We'll keep our focus there squarely. But apart from that, Hindalco is the one I'm looking at this morning. It's looking to raise $1 billion from the Novelis listing on the New York Stock Exchange. So Hindalco is up almost 0.5% as we speak. It has seen a big rally in the last 1.5 months. So just keep that on your radar. PNB Housing, there are some block deals likely today of 2.7% equity. So PNB Housing is the one that's taking a deep cut this morning, down almost about 8%. Keep watching that one. IRCTC mixed bag this time around. Although the revenues are higher, it is the margins which are down 220 basis points. And this operational weakness is not taken well by the street. The stock is down almost 3.5%. To be fair, IRCTC has had a pretty decent run. By the way, that block deal has taken place on PNB Housing Finance, where 2.7% equity has changed hands. So do, get that stock back up on your radar. Apart from that, you have Aster DM, where it's actually looking good for Aster DM this time. The margins have come in at 16.5% versus 15% earlier. EBITDA is up almost about 29%, but the stock is coming in for some profit taking this morning. MedPlus Health is the other one I'm looking at. The margins have improved. The revenue has risen almost 20%. The stock is bucking the trend, market trend, and outperforming the market. So just keep that on your radar as well. And Prestige Estates is the other one. The EBITDA growth has been pretty solid. In any case, real estate stocks have been doing well. Margins have picked up to 38% versus 26%. Just a couple of more stocks. Paytm, let's see how that one is reacting to the news flow. So coming up on your screen in a bit, Paytm, that one is up almost about 5% on the back of the news flow that you just heard from Ritu. So keep an eye out on Paytm. And Responsive Industries, a company that we just spoke to a while back, very bullish commentary, strong numbers coming in from Responsive Industries. It manufactures, vinyl flooring for electric vehicle buses, for railways, etc. So the street likes what they heard from the management. The stock is up 3% But otherwise, for the market, yes, it's down but not out. As Sudarshan Sukhani was telling us a while back, generally ahead of election results or the exit polls, the market tends to get a bit volatile and a bit jittery. That's pretty much what you're seeing on the screen right now, but it's all about individual stocks. Back to you.
All right, Sonia, thanks a lot for that. Well, a few stocks in the broader markets are getting pummeled, actually. Engineers India, the EBITDA number came in down by close to around 50%. The margins came in at sub 10%. That compares with around 19%. So that one's getting a hard smack today. You have GNFC. Well, the EBITDA number was down by 60%. Margins came in at around 7 versus 16%. So that's the other big loser today. Vocart is the other stock. Let's see what's the reaction out there. They reported an EBITDA loss in comparison to an EBITDA profit. The revenues are up by close to 3%. For the time being, that stock's holding more or less steady. Another big gainer in the last few years has been Linde. The stock is up 5-6 times, I think, in the last few years. Well, the EBITDA number was down by close to around 4%. That one normally gets bought on dips for the time being as well. That's U-turn from the day's low. It's well in the green. MTAR Tech, well, you had the EBITDA number that was down by close to around 60% approximately. So that stock comes up for you in the screen. You had the margins that came in at around 13%. That compares with around 25%. The street doesn't like it one bit. The stock is down in today's session. Capacite Infra, well, you had a reasonably good set of numbers. The stock, remember, had run up in the last few days, but that one's holding well in the green, I think. So it's up close to around 2% in otherwise wobbly market. And CMAC is another stock that's holding well in the green on the back of good numbers that we saw coming in there. A bit of a turnaround quarter for that company as well. Add to the list NBCC. that stock, in fact, is holding in the green with a gain of around 2%. Margins coming in at around 6%, compared to 3.5%. The street loves that, up 3% as we speak. Prashant.
All right. Sorry, beg your pardon. Paytm is up 5% and it's got volumes on it. So 360 on Paytm. Started tentative and then it's, of course, moved up from that point on. Ritu was just telling us about that story. We'll revisit that a little later. You got 3M India, which is up 4%, 4.5%. It's the number 2 largest volume traded name, 3M India. Hardly ever figures on the list with these kind of volumes, but it is this morning. Brigade is up 5.5%, so it's a big one, 1260. Again, huge volumes on Brigade. I think we did mention Campus after number 6% on Campus, so looking good. Capacite Infra, that's up 1.6%. Started to sort of perform once again over the last couple of days. Gensol Engineering is up 2.6%, back above the 4 digits now, 1,035 on Gensol. Torrent Power is up about 2%. And I think you've got GE Shipping, which starts about 3% or so in the green. Sumitomo Chemicals, big day, sort of decent move yesterday. It came off the day's highest point. Actually, in the last few sessions, from $400, stocks moved up to about $450 in, I think, about, 10 odd trading sessions or so. So it's been a pretty good ride for Sumitomo fairly recently. PNB Housing, of course, is the top volume-led cut. It's down 7.5%. So 729 on PNB Housing. And Cochin Shipyard is down 3. IRCTC we mentioned. Inox Wind, after yesterday's large cut, is down another 7%. Stocks at about 137. Inox Wind is got very, very large volumes once again. IRDA, EIL, Nigel mentioned. Loda, that is Macrotech, is down about 3.5%. Aster DM numbers, Ekta mentioned that, 3% down. Nazara is down about 3% as well. Nazara, again, last 2 days has had a decent run-up. So just about under a 100-point cut is what you have, 22,791. So we'll sort of get back with more names and market trends, etc. But for now, let's welcome in Mihir Vora, Chief Investment Officer at Trust Mutual Fund. And he's joining us in our studios. Always good to see that. Mihir, great to have you with us here. Good morning. Thanks very much for your time. CLSA this morning is talking about 54 Modi stocks, 54 companies which are perceived as direct beneficiaries of PM Modi's policies, half of which are PSUs. I'm sure you've seen that report. Lots of those names: L&T, NTPC, NHPC, PFC, ONGC, etc., etc. What do you make of something like this? It's, of course, a lot of interest about what can do well if the market's base case does come true on Tuesday. Your thoughts, Samir?
Certainly. The markets are hoping and looking forward to continuation of the existing policies, and the biggest thrust of the government has been to try to create as much as physical assets as possible, especially in the manufacturing space, but that needs to be supported by infrastructure and real estate, etc. So I think a lot of the PSUs in the space, utilities, the defense manufacturing, the railway-oriented stocks, some of the lenders to the infra, all of these fall into that broad, physical asset creation theme. So to that extent, I would not be surprised that if there is a, continuity of the regime and the expectation and the market's, outlook, which is more of the same, and maybe acceleration of the investments theme, then these are the kind of names which would, do well. I would not restrict it to only PSUs. Of course, some of the PSUs are relatively cheaper, so there may be scope for some more re-rating. But in general, I think the fact that the policies should continue and all the thrust on manufacturing and infrastructure should continue is something that will be welcomed by the market once this question mark or uncertainty is past us.
Okay, well, for now, the market is down about 0.5%, but there are several stocks which are bucking the trend. So don't lose sight of that, especially the real estate names. Just look at that. Brigade Enterprises is now up almost 8%. Of course, there's been, a lot of positive news flow on the real estate space as well. Then something in the capital goods space, Thermax is up almost about 3%. Torrent Power is up, Godavari Power. A lot of these companies, right, looking pretty good this morning. So, yes, there are stocks that the street still likes despite all the volatility. Mir, thanks for joining in on the show. I wanted your thoughts on once the election, verdict is out of the way and the market moves on, right? In all likelihood, of course, it will move on the upside. If yes, where do your preferences lie now? What are the pockets you think have still value and growth?
Basically, as we've discussed so many times that the local economy should continue to grow much better than the rest of the world. While probably the US is doing much better than expected, we still will be the fastest growing economy in the world, the large economy in the world. So I think locally oriented stocks, and which includes financials, because ultimately if the GDP is to grow faster, financials have to do well. And to that extent, I think financials, having underperformed for almost a year now, should offer some good pocket of value. So that's one big area that I can think of. And even some of the construction companies, engineering companies, the cap good companies have become a bit expensive, but some of the construction linked EPC companies still offer good value. And of course, when you talk about the domestic theme, you also talk about discretionary, which is just about picking up. So the auto space, the discretionary space are spaces where we can see some more re-rating happening.
All right, Mir, what about the premiumization theme? Indians want to consume differently. Some people say that there's a slowdown. Some say, well, the way they're consuming has changed. Everyone wants a better car. Everyone wants to drink better alcohol. Maybe if you were to talk about that, wear better clothes, better shoes. So how do you play that theme?
Absolutely. So that's the second thing that we are very bullish on, apart from physical asset creation, which is exactly what you said, premiumization. And that would include, savings being funneled into the capital markets. So then we are also talking about pockets like exchanges, like brokerages, like, wealth management outfits, insurance companies.
Just to talk about that, the equity play, these brokerages, CDSL and the likes as well. How much of the good news is in the price out there? Some of these, BSE, case in point, 600-700 rupees just a short while back. It's at 2,500 rupees plus.
Absolutely. So, one can obviously debate the valuations, but the question then in that case is, what is the long-term trajectory?
Right.
Are we looking at a 5-year, 10-year kind of a growth path for these segments? Because if that's the case, then one can really take a longer-term view and, play in these themes.
Okay. So some of these themes, as Nigel was talking about, people want better cars, bigger houses, perhaps more expensive houses. Particularly in real estate, right? If you can't afford an expensive house, does it make sense?
1 minute. They don't want expensive houses. They want bigger houses,
yeah.
but cheaper. Who wants expensive houses?
That's an ideal scenario where you get a bigger house which is cheaper, but that doesn't work in Bombay. But yeah, you want to tell us, if I can't afford a house in Bombay, at least I can buy the shares, right?
Certainly.
So do you think that it still makes sense to buy real estate stocks?
Certainly, because, we are coming off the back of almost 8 years of, stagnation in residential part. Commercial has been relatively better, but the residential, did, stagnate for almost 7-8 years, beginning 2013-14. So to that extent, we've just seen maybe a couple of years of uptick. And while I'm not betting on price hikes anymore in terms of, as you said, the cheaper houses or expensive houses, but certainly volumes should pick up. And obviously, we should not bet on the 20 crore, 40 crore kind of ticket sizes, but the 1 to 5 crore range is certainly that some place that we can look at.
You guys were talking about the capital market plays, etc. We just spoke with Ramdev Agarwal recently, and he was also others have also made the point that this explosion of F&O on the F&O side that we've seen as compared to cash market turnover. That the difference, that ratio is some of the highest in the world, right?
Yes.
And the proportion is just very, very large as compared to the underlying market. And can this continue, or will once the new government comes in over a period of time? They'll give this a look, make it a little more sort of tougher to kind of participate on that side. We don't know. How but is that something which you think is a risk for intermediaries, financial intermediaries, especially I think exchanges, brokers, more than anything else?
Certainly, my guess is that they should not really tweak around with capital gains.
Not capital gains.
Yeah,
not capital
but
gains. To be
maybe
clear.
make it a little more expensive to trade. So you could see some kind of fees being levied, etc. Because even the finance minister has expressed, and we have seen many voices.
Yeah, she was in Bombay. She spoke
exactly.
About that, yes.
Yeah. So to that extent, there might be some steps where at least it becomes a little more friction. There's a little more friction while trading. Right now, it's just too cheap.
Anything else, Mir? You want to sort of leave us with any other sort of bets or that you're taking at this point?
No, I think we are just about at the cusp of consumption having being revived. So while the government capex spending has done very well over the last 3 years, and it saw us through the COVID downturn, we are basically now betting that the other two levers, which is private sector investments and consumption, should pick up. So while the rural consumption has not really picked up, that's one bet one needs to take, because then we'll have a holistic recovery instead of a lopsided recovery, which is more towards only premium consumption.
And so QSR kind of names, from a listed perspective? Or is it staples?
QSR, I would still consider a little more high end. I'm talking about the lower end of the real consumption, which has not really picked up. If that picks up, then we'll have a really good overall recovery.
And that will happen, you think there'll be some sort of, I don't know, hoping for too much, maybe personal tax cuts or something? I mean, to boost put more money in the hands of consumer?
So the kind of consumption that we are talking about are really low end. So probably you can see some more targeted
transfers.
Transfers, exactly.
Okay. Any of these, spaces which have seen a huge pickup lately, whether it's defense, Indian Railways, electric vehicles. We were just speaking to the management of Responsive Industries. They make, vinyl floorings for railways, and they're saying that potential is huge. Demand is picking up in a big way. So any of these spaces that you think deserve merit even now, despite the run-up?
Certainly, because these are all trends and themes which are going to last for 5-10 years.
Okay.
And these have the full backing of the government.
But they've rallied a lot also.
See, the markets always look forward, and what matters is what is the TAM, the total addressable market. Okay. In some of these cases, we are really just starting from scratch, So to that extent, the growth path and the runway can be much longer in these cases.
Okay, all right. We'll leave it there. Actually, may you stay with us. We want to just go to Ritu if she's with us, and maybe. Okay, I think Ritu will be with us in just a bit, and we want to just talk about Paytm. By the way, do you have a view, Mayor? Paytm?
I mean, obviously, I can't comment on individual stocks.
Okay.
But all I can say is that when I was here last month, doing our NFO, there were three themes. We already talked about two. One is premium consumption. Second is physical asset creation. Third is disruptive business models using technology. So there is a bunch of stocks, 5-7 stocks, large stocks which got listed in the last 2 years.
Right.
But I can see almost 20-30 more stocks which will get listed in the next 2 to 3 years.
Okay.
So that is one space where companies using technology to create new business model or disrupt existing models. That's going to be an exciting space for sure.
All right, Mihir, appreciate you joining in and giving us your view on all those sectors as well as themes. And by the way, congratulations. I believe it was your work anniversary, and this month is 30 years. So all the best.
Market, yes. Wow. Thank you so much.
And new challenges you've taken up. So we wish you well on that front as well, Mihir. Well, time to move to our next management then, I think. Or do we have Ritu with us to update us on the latest in terms of what's going on with Paytm. Ritu, please fill us in.
Well, to begin with, Vijay Shekhar Sharma has reached out to several potential investors to explore a stake sale in 197 Communications, which is the parent entity of Paytm. And one of those potential investors is the Adani Group. Now, we've been given to understand from our sources that discussions have been ongoing with Adani Group, although there is no clarity on any potential closure of this deal just yet. That said, this is a stake sale in 197 Communications, the parent entity, and not the payment bank, as was also being speculated. If you keep in mind, Vijay Shekhar Sharma holds about 19% plus stake in 197 Communications, a little over 9% directly, and the rest through Resilient Asset Management. And then there have been, Chinese investors like Anfin Netherlands who hold close to 10% and have been bringing down their stake over a period of time. So it is unclear which of the investors, may sell stake if the deal does materialize. But as we understand, it is nowhere close to being done just yet. The other part is, as far as Paytm Payment Bank is concerned, there is no direct talks of any stake sale just yet. There's also been questions about what happens to the fate of the payment bank, and there we've been given to understand that some of the customer deposits are yet to move out from the accounts and the wallets, and once that process is fully completed, only then, will there be any next regulatory movement on the bank. Now, we've reached out to Paytm as well as Adani Group for a comment, about this potential stake sale, and we're still awaiting those. But meanwhile, Paytm, of course, has clarified to exchanges, saying, that it is not engaged in any discussions with respect to Vijay Shekhar Sharma's stake in 197 Communications.
Okay, all right, Ritu, thanks a lot for joining us and giving us that update on Paytm. We'll keep coming back to you as and well you get fresh updates on that front. But as promised, let's get straight to the management of Kabel. They reported actually a good quarter. Quarter 3 was a little bit subdued, but they've returned back to their growing ways in quarter 4 itself. To understand what's the outlook from here on, we're joined by Mr. Rajesh Jain, the CFO of the company. Hi, Mr. Jain, good morning, and thanks a lot for joining in. Well, in the past year, you've grown by close to around 18%, and you've outgrown most of your peers, barring Polycab. For this year, what kind of a growth are you penciling in? And could you tell us, in terms of a market share, I think it's around 7% as of now. How do you see that panning out as well going ahead? So growth, how much comes in from FMEG? And what about the market share?
Good morning. Thanks for inviting us for this call. See, if you see, we have always outperformed majority of the time to the industry, and like this year also, we in volume terms, our wire and cable business has grown around 20%, and even FMEG right now that has about 12% share in our revenue. And going forward, also we expect to grow in wire and cable in around 20% volume growth. About revenue, we cannot speak because it depends on the metal prices. But in volume, we are targeting and expecting to grow at 20%.
Okay, all right. You briefly mentioned about the FMEG business as well. So could you tell us what is the revenue number we should look at in the FMEG business? And you had briefly mentioned that when you hit 1,000 crores of FMEG volume revenues, then you break even. Is that in the coming year?
So yeah, we are expecting revenue growth and we will expect to grow and achieve the revenue growth of 1,000 crore in this FY 25. And about EBITDA, still we are not sure. We are expecting to achieve break even in next 4 or 5 quarters, and we will try our best to achieve that.
Okay, Mr. Jain, good morning and thanks for joining in. So you said 20% volume growth is your target for the next year. Can you tell me in terms of demand, right, for cables and wires particularly, what are you seeing now? Where is the demand coming in from? Is it from housing wires, industrial wires, power cables? Where is the maximum demand from?
So overall, Indian economy is doing good, and we are having good demand from domestic as well as export also. Export already contributing almost 30% in our revenue. So we have good demand from residential sector also, wire also, institutional or infrastructure sale. So this will be mix of domestic as well as export demand.
Mix of domestic and export demand. Okay. Can you tell me particularly for export, what is the kind of demand that you're seeing? What's the export contribution currently? And in the next 2 to 3 years, how much can that grow to?
So export was always focused since the beginning of our company, and still right now it is contributing almost 30% in wire and cable business, and going forward also it may go up to 35%, but it will remain in this range only from 25 to 35% export will be there. In export, we are getting very good demand for our cable also from Europe and other developed market, and it is doing very good.
So this 25 to 35% rise in exports, right? By when do you think you can hit that 35% revenue contribution? And would that mean higher margins for you?
Of course, see, whenever there will be higher volume growth, it will convert into margin. Since it is like 35%, we may achieve in the next 2-3 years.
All right, got that. Mr. Jain, good morning. Just a quick word on sort of underlying metal prices, right? Copper prices, which have been rising, and forecasts are that they'll continue to rise. I mean, how does that impact you? In what way?
So we have seen very much volatility in copper prices. It has gone up also, and recently in last 10 days it has come down also, and it is part of our business. So copper price will always be there, and till we can pass on the prices to our consumer, it is part of our business. So, but looking to the global demand, it seems copper price will remain in the higher end only in near future.
Does it hurt demand? I mean, postpone demand in any way, or no? I mean, if it rises to what some of the forecasts we are hearing, it's been more up than down. That you would agree. Yeah.
Yeah, but I don't think it will postpone demand, because this is wire and cable is requirement. It is not luxury product. So anyway, you have to consume.
Okay, all right. Mr. Jain, I wanted some more color on this exports business, which is around 26 to 30%, as you mentioned. Earlier, I think you all were exporting wires, and then you all were looking at pushing through some cables as well. So out of the total exports, what is the mix right now between wires and cables?
So around 70% is wire and 30% is cable.
And you all are looking to change that mix?
See, we are expanding our capacities in cable more, and we have very good demand. So it is expected that we will grow by higher rate in cable in compared to wire. But there is growth in both the sectors.
Got it. Got it. Since your FMEG business is going to gradually move towards a break-even point once you hit that 1,000 crore mark, and you're hopeful in the next 4 to 5 quarters, On a blended basis, what should margins look at? Volumes will be there. FMEG moves towards break-even. So with these levers in place, how much better can margins be in FY25 in comparison to FY24?
So we are expecting to improve our margins by 100 to 120 bips on a blended basis.
100 to 125. So it will be around 8, close to 8 to 8.25%?
Yeah, that is the range we are targeting to achieve.
All right, just one more question, sir. You have done close to around 6,600 crores. You're sounding very optimistic about business. With the current investments that you have made and the capex that you have already done, at peak levels, what can you do in revenues?
So, like capex plan, what we have planned in for FY24 and FY25, it is in line, and whatever volume growth we have planned for this year and next year, this will be we can achieve by the current capex. And now we will start working on the new capex also to meet the further demand of FY28-29 kind of business, because it requires almost 18 to 24 months to execute one capex cycle.
Okay, all right. We'll let you go on.
Just one point, Mr. Jain, on the office of the CEO. Is there? Will we hear the appointment of a new CEO soon? Is that, or will Mr. Kabra continue to hold that position?
So currently this is the situation, and since this is management call, so I cannot comment right now, because this will be decided very soon and will be informed to you.
Okay, and I'm not sure if you got a chance to speak with one after that announcement in April. Can you tell us what was the reason for the termination of the sort of CEO, the previous CEO?
No, this was management call, so I'm not part of that decision. So this.
Okay,
This,
all right.
This was some internal reorganization.
Okay, all right. We'll leave it there. Thank you very much for joining us, and we sort of hope to hear more from you if there is any development on that particular front. We'll take a quick commercial break here. We're back. The management of RITES, Rahul Mittal is CMD at RITES. He is joining us on the other side for more on their business. Stay with us. Later, we'll also be joined by the management of MedPlus Health Services. They also reported fourth quarter earnings, so conversation coming up there as well.
Not taking too much risk. So I think it's perfectly natural for like a fund manager, if they were to go closer to the index. I think that would be perfectly natural and a decent way to handle this event. And typically in a bull run, newer sectors get uncovered.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebration. Welcome back. This is Corporate Radar. Well, the market is not bad. Honestly, it's down about 75 points, but it's picked up a little bit from the lows. The mid-cap index is actually flat right now, so there is definitely some buying interest that's cropped up. Paytm is in upper circuit, up about 5%, and then you have others like Brigade Enterprises up 4%. Real estate in general is doing well. Campus Activewear is up 12% right now. So lots of big moves coming in there. But RITES is the other one that we're talking about. It reported a muted set of Q4 numbers. Revenues and EBITDA came under pressure, while margins contracted on a year-on-year basis. To discuss this and more, we have Rahul Mittal, the Chairman and Managing Director of RITES, joining us now. Rahul, hi, good morning, and thank you for joining us. It's been a very muted Q4 as well as FY24 for you. Can you tell us what is the reason for this persistent decline that you've seen in the top line, and what is the way forward for the business?
Good morning. So let's dive into the numbers and see where the year started and where we have ended. You see, the year started with 2 huge challenges for us. One was an export order book of below 100 crores with no fresh export orders, export of rolling stock orders for more than 4 years. The COVID and post-COVID period, and a big shift in the quality assurance business, where 2/3 of that was from the Indian Railways, and which after about 4 decades plus was opened up to 4 players through a competitive mode. So we didn't want to get bogged down by this major challenges at the beginning of the year. We had a clear strategy to minimize the impact of these two streams of revenue. Both are high margin revenues. In fact, export is a high top line contributor to my stream of revenue. So three key aims which we had at the beginning of the year. First, to get an export order. And we've got two major export orders from Mozambique and Bangladesh after a gap of 4 years, I said, totaling to about 1,200 crores in the last few months. Two, to diversify into more non-IR clients in the quality assurance business. And by the end of the year, from about 2/3 IR and 1/3 non-IR, the balance has shifted to 50% shift into non-IR, a large number of new clients. And third, to build up on our project consultancy business, which is our core strength. So that saw a 10% jump year on year. We had our highest ever project consultancy revenues. So all these three key focused strategies which we had at the beginning of the FY, as the year progressed, they started gaining ground. And we are confident that this has been the right direction that we are moving on.
So can you give us some numbers in the international consultancy segment, which was muted for reasons as you explained? What kind of growth can you hope to resume in FY25?
Yes, as you see, the year started with export order book of below 100 crores. Now we have 1,200 crores, 900 from Bangladesh, 300 from Mozambique, and these will start generating revenue by the third quarter. And so this year we will build up on these two orders. And the way we are bidding aggressively across geographies in the export business, I'm sure that we would get some orders in the coming months also.
Got that. Mr. Mittal, good morning. Prashant here. Could you outline a fresh guidance for FY25 now? I mean, what should we expect? Top line, EBITDA?
You see, the year 23-24 was a year of consolidation, as I said, to hang on there and minimize the impact of these two huge challenges which are outlined. And now with these orders coming in, as also, are having maintained that trend of one order a day company, which we achieved in Q3. We managed to continue that in Q4. In Q4, we got 100 plus orders, totaling to 940 crores. So now we have a good enough steady base. And with now we will build up on our 22-23 benchmark, build up on that rather than 23-24. So we see a good, healthy growth on the EBITDA and bottom line, aiming for a appreciable growth on the 22-23 figures.
But what kind, if you can be specific, sir, what kind of growth? If you can put numbers to it.
Yes, what we would like to aim is that we, as we say, we are a consultancy company and we are a bottom line driven company. So we would aim for a healthy double-digit growth on our EBITDA and bottom line figures vis-a-vis the 22-23 benchmark rather than the 23-24 figures.
Okay, got that. Could you tell us what is the order pipeline now? Give us a sense on that, and how many orders are you L1 in? It'll give us a sense of the visibility.
So the year ended with an order book of 5,700 crores, and we haven't added the 900 crores the Bangladesh order, which came post 31st March. So the Q1, again, we've got already these orders at the rate at which we are progressing. Q4, we were one order plus one order a day. And the rate at which which Q1 is progressing is again in that trend. So I think we will be able to build up on this order book of 5,700 crores quarter and quarter.
Okay, so when you say build up on the order book, right, what's your aspiration? Where do you think you can end FY25 in terms of order wins?
You see, I would say that this trend of one order a day, which has been achieved in Q3, Q4, would continue. So one order a day depends on the mix of the orders. Q4 was 100 plus orders totaling to 940 crores, which depends on the mix of the consultancy order as the export order. So I think we would maintain this one order a day with a healthy blend of both consultancy and export.
Okay. And is there any impact of the RBI draft norms on project financing? Is there any impact of that on your cost of borrowings? Do you expect that to rise?
No, we are a debt-free company, so that is not impacting us in any way. So we are a debt-free company. We are a low capex company. Our business model is that we are a consultancy company, and that's why, as you see, our return to shareholders have been high. 95% plus has been our dividend payout ratio for the last FY.
All right. We'll leave it there. So thank you very much for joining us, and it's a pleasure having you here on the program as always. That's the management of rights. The market's down 100 points still, and I just want to take a quick look at what the market, the broader market is really doing. Market breadth is, I mean, actually largely 1:1, almost 1:1. So I'll start with what's up. Mazgaon was not there in the mix in the morning, but it is up about 3% or so right now. So 3128 on Mazgaon. Campus is up 12%. So, you know, it's basically piling on gains from, it started higher, but it's now up more. Jubilant Food, and we were talking about some of this QSR stuff. So 3 days back, stock was at about 450. It's moved up to about 515. So there is a little bit of buying which is going on here. Paras Defense is up about 6% at about 928, looking good. Sumitomo Chemicals, we mentioned. Moil is up 3.5%. And you got Concord Biotech. I saw an upgrade, I think, this morning, or maybe brokerage note, 7% on Concord Biotech after that block yesterday. JK Paper and Graphite and Exicom are some of the other names. Exicom is up about 6% or so at this stage. So that's the overall picture. Let's put the focus now on the next management. MedPlus Health Services is with us. They reported a good set for the fourth quarter. Revenues are up 19%, margins expanded as well. And the company added 174 stores in the last quarter. We'll discuss this and more with Mr. Gangadi Madhukar Reddy. He is Managing Director and CEO at MedPlus. Mr. Reddy, good morning, sir. Great to have you with us here. Appreciate your time. It's always a pleasure speaking with you. So let's just get the basic numbers out of the way before we dive into what is the state of competition, discounting, etc. So you did, 5,600 odd crores in sales in FY24. That was up some 23% year on year. For FY25, how's the landscape looking and what can you do?
A similar kind of growth is what I would expect, if nothing else happened, honestly. But yeah, it's a little early. Yeah.
So okay, but broadly at this point, sitting where you are, at least a 20% plus kind of growth, right?
Yeah, at least that much. Okay. And again, to get one more number out of the way, we'll most likely add another 600 odd stores to the 600 which we added last year. Yes.
Okay. And margins were 6.3% compared to 5.8. Would you keep that number 6% and more through in 25?
Absolutely. I don't see any reason for it to go down. It may not go up by too much. We will start getting benefit of scale and all as we go forward. But yeah, at least that much. And as we continue to increase our private label, I'm sure it'll get better. But yeah, I would say at least that much.
Okay. So what is the offtake of private label sales this quarter? I mean, what are you looking at? There's not been too much of a growth. I think Q4 private label sales were barely up about 1.1%. At some point, do you think you could get to high single-digit growth, and what's the view forward?
See, on the pharma side, our the net sales were around 8.5%. But you have to actually keep in mind that the current set of private label which we are selling is selling at a 55 to 60% discount, which means what we sold earlier at a 17% overall discount and where we are getting 83 rupees on a 100 rupee MRP, we're today getting only around 45. That still is profitable for us, but it has actually dropped the overall top line significantly. If you actually look at the, let us say the volume sales, GMV to GMV kind of stuff, in states like Tamil Nadu and all, where we are really focusing on by getting some advertisement in and all, we are seeing close to 16% sales overall. So this is a muted number because of the decreased top line, because of the discounts.
So how much do you want to increase the private label sales to as a percentage of overall sales? What are we looking at over the next 1 to 2 years?
For us, as I've been saying in the last 1 or 2 calls, the whole story in the pharma retail in India is now about genericization. Customers are realizing that the market basically sells a lot of Me Too products. Each product is made by, sometimes as many as 100 different companies, and there are several 100,000 brands out there. So people are realizing that, and people are seeing that, it's the same product, and they are willing to actually go with someone who can give them the right quality, and they will go with the best price, irrespective of the brand. So given that we are seeing the shift, both from the customer point of view, because there is more awareness and there's more, information out there, and given that the government is also pushing this very, very actively, I would think that that we should basically eventually be selling only private label and nothing else, honestly. But I don't know how fast the market will actually adopt. So I don't want to really speculate. I would say from the net sales of 8.5%, I would be surprised if we did not easily get into the low teens next year.
All right.
Sorry, Mr. Reddy, private label sales contribution is already about 15%, right?
I'm only talking about the pharma side.
Pharma, okay. But total pharma, non-pharma is about 15%.
It's about 15, yeah.
And what can this get up to? I mean, what would, as you said, you'd like to only, if ideally, but in terms of how this goes, what can this number get to?
Difficult for me to tell you that right now. I don't know how fast the market will actually adopt. But the thing is, there's zero reason for anyone to buy anything else, honestly, given that the government is pushing it. I think it'll go fast. This year, as I said, okay, let me just talk the medicine numbers only. Out of 100 rupees which we sell, 80 is medicines. And 20% of that today, if you look at it by volume, is actually pharma, 19 to 20%. I would expect, going forward, this, over a period of time, this can easily double. Not this year for sure, but over a period of time, this can easily go up to double.
Okay, all right. Hi, Mr. Reddy. Good morning. We've got the total number of store addition that you're targeting, but give us a breakup as of now. How many are new and how many are mature stores?
Well, as of now, I think around 15% of stores are less than a year and around 40% of stores are less than 2 years. So, yeah, that would be the number out there. Yeah. What are the other breakup you want?
Got it. All right. And the margin number, margin number that you're guiding for is more than 6%, but in quarter 4 to 7%. So on an average for the year, what will it be?
So for us, I'm only looking at the net EBITDA. I think, for the quarter 4, it was 4%. I'm not talking about the index number. I'm talking about the number which takes into account all the real estate and everything else. So I expect as we go forward, because of scale and everything else, we should continue to add 0.5% to 1% over a period of 1 year.
Okay.
Given that we are only around 600 stores this year.
Okay. I wanted your thoughts also on the diagnostics business. I think you announced that you are going to defer your plans to expand your diagnostics business. Why is that? And because earlier you had some plans to, take that business forward. But are you seeing a slowdown there? Is there a lot of competition there? Can you just give us a sense of how things are playing out?
No, it is not because of competition. Yes, definitely we want to actually take a pause and basically consolidate our story in Hyderabad only right now. See, as I have said in the past, it's a new model. It is based completely on subscription. The model is extremely sensitive to the number of subscribers. Once you have set up the network, spent the money, the more number of people you have subscribing and paying you the 1,000 or 1,500 rupees a year, the more profitable you are. There's a certain level though, below which you are not. So let us say at 250,000 members, we are breaking even and making money. At 500, we'd be, it'll be out of the park. But we are still there at the 140,000 number odd. So the proof is still not yet there. B2C, we're doing very well. B2B, we're not doing as well. So the focus will be on trying to get more customers to the B2B side, crossing that 250,000 number before we take a call and further expansion.
So you're at 140,000 currently. By when, any kind of indicative timeline on when you plan to reach or when you can achieve that 250,000 number?
So on the B2C side, it's a slower growth. We have already hit the numbers we want to. We're basically operating through our 12 diagnostic centers, and we are also getting members through our 440 odd stores in Hyderabad. I don't think that's going to go up very significantly. We may add net 5,000 or 10,000 every month. 5,000 maybe every month is what we'd add. But the B2B, on the other hand, if you actually get the right kind of customers, coming in, you could add 5, 10, 15, 20,000 also every month. So given that we are focused only on B2B this side, and given that the sales cycle on that is much longer and slightly unpredictable, I could not tell you exactly when. But if B2B doesn't happen, then we'll probably end the year with maybe around 175 to 200,000.
Okay. Mr. Reddy, just one point. You said that private labels and so the government is also pushing this. So you're talking about on the medicines, pharma side, you're talking about branded generics, right? That's what you're largely sort of referring to in terms of a government push as well?
There are only two types of medicines. Either it's patented or not patented. If it is not
Correct.
patented, no matter what name you put out there, it is a generic.
No, that's fine. But branded generic, I mean, you kind of add that is what you've been sort of bullish on as well, right? You're trying to sort of increase the sales there. My only question is, that is what you were referring to. I just wanted to confirm that. And if that is, would this require sort of, a little bit more in terms of awareness if this has to really take hold? Because I'm assuming for the vast majority of people that go with, even for a simple medicine for headache, you'd go with, you'd ask for a brand, right? So when we're talking about sort of branded generics in that sense, I remember having this conversation with you last time as well. Would this require a little bit of spend on advertising, awareness, etc.? Go on.
We are doing that a little bit. Last quarter, we ended up actually spending around 10 crores. And we have spent it mostly in Tamil Nadu and all. And that has actually shown us good results. Today, 20% of all the medicines we sell in Tamil Nadu are our brand, MedPlus brand. So absolutely, we have to increase the awareness and all. Now, to come to the second thing, yes, people who actually buy medicines one-off and people who buy them for, let's say, headache or pain or some antibiotic kind of thing, small infection, will most likely go with brands. Mainly because the doctor has told them they're not going to go do research for a little bit, decrease in price. Mainly because it is not a continuing spend. It doesn't really hurt them too much. But chronic, customers who buy 1,000 to 3,000 or 4,000 worth of medicines month on month every year, they are the ones who we appeal to. They are the ones who will go and do the research. They're very, very price sensitive, obviously. And some of them get converted and basically start buying it. And the more people buy, the bigger the, I would say the spread of word of mouth.
No, I get that. We'll leave it there, sir. Thank you very much and good luck with your plans on this one and, of course, overall business as well. Look forward to speaking with you soon again. But good conversation. That's MedPlus with what they're doing out there in the private labels and the branded generic side and, of course, overall. So 20% growth in FY25 revenues. Margin should be north of 6%. That's the aim for 25. Markets are still down about, 80 odd points or so. Let's sort of focus on the market a little bit. We have Sachidanand Utekar, AVP Technical Equity at Trade Bulls joining us now. Sachidanand, great to have you with us here as always. Thanks for your time. I mean, this is just sort of in a bit of a holding pattern ahead of the election results. Would you look at it like that? Or would you take away anything more meaningful from the price action today and, of course, the sell-off that we saw in the last hour yesterday?
Good morning, Prashant. Yesterday, we saw the Nifty, sliding back to its 5-day exponential moving average support, which is placed somewhere close to around 22,830. I think this particular level becomes a very key, important, pivotal, level for revival. So I think the way the data is placed, 22,700 looks like a dependable support. We've already seen a swing towards 72,750. And I think the reversal is quite meaningful, and we may see some more traction once the Nifty starts trending confidently above that 22,830 mark. So I think once the Nifty clears this particular level, then we may see an extension towards 22,930 during the day itself. So I think for the day, at least, there has been a meaningful support, and I think this particular support, may remain stable throughout the day. We may see a good, strong recovery in the second half, and we are expecting the expiries for the Nifty Bank at least to scale somewhere close to around 48,900, 49,000 itself. So I think both the indices have seen an intraday dip, and probably for the day, the low seems to be established, and we may see a sustainable recovery from here on.
Okay, well, individual stocks, what are you looking at this morning, Sachidanand?
Two stock ideas. First of all, we have recommended this to our clients as well. Adani Enterprises is displaying a piercing line formation on its daily scale after 3 days of a consecutive decline. We have seen a very strong recovery here. We are expecting that this particular momentum may stretch towards 33.05 during the day and probably see an extension towards 3360. And that's why we are still comfortable recommending building long positions here. The stop loss from here on should be placed somewhere close to around 32.30 on the lower side. And the other stock which has hit our radar is Asian Paints. Now the stock was consolidating near to that 2900, 2880 kind of a zone. And in the morning, we have seen a good sustainable breakout above that particular level. So we are expecting that there could be a good recovery in the stock. We may see a good pullback rally towards 2960, and that's why we are recommending building long positions here, keeping a stop loss somewhere close to around 2910.
All right, Sachinandan, we'll leave it there. Good conversation. Thank you very much, and we'll have you back during the course of the day. For more, we'll take a break. Markets down three digits again, 100 points lower on the Nifty. Manisha will be joining in with a roundup of all things commodities on the other side. Stay tuned.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
In the last couple of weeks, the aluminium prices have spiked up, but they've been fairly volatile. There have been sort of $100 swings each way, currently running at $25.50. I think that, we are sort of working with the fact that the numbers are going to be a little bit more stable around investing.
Okay, so for now, the market is still down. So it could go either way, actually. The Nifty is down about 130 odd points. The Bank Nifty is the one that's feeling the heat, maximum amount of heat, actually. Down almost 430 points on the Bank Nifty. And the mid-cap index, from being flat, it's taken a turn for the worse. So not looking good. The last 15-20 minutes actually have aggravated the pain in the market. The top losers today are some of the life insurance companies. HDFC Life, SBI Life are the big losers. Axis Bank, ICICI Bank, HDFC Bank. So financials actually are dragging their feet this morning. Let's see, the day is long, but for now not looking that good for the market. But let's focus to the commodity space now. Manisha Gupta is joining in. Manisha, what's the one commodity you're tracking today?
Thank you for that, Sonia. I'm looking at the crude oil prices because we're looking at good gains onto this one. Last week wasn't so great. We saw 3.5% of a decline, but with the kind of surge that we're looking at right now at 84.5, it's a 4-week highs in case of the crude oil prices. It is also about the summer season demand in US. That seems to be picking up. There are some initial preliminary reports which suggest that the US summer season driving demand could be the highest in last couple of decades. And then there is premium coming back from the renewed geopolitical unrest in West Asia. There is fighting that has escalated is between Israel and Gaza. That seems to be adding to the prices there. The markets are concerned about more uncertainty within the Middle East, and that is what is worrying the supplies in sense of crude oil there. There also are reports of yet another vessel in Red Sea being attacked, and that also the details of that are still awaited within reports, but that is also something that is bothering the crude oil markets there. The US inventory data is today, and for the last 3 weeks, we've seen constant decline in US inventories, also a decline in gasoline and distillate inventories, and that has been supportive. The markets also are looking at the OPEC crude exports for between 1st to 19th of May, and there has been a decline onto that one. They are the lowest since August 2023. So within OPEC as well, we are looking at a higher amount of agreement and compilation of that as well. If you look at the prices for Brent crude until now in this year, which started quite on the lower side at around $75. 91 has been the high for 2024. 84 until now. We did see prices go down to 80 as well, but 84 is where we are trading at this point in time. Interesting cues coming in from the global crude demand as well, and those numbers are something that the street is looking for right now. In 2023, an average global demand was 101.9 million barrels per day. In this year, first quarter has seen a rise on that and 102. If you look at just the month of May until now, the demand has further increased to 103 million barrels per day in sense of global markets there. The demand also comes in on the back of from US in sense of Europe and in Asia as well, where we are looking at stronger numbers here. Now, this is the growth forecast estimates coming in from major agencies and the banks as well. The highest expectation clearly from OPEC at 2.2 million barrels per day, but anywhere between 1.1 to 1.7 million barrels per day of an incremental demand growth is what the street is anticipating. UBS, JP Morgan, Stancy, Goldman Sachs, IEA, all of them anticipate a higher demand globally as compared to the previous year there. Interestingly, also, there's a report from Goldman Sachs which says that the crude oil demand would not peak before 2034 and would continue to plateau until 2040. That in turn also tells you that the investment in crude in sector has been lower, and that would continue to support the prices going forward.
Okay, all right, Manisha, thanks a lot for that. Well, let's focus on a few stocks that are bobbing around in trade today. Mangalam joins us to tell us about IRCTC. The stock is under some pressure. Mangalam?
Yes, so IRCTC, while the revenues of the company this time around were good, it was the operational miss that has the stock lower in today's trading session. And the biggest one actually has come in from their key segment, which is the internet ticketing segment as well. So just to run you through the numbers, year on year, while IRCTC saw a revenue growth of around 19.7%, around 1155 crores, the EBITDA grew just around 11.7%, telling you that there was a margin dip reported by the company of around 220 basis points. The net profit was largely flat. That's because of an exceptional gain in the base quarter. But that, if you adjust for, would have grown in high single digits itself. The key segment of the company, internet ticketing out there, the revenues grew 16%, but the EBIT grew just around 5.8%, telling you that margins, which are earlier anywhere between 85 to 90%, have come all the way down to 80% itself. So there's an 800 basis points decline out there, and that's led to the overall margin miss. And also the catering business, as the operations pick up, the expenses also pick up, and as a result of which their margins come off. 34% revenue growth in the catering business has not resulted in any EBIT growth. In fact, EBIT has declined by about 3% year on year, and that implies that the margins have compressed out there by over 350 basis points as well. So all of this is something that the street does not like, despite the revenues growing. That not reflecting in the bottom line is something that the street is taking note of, and the stock is down 4.5% on account of that.
Okay, thanks for that. But Campus Activewear is the other one which is looking really good. Mangalam, what's going on there?
Well, good operational performance out there. The revenues have picked up, yes, 4.6%, led by about 4% volume growth. Nothing really to write home about out there. There's mild improvement, but look at the EBIT. The EBITDA has grown by about 13%, margin improvement of around 130 basis points, and that's flowed all the way down to the bottom line, which has seen a growth of nearly 40%. What the company said is that it was their renewed focus on trade distribution that led to the margin growth and the revenue growth in the second half of this year. They've also, generated more cash, and as a result of which, even in a tough year, they've become net debt free by paying about 156 crore of debt, and they've reduced their working capital days from 108 to about 79. Kotak's actually written on Campus this morning as well, and they've said that these numbers were a beat on profitability. The company saw a 7.5% growth in their multi-brand outlet channel, and the management, according to them, is confident of reverting to double-digit revenue growth with EBITDA margins between 17 to 19%, as a result of which they maintain their ad rating with a target price of 285 on the stock.
All right. Thanks very much, Mangalam, for that. Well, Sudarshan is here to put the focus on a whole host of companies which are reacting to their earnings. Over to you.
So I'll start with companies which have reported weak earnings. First one is Engineers India. Profit has fallen 39%, EBITDA is down 54%, and margin has slipped almost 1,000 bips against the same quarter last year. And its biggest contributor to total revenue, that is consultancy and engineering projects, and its EBIT has halved to 96 crore. Next one is MTR Tech. It has reported very weak earnings. EBITDA has fallen 63% and margin is down more than 1,100 bips against the same quarter last year. But company says it has registered lower than estimated EBITDA in FY24 because of operating leverage was lower due to deferment of orders. But for FY25, company says it's targeting to achieve revenue growth of 30 to 35%, and that's increase against FY24. Last one one is NBCC. It has reported a strong set of earnings for Q4 and led by PMC segments. EBITDA was up 130%. Margin has increased more than 200 bips year on year. Project management consultancy, which forms 91% of revenue in the Q4, and this one's revenue has increased more than 47% YOY to almost rupees 3,700 crores.
Okay, all right. So, Darshan, thanks a lot for that. Well, I'm focusing on Hindalco. That's the one that we're looking at because ahead of that Novelis IPO, they've come out with a few more details. So the price range has been fixed at around $18 to $21 per share, which means that the total dilution that they're going to be doing for this 45 million shares is around 7.5%. For this, Hindalco, since they're diluting 7.5% stake, they'll receive roughly around 6,700 to around 7,800 crores, depending on the price that you're working with. Valuation-wise, an equity valuation will be around $10.8 to around $12.6 billion. But you pull in that $4.3 billion of debt, and the total valuation is roughly around $15 to around $17 billion. Now, what does it mean? At these prices that they've come out with, the IPO will be priced at around 7.2 to around 8 times EV upon EBITDA. Some on the street are in that vicinity of around 6 to around 6.5 to around 7 times for Novelis. So in those terms, well, they're getting a bit of a premium. So that's good news. But we'll need to know what is Hindalco going to do with the 6,500 to around 8,000 crores that they will get. In all probability, it's likely to be used for capex here in India. And the good news is now Vodafone Idea is fully capitalized for the next couple of years. So no fear with regard to any money going over there. Now, post-listing, what's the problem for Hindalco from a shareholder's perspective? There could be a holding company discount that will be assigned to the stake that they have in Novelis. That's point number one. Second factor is a fourth of their shareholding is FIs. And some of those FIs that are playing it for Novelis will go directly and take exposure in Novelis since it will be listed as well. What are brokerages making of it? JPM as well as CLSA, both of them are quite positive on the stock with the target price in excess of 750 rupees odd. Well, for the time being, we'll slip into a short break. On the other side, we'll be joined by Mr. Ravi Jajkar, the Chief Strategy Officer of Allcargo Logistics. Stay with us.
Rather than the current 2550 or 2600. I think our input cost, especially coal cost, there's enough coal available. So I think our cost of production in Q1 is probably going to be a couple of percentage points even lower than Q4. So I think that the EBITDA per ton in Q1 will be certainly higher than the Q4 $967 per ton.
My role would be focusing more on strategic financing and M&A, because I think that these are very important things that the company is now looking at to transform itself into a global top 10. I think, this role is going to be, more, as I mentioned to you, on strategic financing, M&A, and I would also have, to be involved a little more on the subsidiaries itself. Ashok Leyland has a lot of subsidiaries which are today, on value generation mode. So this is another part of my role where I would be interfacing with the management of these companies to look at opportunities for, value enrichment. At the moment, it's a little too early for me to state what the specific M&As would be. As and when they happen, you will certainly come to know of them.
The passenger vehicle, two-wheeler and four-wheeler stocks have become slightly more fairly valued versus last time. Incrementally, I'm a bit more bullish on CVs because, traditionally what we've seen with CVs is that it goes through deep down cycle and a sharp up cycle. But the sustained momentum in the economy today could mean that the last 1 to 2 years of consolidation we've seen in CV.
Okay, welcome back. You got the market, which is under pressure. Allcargo Logistics is the company that we're now talking to. Margins were impacted by one-off severance costs, and EBITDA slipped by some 31% on a year-on-year basis. But will there be better performance into the new year, FY25? We have Ravi Jajkar, Chief Strategy Officer at Allcargo Logistics, joining us to take some questions. Great to have you with us here, Ravi. Prashant this side. Thanks for joining in. So it's been a tough year, right, overall. for the business. Revenues for the full year are down 27%. EBITDA is down some, 60%. What should we expect in FY25? If you can give us an overall sort of headline picture in terms of a guidance, and then we can get into the individual segments for you.
Yeah, so I think, in our business, revenue is more of a derivative of ocean freight rates and therefore relatively less relevant. We had seen the first half of calendar year 2023, which was doing okay, and then the markets and the macroeconomic environment worsened. However, if you look at the last 2-3 quarters, the performance has flattened out, and the decline which was happening previously has already been arrested. This quarter, quarter 4, FY24 has also been flattish compared to FY24 quarter 3. Now, as we move forward, there are 3 businesses that we operate in. The international supply chain business is clearly seeing the rebound that we have been estimating, and we've been looking at second half of 2024 calendar year to be stronger in terms of demand, and we already see green shoots now. We notice that on several trade lanes, we are already seeing ocean freights rise on account of increased demand, and that means that we should see improved container utilization, and that should mean increased volumes as well as improved margins in the second half of calendar year 2024. So that's something which is looking good on the international supply chain business. On the business side, we have always been very strong, both operationally as well as from a technology standpoint. And it was largely an outcome of macroeconomic environment, which was challenging over the last 3 to 4 quarters, but that's now clearly looking up. On the domestic side, the macroeconomic environment has remained buoyant, and the challenges are more internal as we were trying to turn around the express business. And I'm glad that we have achieved what we wanted to. If you look at the express business, the costs have been reduced by almost 7% on a cost per kg basis. And a large part of that is the last quarter of the year gone by. And if you look at the March exit rates with 7% lower costs, it has translated into improved gross profit, which is 15% higher, improved EBITDA, which is almost 115% higher sequentially. And as we look ahead, the international supply chain business would see sequentially improving performance quarter on quarter on account of revival in macroeconomic environment. And the express business would see sequential improvement on account of, all the cost reductions which have already been achieved. So from here on, we estimate that the quarters going forward should look better. Contract logistics business remains as stable as it has always been.
Can you put a number to it, Ravi? Is that possible overall?
So I would not put a number in terms of guidance, but like I said, every sequential quarter should be better from here on. And that's been our guidance for the last few quarters.
Supply chain and the express business.
Yes, for the international as well as the domestic business, both businesses.
Okay. Ravi, hi, good morning. Just a couple of more questions. In severance costs, you had said that severance costs will get concluded by August, right? Are we on track with that, and how much more is left?
Yes, we are absolutely on track with that. We have been reducing costs, and that, of course, is a impact on the severance as well. I would say this quarter has possibly seen maybe about $1.5 million overall in severance costs and other one-off cost impacts. Now, as you move into the next quarter, while there will be some severance costs with notices running into July, August, there would also be savings emanating from, numbers already reduced in the quarter gone by. So I don't see major significant impact of severance costs in, say, the first quarter of FY25, maybe $500,000, they're not more than that. And second quarter should largely have no impact. And the cost reduction initiative should basically help us take care of all the escalations in staff costs on account of inflationary increases. And that means that despite all the headline inflation numbers being very high across global economies, we should be able to contain our SG&A cost. And that means that the entire gain in gross profits should go down to the bottom line. And that's the intent. And that's how we expect our margins to improve in the second half of the year.
So in terms of containing your SG&A costs, right, what's the total cost reduction? If you can give me that one number, how much are you going to reduce costs further by, and what is the impact it would have on your margins?
So various initiatives that we have taken, across both in staff and general administrative expenses are in the range of about $25 to $30 million. And if you look at our total SG&A cost, which is north of $200 million, this means that any annual increments and all will be taken care of through these reductions. So that's the kind of impact. Basically, I'm talking about a $25 to $30 million initiatives, which should allow us to completely offset all global increases, which would be otherwise standard in business. And that means that any expansion in business on account of volumes, improved utilization, all of that should come down to bottom line. And that's been the plan all through. And we should see the impact from July onwards on that count.
Ravi, so then, I mean, just give us a broad ballpark sort of idea. So margins were about 3.5% for the year gone by. What can this get up to as the business momentum picks up on both sides, all these cost reduction initiatives? What I mean, is there an upward bias, and where the ballpark?
So I would say that, in terms of the EBITDA margins, on a volume basis, could potentially see up to 50% increase from here. It is not appropriate to look at the percentage margins because revenue is, a derivative of ocean freight rates, like I mentioned. The primary driver in this business is how well your container is utilized. And today, to share an example,
so if you can,
trade lanes from
is it better
Asia
to look at
South
EBIT?
America.
Is it better to look at instead of the percentage number, EBIT per TEU? Is that a better metric? So
there are two parts of the business. One which is full container loads which go in TEUs, and the second one which is LCL, which is in cubic meters. So overall, one is EBIT per TEU and the second is EBIT per CBM. Of course, we get the combined number. I would expect that EBIT per TEU as well as EBIT per CBM should be ballpark growing in the same range. And therefore, as we expand the volumes and the profit margins improve, there should be an outcome of, up to 40 to 50% kind of uptick should be possible from here.
Okay, all right. We will let you go on that note. Ravi, thanks a lot for joining in. Appreciate your time here. That's Allcargo Logistics. But for the market, it's actually gotten worse. So don't lose sight of that. The Nifty is now down about 160 points. The Sensex is down about 530 points. So yes, there is definitely some trepidation ahead of the election verdict. The exit polls are on Saturday. So ahead of that, there is definitely some trepidation in the market. The Bank Nifty is down about 500 points. But from the entire team at Bazaar, thanks a lot for watching. Chartbusters up next. Stay tuned for that.
Unless we see a bit kind of global recession or big unexpected shock, we might see the CV cycle bottom out at these flattish volumes.
The car. We are in fact here at Yerwara police station. There are 3 FIRs right now which have been registered in the Pune Porsche drunk driving case. One of the FIR is by the driver's family, who would allege that that he was kept illegally confined inside the staff quarters at the family household. He was in fact, he had also mentioned that he was kidnapped and was not allowed to speak to his family for a very long time. Now this car is the car which was used to pick up the driver. Cops have now taken this vehicle into their custody. In fact, my Vijay Vasant will show you visuals of how there is a notice that has been put in the car as well. In this very car was where the driver was taken, following which he was kept illegally confined. Now cops have taken this very vehicle, they've seized it and kept it in the custody at Yerwara police station. Along with that, the Porsche car also in this case has been kept just a few cars away from this vehicle. Yesterday at this very spot was where technical analysis of the car had taken place. This is a part of the investigation, so this car would also be used for further investigation in the case. So this is the progress of the investigation so far at Yerwara police station. But parallelly, when you speak of the blood samples, crime branch is looking at that case. Details in this very case emerged, show how the sequence of event that took place on Sunday. At around 11 a.m. on Sunday was where the blood samples had reached Sassoon Hospital. Both of the accused in this case were using iPhone. So they had made a WhatsApp call so that the call cannot be traced. Through that WhatsApp call is where the conversation took place. It was Dr. Ajay Tavre, whom the father of the accused had spoken to, asking for the blood samples to be changed. On the recommendation of Dr. Tavre was where the CMO, Dr. Halnoor, ensured that the blood samples are changed. There's a middleman that could possibly be involved. Cops are trying to investigate and find out who that middleman actually is.
domestic economy seems to be having more momentum, higher growth, better macro stability than the global economy. And two is that even from a valuation perspective, some of these themes we think are, given the kind of growth that may happen, given the kind of multi-year cycle they are in, we think the valuations are pretty reasonable. But once you recognize the risk profile, I think it's such a big event, you're better off.
Hindalco was mildly higher today in a weak market after its US subsidiary Novelis files for an IPO on Wall Street, eyeing a fundraise of nearly $1 billion. Brokerage firm CLSA issues a buy call on the stock.
IRCTC slumps despite good revenue growth in Q4 as margins come under pressure across segments. The overall margin contracts by 220 basis points on a year-on-year basis.
Aditya Birla Fashion is under pressure on the back of its fourth quarter earnings as demand remains weak. The stock also entered the F&O ban list.
NBCC surges after delivering a good set of Q4 numbers. The revenue grows by 43% on a year-on-year basis, while margins expand over 200 basis points.
You have a bunch of stocks doing extremely well to earnings. We have Campus Activewear up around 13%, 3M India up around 1.5%, and Brigadent also up around 2% on the back of their fourth quarter numbers.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangala Malu. Well, as we speak, the markets are a tinge of red, as you can see. We've moved to the low point of the day. But as we have been mentioning, it appears that buyers are sitting on the sidelines ahead of a big event. It's not that the selling intensity is aggravating. For the time being, we're still holding the 22,700 mark on the Nifty. On the Nifty Bank, that 47,650 to 48,700, beg your pardon. Those are the crucial levels that you're looking at. We're trading a little below that mark. Manglam.
Nigel, you know, if we have to bounce back, it has to be from current levels itself. We'll wait by for any further clarity post-events are taken out as well. The second half for the Nifty Bank will be extremely crucial. Like Nigel pointed out, 48,650 to 48,700 would be an important support because of the put writing that we've seen at important levels for the Nifty Bank as well. It is the Nifty Bank monthly options expiry. The mid caps, however, are doing a little better than the big caps. So the mid cap index is down just about 0.25%. And remember this, after the mid-cap index underperformed over the last couple of trading sessions. So this is something that we'll keep an eye out on, a healthy sign from the mid-cap index not falling as much as the frontline end of things. So in this wobbly market, let's get you some ideas for profit coming in from our colleagues at Money Control Pro. And today we have Bharat joining in with a stock that he's been talking about.
Today's ideas will be Titan Company Limited. The company posted strong 20% top-line growth in Q4, driven by the key jewelry business. Healthy new buy growth as well as increase in the average realizations boosted the top-line performance. While the top-line growth was strong, EBITDA margins declined by about 100 basis points YOY. This is due to higher discounting owing to increased competitive intensity in the jewelry business. Titan is aggressively expanding its network presence across the jewelry sub-brands, that is Tanishq, Mia, Zoya and CaratLane. The company is also renovating existing stores, which will boost the overall performance. The jewelry market in India is witnessing an accelerated shift towards the organized segment. This is owing to the mandatory hallmarking regulations as well as increased preference for the branded products. Titan, which is the leading organized player having a pan-India presence, would be key beneficiary of the same. We expect the EBITDA margins in the jewelry business to remain steady as higher discounting would be offset by benefits due to operating leverage. Titan is poised to deliver healthy earnings growth over the medium term. At the current market price, the stock is trading at a PE of 58 times FY26 earnings. Investors can add the stock.
All right, so we have, a stock on our radar, which is Titan. And at the same time, at the bottom of your screen, important clarification coming in from the Adani Group. This is them saying that they've categorically denied the baseless speculation on news reports that were there this morning, that they are in talks with the management of Paytm, Vijay Shekhar Sharma, to perhaps go ahead and pick up a stake. And there have been, vehement denials from both sides. So Vijay Shekhar Sharma as well as Paytm has informed the exchanges, informed our colleagues as well. Ritu has been telling us that, Paytm says that news is speculative and not happening. At the same time, Adani Group also has said to CNBC-TV18, and these are strong words, Nigel, they've categorically denied on this media report, saying that all these talks are, baseless. Let's see where it goes because the street is excited. Paytm is still holding up.
Yeah, Paytm actually there are 25 lakh pending buy orders. So, that's why we are unlikely to see any kind of downtick on that stock. So the buyers are in queue out there. But I think, Mangalam, let's move on with the show. Let's get in a couple of managements.
Let's do that. We have J. Kumar Infra, which is on our radar after it reported its fourth quarter numbers. The revenues of the company grew about 26%. The EBITDA too was high by about 27%. So good quarter, so to say. Important to know what the outlook for the year coming ahead is. Kamal Gupta, the Managing Director, as always, joins us. Thanks a lot, Mr. Gupta, for joining in. You ended this year with an order book of close to 21,000 crores. Expected order book, what you had given us earlier, was 25,000 by FY27. So let's put those questions forth to you first. What is your order inflow guidance for FY25 and what is your execution pipeline looking like?
Yeah. Hi, good morning. So if you see this quarter itself, Q4, we have secured 3,750 crores of orders. And on a year basis, there's an inflow of 11,800 crores. So taking our order book, as rightly told by you, to 21,000 crores. So our vision to be $1 billion revenue company by FY27, I think we are right on the path. So achieving 25,000 crores of order book in FY27 doesn't look to be difficult now. This year has been a record inflow for us, 11,800, and this gives us clear visibility for coming 3 to 4 years. Coming for we are already L1 in this month for 4,700 crores of projects. This includes a multimodal corridor from Virar to Alibag, costing 4,100 crores. So our guidance of if order inflow of 6 to 8,000 crores in FY25 seems to be realistic, and we are very comfortable in achieving it. So we wanted to maintain an order book of almost 20 to 22,000 crores by year end of FY25, which is very conservative and comfortable.
Okay. All right. Well, Mr. Gupta, good morning and welcome to the show. You're sounding very, very optimistic about business. What about execution for the coming year? What kind of execution, what kind of margins for the current year? That's FY25.
So we have been continuously delivering a healthy margin of 14.2%. This year, it has gone up by 0.2 basis up. So it's 14.4% EBITDA. And we are hopeful in coming 6 to 8 quarters, our margins will increase from 14 to 15% to 15 to 16%. And the execution on all the projects are going very good. Even the projects what we have secured now in these years have been started. And we see a revenue coming in from this from Q2, and they will add significantly to the growth of in revenue in FY25.
So mid-teens growth for this year with margins closer to around 15%. Are we getting that correct?
Exactly.
Right. Just to back calculate some of the numbers, you said that you are expecting an order inflow of anywhere between 6 to 8,000 crores in this year, and your order book currently is 21,000 crores. You expect order book at the end of this year to be about 22,000 crores. So by that measure, your execution this year should be around 6,500 to 7,000 crores. Can we expect that on the top line?
So as you've given a guidance before, also 15% growth. So I think we will go up to 16 to 17% growth in this year, and taking it to around 5,600 to 5,700 crores of net sales by FY25.
Right. Recently there were some RBI norms that came in for project financing. How does that impact your cost of projects or, your ability to raise funds? Would that be an impact?
So it won't be impact to us. Our debt as of now is only 576 crores, which is 0.2x of, so giving us sufficient leverage. And our interest cost is only 9 to 10%. So the impact of these RBI norms is not on our P&L account.
All right, Mr. Gupta, I just want to clarify that multimodal route you were talking about that you're going to be working on is from Virar to?
Alibag.
Alibag, wow, beautiful. Sounds
it will be sort of a ring road from Virar to Alibag, connecting Vadodara Mumbai Expressway also, and through the JNPT. So it will be a very good connect.
It'll be very good, for those who want to go by road instead of the RoRo as well. good. Maybe Alibag's property prices, I think, have been the biggest outperformers in the last many years. And with this route, maybe, in fact, it could look even better. What is the timelines for this execution of this particular route?
3 years.
3 years, okay.
All
All right.
years,
We'll have to think about it.
The interesting part is that, those who are coming from Gujarat as well will have direct access to Alibag as against the others, because they'll reach all the way to Virar and then go directly to Alibag. Let's see how that pans out. It sounds very exciting, just the way a lot of these infra projects do sound exciting. And speaking about exciting infra projects, metros, how much of it is pending and what's the execution timeline here?
So metro, all the projects are going very well. And we are this line 3 from Colaba to Ships. So phase 1 from Ships to BKC, MMRC is planning to start operations from July or August, because work is almost completed and they are in the final league of taking approvals like Fire NOC, the RDSO approvals and the Chief Railway Commissioner's approval. So that is in process. So that will take around 1.5 months. So I think by Mumbaikars could enjoy this by July or August for sure.
That's the first phase.
Yeah, that's the first phase of line 3 underground, and the second phase should be done by November this year.
Okay, all right.
Final by this year end, yeah.
All right, Mr. Gupta, what is your exposure to Maharashtra as a percentage of your total business?
So Maharashtra, as on now, looking to an order book of 21,000 crores, it compromises almost 65% in Maharashtra, 20% in Tamil Nadu, and the rest in UP, NCR, and other places.
Okay, the reason I ask you is because, this is one of the states where you'll have both the center elections as well as the state elections in a matter of 6 months or so. So will that slow down the tendering, the order booking? Do you see any sort of risk to the business?
So as we are bidding pan-India, and as I told you, what we have already secured, we are L1 in 4,100 crore of project that is in Maharashtra only. So this all will be converted to order much before the elections, state elections kicks in. So I don't think there should be, and we have sufficient order book. So and on national level, center level, all the projects will be all the biddings will also be on.
All right, that's interesting, because while Nigel did speak about the central elections as well as the state elections, the one elections that haven't happened in Mumbai so far are the BMC elections for the last couple of years. That could happen, soon as well. So just wanted your thoughts on the BMC contribution to your order book right now, and were there to be fresh elections announced for the BMC anytime soon? Could that impact?
No, so we have secured a considerable chunk from BMC this year. Would it be like the Goregaon-Mulund Link Road, which is twin tunnel, compromising 7,500 crores in a JV. So our share will be 3,500 crores. Plus the Warsaw-Dahisar Coastal Road, even that is 2,500 crore in JV. So our share will be 1,300 crores. And one Orange Gate from Orange Gate to Grant Road elevated. So this is a considerable component of BMC. But all these projects orders are already been in, and the project execution is already been started, the mobilization all. So because of the elections, there won't be any slowdown in these projects, what we've secured. Though like
no, not in these projects. We're trying to figure out what happens afterwards.
So of course, like during the elections, the 2 months period will be cooling off period. So that time they won't be able to finalize any further new contracts.
Okay, all right. Mr. Gupta, thanks a lot for joining in. You're sounding very, very optimistic, about the business. And I'll tell you what, when the stock price was 200, 250 rupees odd, I recall you joining in, you spelled out that you're going to be $1 billion revenue company in the coming future. As of now, the path you've set, it appears to be your own course. And, share price aside, as Mumbaikars, we want you to execute faster. It'll make our lives a lot simpler. So we're cheering on the execution front. Your shareholders and, they will be tracking all the numbers as well. Thanks a lot for joining
I am fully optimistic like you. And if you see, Mumbai has been changing in coming 3 years. As we have been enjoying this coastal road and the Atal Setu and this metro network. So I think it will be a boon for Mumbaikars in coming 2 to 3 years.
All right. I just hope that... all of this construction does end at some point in time, because since the time I think both Nigel and I have been going to school, we've all seen only construction activity happening with a lot of promise. But we'll take that on board. In the next 3 years, hopefully, Mumbai does change and we see this as a boon for all of us. No one will be happier more than us. Take a short break, come back. On the other side, we'll be joined by Jayanta Basu, who's the Managing Director of ITD Cementation, to discuss their quarter gone by.
much risk. So I think it's perfectly natural for like a fund manager, if they were to go closer to the index. I think that would be perfectly natural and a decent way to handle this event. And typically in a bull run, newer sectors get uncovered.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning
Well, the next management on our radar is ITT Cementation. They reported a solid set of numbers, good growth on the top line, and execution as well has been pretty good. To help us out with the how the things are panning out going ahead, we're joined by Mr. Basu, who's the managing director of the company. Hi, Mr. Basu. Good morning and good to see you, Ben. I recall visiting your office, more than a year ago, and you were sounding very, very optimistic. The share price at that point of time, I think, was around 130, 140 rupees. But you were saying, Nigel, watch execution. And on that front, it's been quite good. So kudos to you. But just a couple of clarifications is what I want. You had guided for order inflow of close to around 8,000 crores. You've ended a little bit short of 7,000 crores. Why is that? Was it election related?
Good morning, Nigel. Thank you for being here for this discussion. I think we are meeting almost after a year. Yes, there will be some spillover because of the election. So we have secured around 6,800 crores of work last year. So yeah, there is some spillover because of elections.
Okay. So in that case, what are you targeting in this year itself in terms of order inflow? And I remember, when you had joined us, you said that in FY24, you'll do 6,000 crore of revenue with 10% margins. Guess what? You've done a lot better, 7,700 crores of revenues with 10.5% margin. So on order inflow front for FY25 with revenue and margin, what are your targets?
Well, order inflow should be between 9 to 10,000 crores. That is what is our target. And there are a few jobs which are in pipeline, which we are quite optimistic about them. We have submitted our bid and some we are being tendered. So close to 9 to 10,000 crores should be the order inflow this year.
Okay, what about execution, sir? As Mangalam said, that you'll gone ahead, you'll promised a number, but you'll did better than that. What about margins? They move into double digits?
Yeah, margin, as you can see already, I have told you last time that it will be close to double digit or more than that we have achieved this year, 10.48%. And we hope that this will be maintained a little bit more coming quarters.
Okay. And execution, revenue, so margins at more than 11%. We're taking that on board with a revenue of what for the coming year?
You can expect a growth of 20% from this year.
20% over last year. So that would give you closer to 9,000 crores, 9,200 odd crores over 7,700 crores. We'll take that on board. And, the last time you had said that the legacy orders that you had, which were low margin businesses, will be done with in the next couple of quarters. So just wanted an update on that. Are all the legacy orders out of the system now?
All are behind us, all.
So which is what explains your optimism on margins. How much further can they go from this 10.5 to 11%? You said a little improvement is what you can see. How much more?
See, it is not only legacy order. You are in a competitive market. So whatever work you get, that also through competition. So there will be a pressure in that margin from that point of view. So we are trying to go beyond our battery limit of India domestic market. We are trying to go to overseas market where we expect there will be better margin. So between 10 to 11% we expect this year.
Okay, we are working with 11%, sir, because you said margins will improve gradually. Legacy orders are behind. That's fair, right? Closer to 11%?
Closer to 11%.
Got it. What about your plans in the overseas market? Your execution projects, I look at it in Sri Lanka, Bangladesh as well. So as a percentage of your total business, what was it in the past year and how does it shape up going ahead?
Now our work in hand, revenue-wise, last year I think we have done around close to 800 crores out of 7,700 crores. But work in hand today will be around 10% to 12% of total work in hand we have from overseas market. So if you remember when Nigel we have discussed last time, our target is to go to 30% revenue from overseas market coming to 3 years time. So we still maintain that target and we are working to achieve that. Yeah.
All right. So from 10% it increases to 30% over the next couple of years. That's the overseas business. On the big ticket projects, you have the Ganga Expressway, you have the Chennai Metro. What's the execution timeline here?
They're all on schedule, particularly Ganga Expressway is going very good. I must say that, we are supposed to complete by next year, February, March, and we hope that we'll be able to achieve that. Chennai Metro, initially there was some delay because of the front was not available. But today, the tunnel, both the package tunnel have started. So it will be done on time.
Okay. What about, could you quantify how, you said that the order pipeline is looking good. What is the L1 order book looking like?
We per se we don't have L1, but we are working with a company like Port of Singapore, Dubai Port, and AP Mollard, those who are our common, customer. So we are quite hopeful that some of the big ticket jobs from these clients will be materialized very soon.
Right, and no worries on the royalty front yet, right? Because 0.5% is what you pay, 0.5%.
No,
you said it is unlikely to. It'll be the same for this year at least, and the next year as well. When does it come for renewal?
Yes, I think there is no possibility of changing the royalty quantity.
All right, Mr. Basu, thanks for clarifying on that as well. We wish you and your team all the best for the coming year. Kudos to you on the execution front, on the order inflow front where you fell a little bit short, but you're guiding for better times in FY25. So we'll hold you to all these numbers. Margins at around 11%, revenue growth of close to around 20%, and also order inflows of around 9,000 crores. Thanks a lot for joining in on CNBC TV18. Well, for the time being, we'll slip into a short break. Come back. We'll continue our focus on the markets. Don't go anywhere.
Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Welcome back. Even as we're seeing some pressure in the frontline indices, the mid caps, a bunch of them are actually rallying hard. We have something like a Jubilant FoodWorks, a big mover this morning. And it's not just this morning. If you just take a look at the stock for this week itself, this morning it's up around 4%. This week it's up around 11%. It's done well for the delivery part of the business this time around as well. The fourth quarter numbers that came by told you that, the LFL growth was a lot better than what the street was fearing earlier. And all of that was led by delivery, and as a result of which it's outperformed the industry. So all those fears of market share erosion perhaps may have been unfounded for Jubilant FoodWorks, doing well. And we're also seeing an uptake come by for something like a Nippon Life. That one too, from the red, has now moved into the green after recovering from the lows and currently at the high point of trade, Nigel.
Add to the list, Gujarat Gas. That's another stock that's spiked up the last few minutes. So I think we should get that one as well up for you on the screen. Well, as we wrap up on this edition of Chartbusters, here's a quick note for all our viewers. A daily wrap of all the top headlines will hit your inbox before you call it a night with CNBC-TV18 daily newsletter on LinkedIn featuring the top 10 stories on markets, corporate updates, economic insights, and financial highlights. So subscribe now and get the CNBC-TV18 edge.
Vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter-century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
In the last couple of weeks, the aluminium prices have spiked up, but they've been fairly volatile. There have been sort of $100 swings each way. currently running at 25.50. I think that, we are sort of working with the fact that the numbers are going to be a little bit more stable around 2,400 rather than the current 2,550 or 2,600. I think our input cost, especially coal cost, there's enough coal available. So I think our cost of production in Q1 is probably going to be a couple of percentage points even lower than Q4. So I think that the EBITDA per ton in Q1 will be certainly higher than the Q4 $967 per ton.
My role would be focusing more on strategic financing and
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Surbhi Upadhyay, and there are nerves, there are jitters, there is some anxiety as we enter into the last leg of the election verdict. The Nifty is down below 22,750. It's a 150-point cut. We had a gap down opening, but things have fallen and got deteriorated a bit in the last 1 hour. So 0.6% gone in the benchmark indices. The mid-cap index in the red now. Bulk of the selling pressure is coming in on the banks. The Nifty Bank is down a good 1 percentage point, with names like an ICICI Bank, Axis Bank and HDFC Bank staring at a cut of 1.5%. Even the life insurance companies are reversing yesterday's gains. So yesterday, the top gainers were SBI Life and HDFC Life, but today they are the top two Nifty losers. So big cuts, deep cuts coming in on SBI Life and HDFC Life. Pull up the Nifty PSU index to see the kind of performance and whether there is some profit booking visible there. Well, the PSC index is just down close to about 0.25%. So not too much by way of a cut, but oil and gas companies, so whether it's ONGC, BPCL, are under pressure today. L&T is a heavyweight, which is weakened in trade, and Reliance Industries is struggling for the third day in a row. Reliance Industries has a cut of close to about 0.6%, but in the last 3 days, it's lost close to about 2.5%. Lots of individual stocks outside of the Nifty are reacting to news flow. So Campus Activewear is now up close to about 16% on the back of strong numbers. So 15% up over there. On the way down, MTAR Tech 9% lower, EIL, Linde India. These are stocks where you can see some of the gains being shaved off. But let's get to one of the big movers on the Nifty, and that's Hindalco. This is after the company's US arm Novelis has filed for an IPO on Wall Street. Nigel joins in to explain the post-listing impact and how the valuations stack up. Nigel, morning, and also just throw in what brokerages have to say about this particular development.
Well, that's right. Hindalco's in focus because Novelis has come out with a few more details with regard to its IPO. So run you through the basic details. They're talking about a price band of $18 to $21 on a per share basis. The total dilution they're looking at is around 7.5% equity. How much will they raise? Well, they raised close to around 6,700 crores to around 7,800 crores. That's in rupee terms, going by the 7.5%. How do valuations stack up? Well, it's at around 10.8 to around $12.6 billion. That's the equity value. But you need to add the debt, which is around $4.3 billion. So in totality, the total enterprise value that they're asking for is around 15 to around $17 billion. Now, how do the valuations shape up? Going with a EBITDA number of roughly around $2.1 billion that they can do at Novelis, and going by this EV of around 15 to around $17 billion, then the valuation that they're asking for is a little over 7 to around 8 times EV upon EBITDA. The market is ascribing a number of around 6.5 to around 7 times EV upon EBITDA. So in those terms, it's good because they're asking for a bit of a premium and they'll get it in all probability as well. The clarity that the street is waiting for is what does Hindalco do with around the 7,000 crores odd, because they are the ones who will get the money. And most brokerages, they believe that they'll announce some capex here in India. So clarity on that front is awaited. Now, the stock price, if you just pull up the last few months chart, you'll see that in February, it was around 520 rupees. And that's when they first announced about this IPO. So the stock has already rallied close to around 25%. That's why it's not running away from current prices. The other problem for them is now there'll be a holding company discount that will be attributed because Novelis will be listed. And since Novelis will be listed, then the FIs who have more than 25% of the stake in the company, they'll say if we want to play Novelis, we'll go directly and play Novelis on the listed entity. So that's why the stock is not running away, because of the holding company discount, because the FIs have another option, and because it's run away already a goodish bit. What are brokerages making of it? Well, we have a call coming in from JP Morgan as well as CLSA. Both of them are optimistic on the prospects of the company, and they have ascribed a target price of around 750 rupees per share. Back to you.
Okay, Nigel, thank you so much. That's really helpful because that explains why Hindalco is not on a tear today, though the parent is going to be earning almost $1 billion with this IPO. Thank you for joining in with that.
You know, just one more point. When this initially, when this news hit the markets, the street was a little bit worried. Hindalco is raising money. Will it make its way into Vodafone Idea? But Vodafone Idea itself now has got the required money.
Settled.
So that risk is out of the way, and the management as well has said, no, there's no possibility on that front. So the street will be breathing easy that they're raising this money. In all probability, it'll be for capex for the aluminium business.
Okay, so looking good and all set for this mega IPO in the US. And thank you for that, Nigel. Let's now look at some interesting result reactions. And we've got some very stark ones coming in. So we're picking out two stocks for you. One is Campus Active and the second is MTAR. Let's start with Campus Active. Now, this stock is up almost, I mean, look at that, 17%. Let's straight away go to Manglam. I don't know, they've got rockets in those shoes, Manglam? What's going on?
Well, they got rockets in the margins for sure, not their shoes so much, because, you know, it was a 4.5% sort of revenue that the companies posted. But also need to know that Campus as a stock, you know, was much loved earlier when it listed. Thereafter, it was also, you know, much bashed as the growth came down, and it fell a fair bit from the high. Still, after a 17% rally, it's a good 15% away from its 52-week high, let alone life high. The good part is that there are signs of recovery. That's exactly what, you know, the street likes here. 4.5% revenue growth. The EBITDA has actually grown a lot higher, and as a result of which there's been 130 basis points improvement in the margin, and the net profit for the company has increased by about 40%. What's important is the you know, internals of the numbers, where the company said the last couple of quarters the business has picked up because of their channel mix and they having focused on, you know, trade distribution. Secondly, the average spending price or average selling price per shoe has also increased marginally by about 0.5%. And thirdly, more importantly, they will stand to benefit from the BIS norms in India, irrespective of the near-term disruption. Their balance sheet has strengthened. They've repaid about 156 crores of debt and also reduced their working capital days from a little under 110 to a little under 80 now. So all these factors doing well for them. Kotak, in fact, has written on Campus as well. They believe that, you know, they have an ad rating on the stock with a good beat on profitability is what they've seen, a target price of 285 rupees. They believe the volume growth is 4% and the management commentary is pretty strong. The management is confident of reverting to about double-digit revenue growth with margins between 17 to 19%. So if all these things were to happen, maybe glory days for Campus would come by.
Okay, and just to remind our viewers of the glory days for Campus Activewear, the all-time high on Campus Activewear was 639 rupees, and now the stock is sub 300 rupees, which means more than a 50% fall from its all-time high levels. So let's see whether we can go back to those levels. For now, Campus Activewear is excited, and it's trading at about 50 times FY26 PE. So that's the valuation on that. But let's talk about Paytm, that's locked in an upper circuit after sources say Vijay Shekhar Sharma has reached out to potential investors to buy a stake in OCL. Ritu joins in with the details. Ritu.
Well, that's right. We've been given to understand from sources that Paytm's founder Vijay Shekhar Sharma has been engaging in talks with potential suitors to acquire a stake in 197 Communications, the parent entity of Paytm. And one of those suitors that Vijay Shekhar Sharma has reached out to is the Adani Group.
Oh, I think we've just lost that connection with Ritu. We'll try and get her back because that's been the hot story since morning. Is Paytm, is the parent entity 197 Communications. Will it manage to get a new investor on board or not? We'll just try and connect with Ritu once again to you know, get the latest on the story. Let's in the meantime focus on the other stock. Okay, before we get to the other stock, I think we have Ritu back. So Ritu, go on. Let's start from the beginning. We lost you there.
Well, you know, we understand from sources that Paytm's founder Vijay Shekhar Sharma has been in talks with potential suitors to acquire a stake in 197 Communications, and just one of those several suitors is Vijay Shekhar Sharma, is Adani Group, who Vijay Shekhar Sharma has sounded out, but there is no clarity on the status of these discussions or any confirmation whatsoever, if at all they are going to fructify. It also remains unclear so far on whether Vijay Shekhar Sharma is looking to sell stake or one of the other investors in 197 197 Communications. If you look at the shareholding pattern, Vijay Shekhar directly holds 9.1% stake with another 10.28% stake, which is held by a firm registered by him called Resilient Asset Management in Netherlands. Now, if you recall, last August, Paytm had announced that Vijay Shekhar would acquire this 10.28% stake from Chinese investor Antfin through an off-market transfer, where Resilient is going to issue OCDs to Antfin without any actual cash transfer. So Antfin continues to hold these OCDs, which it can choose to redeem or convert at a later date if it so wishes, depending on the contours of the agreement between the two parties, which have not been made public. Antfin separately continues to hold 9.8% stake in OCL. Other key investors include CEF Partners, 15% stake, the company's directors, 9.3% stake, and so on. Now, a quick word on Paytm Payment Bank as well, where OCL, of course, holds 49% stake. There are, we understand, no talks to sell any direct stake in the bank yet, and until all customer deposits in the bank and wallet are fully moved out, even the regulator is unlikely to proceed with any next steps or any action otherwise. The Adani Group has called these reports of acquiring any stake in OCL baseless and false, while Paytm clarified to exchanges that the company is not engaged in any such discussions.
Okay, thank you very much for that. Let's get back to the earnings reaction then. MTAR Tech is under severe pressure. The stock is down 8% in trade. Upasana joins in to tell us what went so wrong with MTAR Tech and what the management had to say. Upasana.
Company has registered weak set of numbers both in Q4 FY24 as well as FY24 on a full year basis, and has also missed its FY24 guidance given by the company. In terms of Q4 FY24 performance, the revenue was down about 27% on a one-year basis, and margins were also under pressure at 12.7% versus 25% on a one-year basis. The PAT stood at 4.8 crore with a downtick of 85% on a one-year basis. And coming to company's full year performance, that is FY24, the revenue saw flat growth at 581 crores versus the growth guidance given by the company, that is around 610 crores. In terms of EBITDA margins, they stood at 19.4% versus the FY24 guidance shared by the company, that is around 24%. PAT stood at 56% with a downtick of 46% on a year-on-year basis. While the company has also cut its FY24 growth estimates, the revenue growth the company is guiding for now is 30 to 35% versus the guidance of 50 to 55% given earlier. The company has also cut its EBITDA growth as a guidance for FY25 to 21 to 23% versus 26% given earlier post Q3 FY24. While the company says that the company has registered lower than estimate EBITDA as the operating leverage was lower due to deferment of orders in the clean energy segment and delay in execution of projects in space segment. It has also highlighted that company is under discussions with some of the major MNCs in aerospace segment, hence it is expecting a significant orders shortly.
All right, got it, Upasana. Thank you very much for the details over there. So MTAR not having a great quarter. We will take a break on that. We'll come back on the other side and we'll get you the latest cues from the commodity markets with Manisha Gupta.
Domestic economy seems to be having more momentum, higher growth, better macro stability than the global economy. And two is that even from a valuation perspective, some of these themes we think are, given the kind of growth that may happen, given the kind of multi-year cycle they are in, we think the valuations are pretty reasonable. But once you recognize the risk profile, I think it's such a big event, you're better off not taking too much risk. So I think it's perfectly natural for like a fund manager, if they were to go closer to the index, I think that would be perfectly natural and a decent way to handle this event. And typically in a bull run, newer sectors get uncovered.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour.
Welcome back. As promised, let's now talk about the commodity markets and figure out what the headlines there are looking like. Manisha is joining in, and today she is joining us to talk about coffee. That's a great topic, Manisha. I hope you're going to tell us that prices are going down.
Well, I'm not. Actually, when you look at the last 24 hours, we're looking at most of the soft commodity prices gaining. So whether it's about cocoa, sugar or coffee, we have seen commodity prices gain up in the international markets. I want to talk about coffee, though, because we've seen the best performance really come in from here. We've seen 5% of gains overnight, and the coffee prices are trading at a 1-month highs right now. There are concerns on the dry weather in Brazil and Vietnam, couple of major producers, and that has been supporting the prices, especially when it comes to Vietnam. The 2024-25 crop is anticipated much lower at around 24 million bags, which is a 13-year lows onto that one. Also, the global Robusta deficit has just about continuing for the 4th year in 2024-25 as well. Last year was a 9 million bags of a deficit. This time around as well, it's a deficit, though slightly lower than last year. But as I said, it's a 4th year of deficit at around 4.6 million bags there as well. For the Indian markets also, we are looking at higher coffee prices. Well, actually, when you look at the Robusta prices in India, they hit an all-time high on 29th of April at 225 rupees a kg. And we are holding around between this range as well. The farmers, while of course are getting all-time high prices, but the crop situation is not so great. There has been no rain really in the month of May for many of the coffee growing areas. So we're looking at lower crop, lower yield as well. So the higher price is really not compensating for that.
Okay, thank you very much for that bad set of news for coffee lovers like me and Surbhi. Thank you for that. Let's get into a break. On the other side, we'll be joined by the management of Rashi Peripherals to discuss their Q4 earnings. Stay tuned.
On YouTube. To get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16.
Welcome back. Let's invite the management of Rashi Peripherals on our show now. Now, this is a company which is a pan-India distributor for a lot of tech hardware. So laptops, routers, for brands like Dell, HP, Lenovo. They also, have desktops, CPUs, motherboards. They also have certain lifestyle accessory products like fitness trackers and gaming accessories. It was a recent listing. The company listed in February where they raised 600 crore rupees. The company reported their Q4 numbers recently, and on a year-on-year basis, while the revenues have expanded quite significantly, margins have been slightly under pressure. For the full year, the company has clocked in a top-line growth of about 17.5%. To talk about the way forward, we have with us the company's MD, Kabel Suresh Pansari, and the CEO, Rajesh Goenka, to take a few questions. Thank you very much, gentlemen, for joining in. This is Rima here. Kabel, if you could first talk about the top line. For the full year, you've ended with a 17.5% revenue growth. I remember a conversation during the IPO where you said that this is a company which has been growing at 20% for the last 2 decades. So in that sense, do you think FY24 was slightly lower than expectation? There were certain headwinds. And what can you guide for FY25? Can you get back to a 20% plus run rate?
Right. So, Rima, thank you for having us. What I would like to say that during the COVID years, the market grew by almost 25% year over year for FY21 and FY22. Post-COVID, when the offices, the schools opened up, obviously the technology and the demand cannot sustain the same level of PC requirement. So therefore, there was a little degrowth. So in FY23 and FY24, there was a little bit degrowth by about between 6 to 7% market. What we are seeing for the last 2 quarters, the demand has started coming back up. And consumer market especially has clocked 3 quarters, last 3 consecutive quarters growth year over year. So we see that the demand for the PCs are coming back on track. And despite the degrowth of the market, Rashi Peripherals have grown by about 17.4%. So that's from a market point of view, we've grown faster and larger market.
So can you tell us? Yeah.
For FY25, forward-looking, as the demand is coming back, this year is going to be transformative for the PC industry, primarily because there are a lot of companies from all our OEM partners like HP, Dell, Lenovo, Asus. They will all come out with a refreshed PCs, which will have AI-enabled capabilities, which will do complex tasks, analytical data, spreadsheets, etc., which will drive a higher productivity. Now you can imagine once you have these capabilities, the people will want to be far more productive. They would want to refresh faster and higher. So therefore, we would expect that this year will definitely come back on track, maintaining a CAGR growth.
Mr. Goenka, hi, let's get you in the conversation as well. If you could expand on that point. Sounds very exciting. AI-enabled hardware, right? AI-enabled perhaps laptops and PCs as well. So again, just going back to the numbers, if you've grown a little over 17% this year, and with this whole AI push, what is the top-line growth expectation that you can share with us for the current year, FY25, and break that up between the enterprise segment of your business and also the consumer segment, the peripherals out there?
So I'm not at the liberty to give you a next near number, but I can only tell you that as Kapil also mentioned, last 20 years, our CAGR has been 20%. One. Second, last year, the entire market degrew by 6%, but Rashi Peripherals has grown by 17%. So indirectly, we've had a 23% growth on a YOY basis. Continuing on the same trend, now the market has normalized, so we hope to continue our trend. And the best part for us is, as we've already declared in February, that Rashi Peripherals has won one of the foremost and the largest AI cloud data center order worth 1,510 crores. This order we bagged in the last financial year, but the execution has already started from April onwards, and in the current financial year, that execution will happen. So this will result in having more than 100% growth in our enterprise vertical. And our regular business, where the business is going to be as normal, we obviously will have double-digit growth. So I think this answers your point of overall growth trajectory in the coming year.
No, the reason actually, I mean, sure, for the enterprise segment, I understand because that NMDC order is a massive one for you and that's where the revenues will start kicking in. But for the lifestyle segment or the personal computing segment, I wanted to understand what is a normal run rate. I mean, you give us a revenue run rate of about 23%, but in general, what is the normal growth rate of the business industry-wide? And then since there's this AI element to it as well this year, whether that could be substantial higher, 20-30%?
Yeah, so in general, the industry growth this year is expected to be lower double digits, so somewhere around 10-11%. But with Rashi Peripherals being a value-added distribution company with the reach that we have, we always aspire to grow 2x of the industry average, and that is what we have been successful so far. And with the strategies in place for the coming quarter and the entire year, we are very confident to maintain our trajectory.
What's the contribution of the enterprise business for you right now, Rajesh?
Sorry, can you repeat the question?
What's the revenue contribution of the enterprise business for you right now?
So currently,
and how much will it
currently the enterprise business is roughly about 10 to 12%. But with more than 100% growth, this percentage is all bound to grow because that's where the major acceleration growth will come from. But at the same time, I do not want to discount any of our other businesses because they also will continue to grow. But of course, on a larger base.
So just to understand that 10 to 12% of your business is enterprise, which is going to grow at more than 100%, while the balance is consumer, which is split into personal and lifestyle, and that together will grow 2x that of the market, which is about 10 to 11%. Are we getting the numbers right?
Yeah, maybe you can assume that.
Assume that. Okay. Kapil, tell us about the margin decline in Q4. What led to that, and what can you guide on margins for next year?
So the margin decline primarily is on account of the inventory and working capital costs that we had to incur. If you see, we currently raised the 600 crores in IPO in the middle of the quarter. And over time, as the inventory cycle correction that started happening from Q3 onwards, the working capital cycle demanded a lot of investments from a capital deployment perspective. Our average working capital cycle remained between 57 days, and that was the major reason. While the growth comes back on track, we assume and we predict that this cycle will definitely have a scope to improve further.
But Kabel, just to follow up on that, when you talk about margins improving, what is the aspirational sort of run rate for you? As like, Mr. Goenka also said that there'll be more value-added businesses, that even on the lifestyle side and personal computing side, all these AI-enabled devices. So what is the aspirational or target sort of margin band perhaps that you can look at this year or the next year? And also part B to that question is that does the enterprise segment, does that enjoy higher margins or lower margins than the consumer segment? I'm just wondering, when you execute a contract as big as the one you're doing with NMDC, basically if that's better margin or lower margin than the other business?
Yeah. So I'll answer in two parts this question. One, the aspiration value, margin earning potential for us is between around 1.5% PAT is what we aspire to achieve. This is very much achievable. We are working towards correcting the inventories. We are ensuring that optimized working capital cycles that will bring us to those levels. And a healthy debt equity ratio will ensure that our revenue growth does not hamper while we try to correct the inventory cycles. Inventory is a very key component because as much inventory we have is our ability to churn the revenues accordingly. So we have to keep a right balance between the two. The second part of the question that you asked is how do we ensure that the enterprise businesses will retain a stable margin or a lower margin? So from a percentage perspective, these large orders obviously does not entail to the same level of margins. However, the costs are far, far lower than what we are going to operate upon. Therefore, our operating leverage and the margin leverage is going to be higher.
Got it. Kabel, Rajesh, thank you very much for joining in. By the way, look at the stock react positively to the management comments. It was flat when we began the interview, and now it's up 1.5%. The management saying that the enterprise business will double in, will double in terms of its overall revenues, and even the consumer business over the last 2 quarters is showing signs of life. There is resurgence in growth, and the company appears to be confident about going back to their 20% plus top line trajectory. That's Rashi Peripherals for you. We will slip into a break on that note. On the other side, we'll come back and talk market technicals. Sudeep Shah from SBI Securities will join in next.
Incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
And what a great way to celebrate our own 25th year, with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter-century of excellence.
Welcome back. Here with us on Trading Hour. Now, the giant Indian election is entering its last phase. CLSA has identified 54 companies in the meanwhile, which are perceived as direct beneficiaries of Prime Minister Modi's policies, and perhaps they could stand to benefit if there's political continuity. Hormaz is here with details of this interesting note. Hormaz, we're all ears.
CLSA has come out with a note. Now, they've identified 54 stocks, which they call, quote-unquote, Modi stocks, as they are expected to be beneficiaries of the current government's policies if it is voted back to power for the third term. Now, what they also said is that 90% of these 54 stocks they've identified have outperformed the Nifty in the last 6 months, and which is why they have called these gains that the index has made over the last 6 months as an election-driven rally. Now, and they also say that this outperformance may continue if the current government is voted back to power with a strong mandate. Now, among the stocks, what are the stocks that they have identified within these 54? PSUs dominate the list, but L&T is one of them. Among the PSUs, you have NTPC, NHPC, PFC, ONGC, IGL. Now you go to MGL and the telecom players as well. Reliance Industries, Bharti Airtel and Indus Towers form this list as well. Now, beyond this election, but CLSA has a word of caution here. They're saying that this election-driven rally may come to an end in the month of June or July, and hence banks are the best risk-reward play for the second half of FY24. Now, beyond the Modi stocks, the picks that they have highlighted include the financial names like HDFC, Axis, ICICI, Bajaj Finance, Zomato and Avenue Supermarts as well. Now, once this rally comes to an end, what CLSA says is that investors may get a bit of a reality check, as most of the positives are already baked into most of these stocks. And as a result, this may result into some profit booking among these Modi stocks, which for people who are less patient and less patient holders of these Modi stocks. And they are also highlighting a similar trend over the last two elections in 2014 and 2019, where PSUs had topped out within a few weeks of the election result. And here they are expecting a similar phenomenon to take place in June and July. So 54 stocks that CLSA has identified, but the bigger trigger is that the PSU rally may see a bit of topping out in June or July.
Okay, thank you for that. But you also looked at the Nomura note, which has surveyed 150 investors on what they think is going to be the outcome from this year's elections and what the possible market impact could be. Tell us about that.
So the outcome of this investor survey is pretty clear, Rima, is that 99.3% of the 150 investors who were surveyed by Nomura believe that the BJP will win this election in 2024. Now, how many of them believe that the BJP will get a majority on its own without support of its coalition partners? That is 83%. Now, there is also a bit of division on how many seats will the BJP win in this election. Now, there has been a lot of opinion, a lot of numbers that have been thrown at us over the last 24 hours. Here, 45% of the surveyed people believe that BJP might get fewer seats compared to 2019, while 36% of them believe that they would better their 2019 tally, which was 303 seats that the BJP had won. Now, in overall terms, if you see among the analysts, among the surveyed investors who were surveyed, they expect the BJP to win 297 seats as a cumulative figure, and the NDA to win 344 seats in 2024. Both of them are slightly lower than the 2019 tally. Now, what does this impact? How does this election result impact the economy? Now, the medium-term GDP growth is seen between 7 to 8% if the NDA returns to power for the third term. However, they are expecting this growth to dip to 6.5% if the India Alliance is voted to power, and they also expect major fiscal slippages if the latter happens, although they say that the latter is a very unlikely possibility. Now, what is the market factoring in? The survey believes that the market is factoring in an outright victory from the BJP, and any different outcome from this, what the market has factored in, could be a negative surprise, and a decisive BJP rally in this win in the exit polls can drive a short-term rally on the market. Now, the sectors that may benefit, they are expecting infrastructure, capital goods, defense to do well, as is the sectors that the government has laid a lot of emphasis on over the last 5 years as well. Now, the market impact, as we said, that the street has mostly factored in a BJP win. So Nomura believes that if that happens, it will just be a low single-digit rally on the index on the post the 4th of June. However, if the BJP wins and if the NDA government comes to power without a BJP majority, they expect the market to correct 5% from current levels. And if the BJP cannot form a government even with support of the NDA coalition partners, they expect the market to correct up to 20%. So all in all, the street is factoring in a BJP win. All eyes are on the 1st and the 4th of June.
Okay, all right, indeed they are, Hormaz. Thank you very much for that summary of both of those very interesting notes. Well, as we await the 1st and 4th of June, we have a trading session today to deal with as well. So let's get back to it. Sudeep Shah of SBI Securities is with us for a quick technical check on the market. And as we say hi to Sudeep, the cuts are getting a little deeper. Pull up the Nifty. Let's do that because we are now looking at a 160-point drop on the index. And the Bank Nifty is leading that decline with about a 1% dip. Mid-caps also under pressure. Sudeep, hi. So it's very clear the nerves are showing up. There's a lot of profit taking that started yesterday. It's continuing today. What is your advice as we look at just 1-2 more trading sessions ahead of the event?
Good morning, Surbhi and Rima. See, what we've seen in the last few sessions is that post indices touching a high of 23,100 levels. We have seen some kind of a negative momentum, profit booking from higher levels. And going forward, what we expect is that with the large caps now witnessing some kind of pressure today, the key support levels of 22,600, 22,650 zone could get tested in the next few sessions. And that is where the 20-day exponential moving average is also placed. So I guess 22,600, 22,650 zone could act as a strong support on the downside. And on the upside, the resistances are now well placed at 22,850, 22,900, and that is where the maximum call writers are also placed. The highest open interest is there. So I guess it would be Nifty would be trading in a range between 22,600 on the downside and 22,900 on the upside. And only one thing what I feel is now going forward in the next few sessions, we should not be too aggressive from a trading standpoint. From an investor standpoint, it's okay to accumulate good quality stocks, but going into the event, over leverage positions should be avoided.
Okay. Quick word on the stock-specific calls that you would recommend?
Yeah, so there are a couple of stocks which I like now. The first one is Sumitomo Chemicals. Day before yesterday, the stock has come out with numbers, and the numbers were excellent. Along with that, technically, if you see, the stock has given a downward sloping trend line breakout and is also now sustaining above 453 levels, which was the prior swing high of September 2023. And apart from that, it is witnessing outperformance when the broader markets are under pressure. So I feel this stock could be bought with a 455 stop loss and a 485 as well as 495 targets on the upside. Another stock which I like is NCC. Now, this stock is in a structural uptrend with positive momentum visible across all time frames. Along with that, last few days we have seen the stock was witnessing consolidation at higher levels, and today it has broken out of that consolidation zone. In addition to that, it is sustaining above 278-280 zone, which is the previous swing high of April 2024, and now that could act as a support in the next few sessions. So till the time the stock holds this level of 278-280, this could be bought for a target of 310 on the upside.
Okay, all right, Sudeep, we will leave it over there. By the way, those are interesting lines coming in from the NMDC call. NMDC itself has picked up a little bit from the lowest levels of the day. Two interesting aspects there. One, they're saying that the royalty payout is going to be lower this year. As a percentage, it's coming down to, I think, 43% from 47%. And the second is NMDC Steel could break even as early as the second quarter. So, yeah, NMDC Steel that's NMDC. Let's pull up NMDC Steel as well and see what that stock is doing. The parent company is guiding for a break even by the second quarter. Well, with that, let's slip into a very quick break, come back on the other side, and we will be in conversation with Rashi Ranjan of Marcellus.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
In the last couple of weeks, the aluminium prices have spiked up, but they've been fairly volatile. There have been sort of $100 swings each way, currently running at $25.50. I think that, we are sort of working with the fact that the numbers are going to be a little bit more stable around 2,400 rather than the current 2,550 or 2,600. I think our input cost, especially coal cost, there's enough coal available. So I think our cost of production in Q1 is probably going to be a couple of percentage points even lower than Q4. So I think that the EBITDA per ton in Q1 will be certainly higher than the Q4 $967 per ton.
My role would be focusing more on strategic financing and M&A, because I think that these are very important things that the company is now looking at to transform itself into a global.
Welcome back. As promised, let's get that conversation going with Rashi Ranjan of Marcellus Investment Managers. Rashi, welcome to the show. Thanks for joining in. So the heat is on in the air, in the atmosphere, and in the political field as well, as we are racing towards the 4th of June event. So tell us, I mean, in this whole run-up, the market first fell, and then there's been this rally to fresh all-time highs last couple of weeks and months. What changes, if any, to the portfolio? What have you guys been up to?
Yeah, thank you for having me on the channel, first of all. Yes, we are also closely monitoring the progress of the external environment in the last few months. We've made significant changes as we sort of rev our portfolio more towards high growth. We've added 5 or 6 stocks in the last 6-7 months, which is an unusual run rate of new addition. Largely speaking, we are oriented the portfolio towards companies where reinvestment rates of their cash flows are very high, 80 to 100% in many cases. So, for instance, whether it be some of the relatively low valued companies like say Narayana or an iShare, these have been 2 additions, or many companies such as say Tube Investments or Trend, where there are multiple optionalities that the businesses are throwing up, which are not fully baked into the price. In effect, grabbing many areas of upside earnings growth generation that are not in the price through many of these changes.
So Trend, Tube Investments, and can you tell us which are the others which have found their way to the portfolio over the last couple of months?
So in the healthcare plus health insurance combination ecosystem, Narayana Health Narayana Hrudayalaya is one stock we added, and the sort of rising energy of premium 2-wheelers that we can see in iShare Motors, we've added iShare as well to the portfolio.
Got it. In your Kings of Capital portfolio, you've also built a position in Motilal Oswal. Now, we all know that capital market-related players are doing very well, whether they're brokers, asset managers. But the question is only about the value from here on, considering stocks like Motilal Oswal have already gone up to 50% in the last 1 year. So when you decided to make that addition in the last 1 month, can you tell us how you assess the past performance and how much of it is already in the price for these capital market-related players like Moti?
Yes, so Kings of Capital portfolio has a slightly different portfolio construction approach than, say, consistent compounders. And in that regard, it was a few months ago that we added Motilal. We've actually managed to benefit from a bit of the upside, a lot of the upside that has come through in the last few months. The idea there is if we can't see the abatement of these capital flows into the broader markets, Motilal becomes a very strong play. This is not the consistent compounding type of stock selection under Kings of Capital that we've done. It's a relatively smaller allocation meant to benefit from the increasing capital flows that we are seeing in the financial space.
Interesting. That's really interesting. So it's a slight departure from the usual philosophy, right, at Marcellus, which is looking at consistent compounders, growth in ROCE and the other parameters that you have. Anything else where, I mean, you're willing to look at maybe a slightly shorter term trends and willing to ride them? The Motilal example you gave, anything else that's looking interesting to you right now?
No, not really, and also it's not a departure from that philosophy. So we've got different schemes with different approaches. So, for instance, when you look at our Rising Giants PMS, there's a lot of, or Little Champs even more so. There's a lot of discovery element that we try to capture there. Before a stock would enter into BSE 500, can we discover it before the rest of the market, as a result, discovers after the entry into the broader index? So that's very different from consistent compounders. Similarly, Kings of Capital plays largely the financials piece only. It wouldn't invest outside of financials, and within financials, then portfolio construction includes the bulk of the allocations being towards consistent compounding types of financial services businesses. At the same time, if there are certain tailwinds that in some areas in high quality businesses that we can benefit from without compromising on the quality of the franchise, those are the calls that we've taken.
Any positions, any stocks where you've trimmed your positions?
Yes, so there are a few names where, in a relative way, we expect relatively lower earnings growth. So, for instance, say an HDFC Life versus some of the additions that I talked about, there's a big 5-7% delta between the expected earnings growth rate of those two types of categories of stocks. So it would be HDFC Life. We trimmed a little bit. Given the weak consumption macro from a couple of consumer stocks, we have trimmed a little bit. We haven't fully exited, but we've trimmed a little bit from some of the macro affected sort of small ticket consumer company names. Kotak, we had exited a few weeks ago, replaced it with Chola, in fact, in the portfolio on the lending side. So those would be some of the areas from where we've taken the money off.
You fully exited Kotak, and this was post the RBI diktat from consistent compounders.
Correct.
And what was it? The RBI recent diktat which made that decision for you?
Correct, because for the next 12 months, we expect the earnings growth at Kotak to be a lot weaker than otherwise. And as I said, Chola, much better earnings profile. Hence, it has been replaced.
Okay, all right, got that, Rakshit. Good chatting with you. Nice conversation as always. Thank you very much, and we look forward to the next one. Okay, with that, let's take a break and quickly come back to our next conversation. And we'll be putting the spotlight on the banking and financial sector space. We'll talk about the trends that have emerged after the Q4 earnings season and the outlook ahead with Santanu Chakrabarti of BNP Paribas.
This role is going to be, more, as I mentioned to you, on strategic financing, M&A, and I would also have, to be involved a little more on the subsidiaries itself. Ashok Leyland has a lot of subsidiaries which are today, on value generation mode. So this is another part of my role where I would be interfacing with the management of these companies to look at opportunities for value enrichment. At the moment, it's a little too early for me to state what the specific M&As would be. As and when they happen, you will certainly come to know of them.
The passenger vehicle, two-wheeler and four-wheeler stocks have become slightly more fairly valued versus last time. Incrementally, I'm a bit more bullish on CVs because, see, traditionally what we've seen with CVs is that it goes through deep down cycle and a sharp up cycle. But the sustained momentum in the economy today could mean that the last 1 to 2 years of consolidation we've seen in CV volumes, unless we see a bit kind of global recession or big unexpected shock, we might see the CV cycle bottom out at these flattish volumes.
Welcome back. You're with us on Trading Hour, and as promised, let's quickly dive into BNP Paribas' view on the banking sector after the Q4 earnings season. We have Santanu Chakrabarti joining in for this. Santanu, I was looking at your report. It's titled very interestingly, saying a season of overlooked positives. So tell us, what are those positives? I mean, from what I recall, the things we went into the season with this big sort of hoopla around the margins will start compressing and, major margin compression will happen. But I don't think we've seen too much of that. I mean, that kind of a negative surprise didn't come out. But you tell us your takeaways and what prompted changes, if any, in terms of your recommendations.
Right.
So you have absolutely nailed it. When we went into this result season, the market narrative was that there's not enough deposits around to sustain the kind of growth that some of the larger banks had to deliver on. Especially the case of HDFC Bank comes to mind. And also, of course, whatever little deposits were available were going to be very, very expensive and therefore would have a concomitant impact on margins. Now, against that, what happened? Out of the 6 largest banks in India, if you look at, 5 of them delivered positive surprises in the quarter. And the one which delivered a minor negative surprise, which is HDFC Bank, which was about 2.5% below, in earnings terms below where the street was. It was only on raised expectations past their early release in the beginning of the month, right? So they do this pre-quarterly release where the market already knew about that 1.67 lakh crore deposit number and the stock had positively reacted to that also. And on those raised expectations, there was a minor disappointment. You go into the, what structurally made up the delivery of the earnings for each of these banks for the quarter, and you'll realize that in none of the cases have the margin squeezes been very material. B, management in each of these cases have come out and been quite clear that they do not expect a lot of incremental pressure on cost of funds. It's not as if cost of funds are going to reverse anytime soon, but the bulk of the re-rating upwards or repricing upwards is already done with that. No pressure on cost to assets, operating costs, especially in the case of, for example, SBI delivered a positive surprise. But against all of that, we are speaking today and private banks are down again after this mini rally we have had for the last couple of days. And the market seems to be completely looking through the numbers, even, positive surprises being delivered on those expectations, valuations being as attractive as they are. And we have been crying hoarse about this, as you know very well, Shubhi. But it is what it is. And, we expect at some point the penny to drop for the market on the entire sector.
Okay, perhaps the pendulum will swing. Shantanu, morning. This is Rima here. We were just chatting with Rakshit and he said due to increased regulatory headwinds, they've completely exited their holding in Kotak Mahindra Bank in their consistent compounders portfolio. This was Rakshit Ranjan from Marcellus. What did you make of what the management had to say in the conference call? Because when they quantify the impact, and I think at about 350-400 crore at a PBT level, it doesn't amount to much. Are you a bit worried? Yeah, it doesn't appear to be too much. So are you a bit worried about Kotak Mahindra Bank and have you changed your assessment on the stock?
So look, we have never had a very constructive view on Kotak Mahindra Bank, purely on account of the fact that we felt that given the capital productivity that the bank has been delivering, and against the valuations at which the core bank is trading, even if you take out, whatever you want to value subsidiaries at, and we value it at about 550 rupees, around that, on a per share basis. You take all that out, it wasn't still a very cheap bank, especially in relative terms, relative to where HDFC Bank, ICICI, even ICICI is trading right now. But we had a neutral on it earlier, but we actually downgraded to an underperform on the news. And in our underperform note, which was actually put out way before the call happened, we actually came to the same conclusion that the management has come to, that the incremental direct economic impact of the change is not very large. But here's the problem on which we downgraded to underperform. The problem is this, that right now to fix that capital productivity issue, Kotak Bank needs accelerated growth. And if Kotak Bank's DNA has been studied by anybody over the last 1.5 decades, one thing becomes very clear, that they always, would err on the side of caution rather than risk at any point in time. So under the regulatory interventions that had happened, the probability of them delivering a growth number which is significantly ahead of, say, the ICICIs of the world, which is so critical to, getting their capital productivity up into, the upper teens on a core level, so that the multiple can be justified. it just became harder. So on that, we have put an underperform.
Got it. Yeah, I was actually looking at all your ratings right now, and indeed, I mean, if you're looking at 24, then Kotak at 3.1 price to book. Indeed, it's by no means cheap. I got that. So very quickly, Shantanu, we have only 30 seconds left on the program now. Your positive ratings are on Axis Bank, on HDFC Bank, even on an ICICI Bank, I believe, and on an SBI.
Yes.
You like all the four banks, but the maximum upside target to your target price is actually on HDFC Bank. Tell us your pecking order if, yeah, that's your top pick. So just tell us what might change and what makes you most optimistic.
So at this moment, if I look at the only risk, to the earnings trajectory for the banking sector, and since the focus is so much on earnings momentum, it is the timing of rate cuts, which is obviously very linked to what happens with US monetary policy. As of now, we are building in an October rate cut. And, the margin recovery story can really start in earnest only 1-2 quarters after the first rate cuts. So any delay in that is a little bit of a, dampener on FY25 earnings, if not so much on FY26 earnings. So as of now, we see that as the key risk. More of a delay we have, later say the recovery on margins, ROA, etc. for HDFC Bank becomes. And more favorable we become towards, say, something like a ICICI Bank. That's how we are positioned. We see that as the only risk. But given where the valuations are, even another 2 quarters of delay in rate cuts isn't exactly a deal breaker as far as the investment thesis goes.
We're out of time. Thank you for joining in. With that, it's a wrap on Trading Hour. Thank you for watching.
We are in fact here at Yerwara police station. There are 3 FIRs right now which have been registered in the Pune Porsche drunk driving case. One of the FIR is by the driver's family, who would allege that he was kept illegally confined inside the staff quarters at the family household. He was in fact, he had also mentioned that he was kidnapped and was not allowed to speak to his family for a very long time. Now this car is the car which was used to pick up the driver. Cops have now taken this vehicle into their custody. In fact, my Vijay Vasant will show you visuals of how there is a notice that has been put in the car as well. In this very car was where the driver was taken, following which he was kept illegally confined. Now cops have taken this very vehicle, they've seized it and kept it in the custody at Yerwara police station. Along with that, the Porsche car also in this case has been kept just a few cars away from this vehicle. Yesterday at this very spot was where technical analysis of the car had taken place. This is a part of the investigation, so this car would also be used for further investigation in the case. So this is the progress of the investigation so far at Yerwara police station. But parallelly, when you speak of the blood samples, crime branch is looking at that case. Details in this very case emerge, show how the sequence of event that took place on Sunday. At around 11 a.m. on Sunday was where the blood samples had reached Sassoon Hospital. Both of the accused in this case were using iPhone. So they had made a WhatsApp call so that the call cannot be traced. Through that WhatsApp call is where the conversation took place. It was Dr. Ajay Tavre, whom the father of the accused had spoken to, asking for the blood samples to be changed. On the recommendation of Dr. Tavre was where the CMO, Dr. Halnoor, ensured that the blood samples are changed. There's a middleman that could possibly be involved. Cops are trying to investigate and find out who that middleman actually is.
Domestic economy seems to be having more momentum, higher growth, better macro stability than the global economy. And 2 is that even from a valuation perspective, some of these themes we think are, given the kind of growth that may happen, given the kind of multi-year cycle they are in, we think.
Stocks are sharply lower, with financials and realty being the big drags, even as consumer durables and utilities see some green.
Novelis announces its IPO pricing of $18 to $21 per share, implying an equity valuation of near $11 to $12.5 billion. This tops most analyst estimates and is a positive for Hindalco.
Sources tell CNBC-TV18 that Paytm boss Vijay Shekhar Sharma may be engaging with prospective investors for them to buy a slice in the payments player. The talks are likely at an exploratory stage. Both Paytm and Adani have denied any deal talks.
Crude scales to a 4-week high on US summer demand, rising tension in the Middle East and lower OPEC crude exports. The market remains on edge ahead of the OPEC Plus June 2nd meeting.
Good afternoon. You're watching us here on Halftime Report. I'm Manglam Malu. Today with me is Sonia Shenoy. There's some profit taking in the market, maybe a little bit of nervousness ahead of the big events that are lined up over the next few trading sessions. Sonia, down but not quite out, right, after the rally that we've seen.
Absolutely. You know, we were having a chat with Sudarshan Sukhani earlier in the morning, and he said that generally, I mean, he's seen so many cycles, right? Totally. Generally during election time, the market tends to get jittery, and it's nothing to worry about. If anything, if you're bullish on the market post-elections, then you should use this as an opportunity to buy. But that's his view. But for now, it seems like that, right? I mean, it's really par for the course, the kind of fall that we've seen. Given the kind of run-up from the 9th of May, this is not a bad outcome at all. And in fact, the mid-cap index is actually outperforming the rest of the universe. So that just goes to show that a lot of stocks, which are market favorite stocks, right, are looking pretty good. So case in point, there's Campus Active, Nalco, Hoodco, Hindalco, NBCC, PNB, Zomato as well. All these stocks are sitting at with green on the screen despite a market that's falling, so not bad at all. Not bad at all. In fact, talking about the mid-caps itself, you know, something like an AB fashion, their EBITDA grew by about 47%, the revenues grew by about 19.5%. The street initially took note of the management commentary on weakness in demand, and the stock opened lower after having entered F&O ban as well. From there has been a recovery, so all dips are being bought in a lot of these mid-caps. Something like a Jubilant Foodworks as well. You pointed out Zomato. Jubilant Foodworks is up around 11% in this week itself. So a lot of the broader market stocks are actually finding some favor at current valuations. So let's speak about some of these broader market stocks itself. Greenlam Industries is the first management on the show today. The company reported a revenue growth of almost 17% and EBITDA growth of nearly 12.8% as well, implying margins of around 13.5%. Remember, the earlier guidance of the company for growth was around 20-25%. Let's see what the company has to guide for now for the next year itself. Saurabh Mittal, who's the MD and CEO of the company, now joins in. Thanks a lot, Saurabh, for joining in. You know, that's really the first question. You had earlier guided for 20% in FY24. Obviously, because of the challenges, you fell short at around 14%. Right. You had a target of 20-25% growth in FY25. So would you stick to that right now? And what would your margin estimate for the next year be?
Right. So FY25, we should be looking at about a 20% plus minus growth, you know, for this year, considering the new capacities which came on stream in FY24. So yes, it should be in that range, I guess, unless something comes up. Yeah, we should be able to grow about 20% in this financial year. Okay, 20% in FY25 is the kind of growth that you're looking at. You know, I just want to understand a little more about how business is shaping up in terms of demand, because, you know, this is a space that is growing very rapidly. But in this entire space, right, whether it is laminates, decorative veneers and all that you do, plywood, etc., where are you seeing maximum scope now over the next, say, 12 to 18 months? And what kind of growth rates are you seeing in individual verticals? Well, hard to give you, you know, individual growth rates, but I think we'll grow across all the categories and segments we're present in, whether it's laminates domestic, laminates exports, the decorative veneer flooring door business. The plywood business is relatively new to us, so we'll grow there too. We'll be starting a particle plant sometime in Q3. So I think that'll also add to some revenues. So we see growth happening across categories, across geographies. On the demand side, you know, while you say, you know, it's growing very fast, but on ground, the domestic demand has been challenging. And even the export demand has been challenging, you know, backed with a large shipment problem to the western part of the world due to the Red Sea. But having said that, we still have been able to, you know, grow the business well, I would say, in Q4 and last financial year. Yeah, for this year. Let's get a little more. Yeah, go ahead. No, for this year, we'll expect growth across categories. Growth across categories. So let's get a little more specific, you know, because realizations the full year were largely flat in the laminates business. We saw a decline
of 0.6%. In veneers, there was an increase of around 1.4% in realization. So what is the sort of volume and realizations that you're gunning for in both these segments in the next financial year? And you briefly spoke about domestic and exports as well. So what's the mix that you're targeting this year?
Correct. So FY24 volumes, I think we grew, double digit across all the categories: laminates, veneer, flooring, doors. Ply was a new category, so not much benchmarks. I think we grew double digit across all categories. And on the realization front, despite, again, the challenges and the volume increase, I think we've had a lot of pricing discipline. We improved value mix. So you don't see much, reduction on the price realizations across categories again. FY25 too, I think we should be growing, volume terms, double digits across all the categories.
Okay. So as this growth comes along for the business, right, what are we looking at in terms of debt? Do you think you may have to take on more debt, over and above what you're already sitting on? And what's the absolute debt right now?
So net debt, FY24 was about 835 crores approximately. And FY25, that might go up a little bit because we have to complete the capital expenditure and the plant at the Andhra Pradesh for the particle board. In FY24, we started 2 greenfield projects and we did an expansion at the plant we had acquired in Gujarat. So we had, so we had a significant amount of capitalization happening in FY24. FY25 will start the greenfield plant of particle boards in Andhra Pradesh. So that might go up a bit this year, post which we see, a reduction happening in the debt.
So what are you comfortable with in terms of the maximum debt equity ratio? What is the comfort zone now?
So we are okay at the position we are in right now. It's like 0.75 or 0.8 debt equity. So we are okay with this. And some of these projects, are high capital expenditure projects, especially the particle board business. And even the laminate business, we built a larger plant because if you see the quantity growth programs plan we have, we'll again need to expand, hopefully, in FY26. So yes, so we're okay with where we are. Once these projects come to stream, we'll have reduction in debt happening.
All right. So let's talk about these projects coming into stream and increasing the utilization as well. So it's a two-part question here. One, earlier, you said that at peak utilization, the revenue potential for all of this could be around 3,000 to 3,500 crores. And there is a delay and a cost overrun in your particle board project in Andhra Pradesh. You've increased your capacity or announced an increase in capacity along with an increase in cost as well. So what does that mean in terms of incremental revenues? This 3,500 crores which was there, where does that restated number stand at? And by when do you reach it?
So we had said, I think, if I remember correctly, 3,500 to 3,600 crores on a near full capacity of the investments we've done. And now with the expanded capacity or additional capacity of particle boards and some other, gradual improvements in price mix, that number looks to be about 4,000 odd crores, of the investments we've done and will complete in FY25, which probably will happen maybe by FY, 28 maybe, so we at 25. So about 3 to 4 years, we should be, in that space.
And by then, what would the margins look like?
Well, so if you see the numbers of FY24, we've have elevated costs of manpower, marketing, 2 new plants have got capitalized as high interest and depreciation costs. So clearly, if you achieve those volumes, we should see improvements in margins across categories.
In the residential segment, just wanted to understand, has the growth picked up a lot across maybe this decorative veneer segment, the engineered doors and frame segment? I'm asking because, there is this big boom that we're seeing in real estate right now, but has that even translated to businesses like yours? And if yes, could you help us just quantify what the demand and the growth has been in the residential space over the last 1 year?
Right. So we do think that there should be a big demand happening, in the residential space. We haven't seen that as yet. When I speak to our customers, our teams, and with understanding, the sense I get is that a lot of this construction which has happened, projects which have been announced or which is happening will come for interior fit outs maybe 9 to 12 months from now, or maybe H2 of this year. So yes, if you take a next 2 to 3 year, 4 year view, things look attractive because so much of construction and residences have happened through the country, are happening, and all these apartments, homes will need interior products, and all the categories we're present in. It kind of has a demand, has a space, in these homes. So whether it's doors, flooring, veneer, laminates, facade laminates. So yes, as we talk right now, we haven't seen that surge in demand yet. I think we're still struggling to win more market share, but I think moving ahead, we probably should see better demand coming in.
Quickly leave us with just two numbers. One, veneers, you were speaking about profitability that has happened. You've broken even. By when do veneer margins go, in line with what your overall margins are? That's point number one. And secondly, plywood capacity utilization was 14%. You're scaling that business up.
Right.
What does that capacity utilization be at this year? So capacity utilization of plywood and veneer margins.
So capacity utilization of ply should improve. We're present in only one part of the country, and we launched the product in June 23. So we should see improvement happening, Q and Q in the plywood business. Veneer flooring doors, we have become EBITDA positive, and we should see improvements happening there too. And in fact, even the new laminate factory we started in September 23 has become EBITDA positive in Q4. So I think across segments, across manufacturing units, we should keep seeing improvement, I think, as we move ahead. Can't give an absolute number or a timeline to you, but clearly I think there should be improvement happening.
Okay, well, we'll leave it at that. Thanks a lot for joining in, and all the best for the future. We'll step into a quick break. On the other side, we'll get more on the markets. But before that, a small programming note for our viewers. Join us live on the 31st of May from 5:30 onwards for CNBC TV18's Future Female Forward, the Leadership Circle, a transformative platform where leaders from diverse fields will venture beyond the traditional discourse and share stories of grit and determination and the roads less traveled. This Leadership Circle is not just about business strategies and professional accolades. It's about delving into the depths of the personal journeys of these trailblazers. Stay tuned.
Reasonable, but once you recognize the risk profile, I think it's such a big event, you're better off not taking too much risk. So I think it's perfectly natural for like a fund manager, if they were to go closer to the index. I think that would be perfectly natural and a decent way to handle this event. And typically in a bull run, newer sectors get uncovered.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Welcome back to Halftime Report. Now, Monte Carlo Fashions is the next management of the show. The stock is under pressure after reporting a weak set of numbers. The revenues went down almost 13% year on year. Factors such as higher returns and discounts resulted in a decline in margins. To discuss this, we have Sandeep Jain, the Executive Director of Monte Carlo Fashions, joining in now. Sandeep, thanks a lot for joining in. First, I want to talk a little bit about that because discounting has been on the higher side. That has resulted in a decline in margins. Do you think that there could be more pressure on the operating performance? Could it get worse before it gets better?
Yeah, I think the worst is behind us. The reason being is that, we had very 2 good years starting from 2021. to 23, we had a CAGR of around 35%. So what happened was, there was a good trade show. So we planned more merchandise also, but the season, the weather didn't turn up that way. So we left with higher merchandise this year. And so we have to go for early discounting and heavy discounting, because being a third quarter is very heavy for us, as 50-55% contribution from that. So because of that, we have to go for higher discounts, and that has resulted in around 25 CR of extra discount, which we gave in that quarter. And also we have to take extra return of round, which impacted 45 CR to our profitability. But I think the worst is behind us. Going forward, we'll be seeing, as far as profitability is concerned, we'll definitely see higher profitability from this level.
All right. I remember this very clearly, Sandeep. I remember speaking to you in February itself, and you said that you were hit by a bit of a double whammy, because in December, when there was no winter, you sold the products at a discount, and when Jan it started to get cold, your stores were running out of inventory because of the sale that you had done in December already. So, all said and done, what are you looking at in terms of growth for this year? Because weather is so volatile, it's also extremely hot right now. You are increasing your contribution coming in from non-winter products as well. So, what's the strategy for this year and the next? What's the targeted growth?
See, to be very honest, this year we are, guiding a very flat revenue this year. We're not anticipating any growth in this financial year, but the more focus is on the profitability, because we know that there are some areas where we lost because of higher discounting in some of the EBOs and other channels. So some of the channels we are shutting it down, and some of the EBOs we are shutting it down, and we are adding another around 40 to 45 EBOs, which will compensate the sales of these EBOs, but that will result in more profits. At the same time, we have increased our prices around 7 to 8% in the summer as well as in winters. So I'm 100% sure that we'll be having a very good profitability as compared to last year's level. But the revenue, we say that we'll be having a flat year going ahead. But we can come back and revise our guidance in second quarter, because even till today, the consumption is not going up. Consumption is still very, very weak. Discretionary spending is not happening. Maybe after the election, if something, government comes up with something and economy rebounds, definitely we can come back with revised guidance.
So when you spoke about profitability improving, what's the sort of margin that you're targeting this year? Because, that's had an impact, these sales, etc. Yeah. Your fourth quarter EBITDA turned into a loss. What's the kind of margin that you're targeting?
Yeah, so I can't say you exact margins, but the last year we used to maintain a EBITDA of around 20% from last 10-15 years. But last year it went down to 15%. But definitely there will be a significant jump from the last year's margin. But actual EBITDA margin, I can only guide you in the month of September and October. That is second quarter phone call.
Okay, so since you're saying that demand is weak, right, and your losses are piling up as well, would you go slow on capex plans? Any major capex that you have for FY25?
No, we have a normal capex of around 15 CR, which is a normal capex. But yes, there will be addition of EBOs, but most of them are franchise operated, so there's no capex involved.
Okay, there's no capex involved. Got that. Also wanted to understand, in your kids segment, right, the volumes have declined quite a bit. So in FY25, any kind of recovery that you're looking at over there?
We see a flat growth in kids also. I think we achieved 90 to 90 CR of kids wear sales, and we hope to have it at this level only.
All right. And what about Rocket and Luxuria? Rocket, what has it reached right now? What's the scalability there? And Luxuria also, the premium products are doing well everywhere.
Yeah, Rocket has performed well, and we saw a significant jump of revenue from 9 CR to around 28 CR. And Luxuria also, being a premium category, it's around 40 to 50% higher prices than Monte Carlo, and we see a turnover going from 9 CR to again 35 CR. So these two segments have performed very good for us. At the same time, home furnishing, that also contributed good, and we anticipate good growth going forward in home furnishing as well.
So what's your target from Rocket, Luxuria and home furnishings in the next 1 to 3 years? Because they're growing extremely fast, they could lead the next leg of growth. You have any aspirational number here?
Yeah, the base is small, so we're targeting around 20 to 25% of growth from these categories.
Okay, all right. We'll let you go on that note, Sandeep. Thanks a lot for joining in. Appreciate your time here on CNBC-TV18. Let's take a quick break. On the other side, full tilt on the markets. Pritesh Mehta of Yes Securities will join in with some trading strategies. Stay tuned.
as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Welcome back. The Nifty still lower, holding above 22,700, and that's a big positive. Apart from that, we have the mid-cap index, which is not falling as much. That's another positive. The Nifty Bank is lower too. But what's interesting is that it's Nifty Bank monthly options expiry today. So if you just take a look at the FNO setup, the good part is that there has been a fair amount of put writing at the 48,500 mark for the Nifty Bank. So that's an important support to watch out for in the second half of trade in particular. On the way up, the 48,700 call is equally active. So if we do see a recovery, sustaining above 48,750 would be extremely crucial for the Nifty Bank to see further short covering. But until then, you know, it's this range of 48,500 at the lower level to around 48,800 on the way up for the Nifty Bank itself. For the Nifty as well, you know, the put writers are pretty active at 22,750, and this is a put which is in the money. And on the way up, 22,800 call is equally active, telling you again 22,650 to 22,900 is the sort of range that the street is working with for tomorrow, which is the Nifty expiry, the monthly expiry that plays out as well. You know, despite the cut that we've seen, what tells you about the ferocity of the rally is that we're still a distance away from the 20-day moving average, which is the most recent moving average on both the Nifty Bank as well as the Nifty. So there is no cause for worry, so to say, for the frontline indices. It's just volatility, and that's reflected in the India VIX as well, which, you know, over the last few trading sessions has spiked back once again to levels of around 24.5, which is a near 2-year high. So that's something we'll keep an eye out on ahead of the big event that we are watching out for. Individual stocks, they're all in focus. GMR Infra may enter FNO ban 1 day ahead of expiry, and Piramal Enterprises may exit FNO ban. So those are a couple of stocks which are on my radar.
Okay, well, that is in the FNO space, right? And that's a view on, I mean, that is the update on the market. Pritesh Mehta of Yes Securities is joining in to give us a view on the market as well. Pritesh, it's the bank Nifty that's coming under some pressure. So it was almost getting set to hit that 50,000 mark, and then we came off from there. But be that as it may, do you think that this is just election-related jitters? And if yes, what should one be doing now?
See, good afternoon, first of all. Sometimes doing nothing is the best thing to do in the highly uncertain environment, especially when it comes to trading index, that is both Nifty and Bank Nifty. See, our customized breadth of Nifty has given a bearish crossover. So, we have seen a confirmation of price coming down, breadth tilting lower from the over optimism zone. In this kind of environment, we can see a bit of pullback, a bit of retracement. At this moment, I'm not expecting a bit movement downside. In fact, I'm not expecting any movement on either side. In fact, index could come lower to 22,600 levels. So in this kind of market, at 100 points move is nothing much to talk about. So I think doing nothing on the index is the right way to approach this market.
Right, doing nothing, that's actually the best thing to do a lot of times, not just in market, in life as well. But you know, a lot of individual stocks are doing extremely well. From the broader markets, we're seeing some uptick in names like United Breweries, which has moved to the high point of trade. Vedanta continues to do well. All these Birla Group stocks, Aditya Birla Fashion, we just spoke about at the start of the show, has recovered 6.5% from lows. So what do you have on your stock side? Are there more buys or there are shorting opportunities as well?
See, broader markets is a completely different space altogether. Despite the volatility we see in Bank Nifty and Nifty, broader markets are doing well. Whether you look at Nifty Small Cap, Mid Cap, or even Nifty Micro Cap Index, they are doing relatively better. So, stocks from this space, I think we need to chase them. We need to look after them. So when you were mentioning about the Birla Group stocks, ABFRL looks very interesting. The stock has made a strong recovery last couple of weeks. And the way the structure is shaping up, we are witnessing, a double top buy, series of double top buy coming in on this particular stock. So we can see a rally towards 335, and the stock would be around somewhere around 283. And second stock that we like is Coromandel Fertilizer, Coromandel International, in fact. So basically, the stock has given a breakout of a 45-degree downswing trend line on point of figure chart, and they are witnessing follow-through moves on the upside. So the targets are seen around 1350 levels, and the stop loss would be around 1230 levels.
Okay, well, okay, all right. I also wanted your thoughts on some of these other PSU names, right, that have been rallying quite a bit. So there is Nalco, there's Hudco, there's NBCC. A lot of PSU banks are doing well. PNB, there's BEL, Defense is doing well. From the entire PSU universe, anything else where you see more traction once this volatility settles?
See, we need to understand, we need to look at the ratio of the PSU bank versus private bank, and that ratio is inching higher. It's on the verge of surpassing the previous peak that we had seen a couple of years back. So when that confirmation comes into play, it would tell us that PSU banks are going to outperform the private banks. So this one thing could play out maybe once the volatility settles down. Second thing is that when you look at since we are talking about the PSU basket, we need to keep into consideration the oil and gas energy space. So when you talk about the energy space, OMCs come to my mind, something like BPCL, HPCL, good basing pattern breakout are taking place in that particular basket. So 15-20% move is possible in these stocks, maybe for next 2-3 months.
All right. And finally, before we let you go, Pritesh, a word on some of these consumer names. We have, Trent, which has moved higher. ABFRL, of course, you said you liked. And the other one is we're looking at some uptick in Jubilant Foodworks. In fact, in the last 4 or 5 trading sessions, the stock is up 10%. Has it made a buy list yet?
It has, in fact, on short-term charts, the stock has rallied a lot. We are talking about rally from 450 levels to 513 levels. So from risk-reward perspective, it wouldn't be the right way to approach the stock right now. Maybe once the stock comes back to levels of 490, it would give it a right risk-reward ratio to go for long on this counter.
Okay, all right. Thank you for that. Well, the market is still under pressure, by the way. It's almost 0.8% downtick that we're seeing on the Sensex right now. It's nothing alarming, to be honest. For now, at least it's holding. The Nifty is holding on to the 22,700 mark. But you don't know which way it could go as we get closer to the exit poll results on Saturday night. But here's a quick note for our viewers. A daily wrap of all the top headlines will hit your inbox before you call it a night, with CNBC TV18's daily newsletter on LinkedIn featuring the top 10 stories on markets, corporate updates, economic insights and financial highlights. So subscribe now and get the CNBC TV18 edge. Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter-century of excellence.
Welcome back. The Nifty holding around that 22,750 mark, cut of almost 150 points. Let's talk about some of the numbers that came by. We have spoken with a couple of managements. Let's put focus now on APJ Surendra Park, which basically well known as the brands that it runs, Park Hotels. And we have, 30 hotels that the company runs in 20 cities. Reported a good set of numbers, as we've seen for a lot of the hospitality companies this time around as well, an 8% revenue growth, relating actually moving to a 34% EBITDA margin with a net profit growth of 72% as well. We have with us the management, Vijay Devan, who's the MD of the company, joining in. Vijay, while we have the reported numbers, we don't have a couple of these internals. Could you give us a sense of what the occupancy in the fourth quarter was and what the ARRs were?
So firstly, thank you for inviting me, and I'm delighted to be here. We have had an exceptional quarter, and we have had an exceptional year which has gone by. In terms of our yearly performance, our revenues have grown by 13%, EBITDA has grown by 16%. And the most significant thing is that our PAT percentage has grown by 43%. We have market leadership in occupancy. In fact, we have India's leading occupancy of 92% year-round. And we have also achieved excellent results in terms of RevPAR and ARR. We are market leaders in RevPAR in the segment in which we operate, that is in the upper upscale segment. And we have had 11% growth on the ARR front as well. The other very significant part of the business model of Park is that it has a very strong focus on the F&B side of the business, where the contribution of F&B to the total business is 42%. And the success of the F&B adds a non-cyclical element to our business and provides for a lot of strength to our business.
So in terms of geographic expansion, I just want to understand, most of your business still comes from West Bengal and Hyderabad, right, Mr. Surendra? Any other plans that you have to expand into different geographies? Sorry, Mr. Devan?
Yes, so currently, during the course of this financial year, we have added 374 keys to our portfolio across 8 hotels. We plan to add another 234 keys across 6 hotels in the coming year. 2 of these are going to be palace hotels, adding 52 rooms. One is going to be the Ranbas Palace, which is on Kila Mubarak of the former Maharaja of Patiala, which is going to add 37 rooms. And the second is going to be the Chettinad Palace in Chettinad. These 2 are palace hotels. These are significantly going to add to our revenues, to our average revenues going forward. More significantly, during the course of this year, we are going to take up 3 development projects. A 200-room project starts in Pune in the month of September. We are starting our project extension at Visakhapatnam, 100 rooms. And most importantly, we are going to start a mega project on EM Bypass in Calcutta, which is 250 rooms and 100 service apartments. These service apartments are going to be sold by us, and through the sale proceeds, what's going to happen that it's going to add about 100 crores of cash flow starting next year into our balance sheet over the next 3 years. We are currently also net cash positive. There's no debt on the company. So very, very strong balance sheet. and poised for significant growth going forward.
Right. So, all these points are well taken on board, and some of them you had spoken about when you had come in for the IPO as well. Mr. Dewan, I just wanted a couple of points here. One, the entire year you did pay a finance cost of over 60 crores. So I wanted to know whether entirely that would be eroded in the next year given your debt-free status now. That's point number one. And secondly, during the IPO, we had asked Ms. Paul, can we expect 60 to 70 crore profits in FY24 and 120 to 130 crores profits in FY25 because of this finance cost element and the expansion going out? She said that's about right. And for this year, you did a PAT of around 69 crores. So should we hold on to that 120 to 130 crore profitability in FY25 for you?
So firstly, as I mentioned, and as Ms. Paul mentioned, that we will cross the 60 crores in terms of PAT. In fact, we have delivered 69 crores, which is a 43% improvement over the previous year. To answer your question in terms of the 60 crores interest cost, yes, the debt has been fully retired within 7 days of the IPO. And this should get added on to the result in the coming year.
And the net profit, because of the 60 crore going out, immediately doubles already. So 120 to 130 crores is on the cards for FY25, right?
It should grow in a very significant manner. We will have to keep in mind that there would be a tax calculation. But with the growth trajectory which we have, it looks that these numbers would be achieved or even surpassed.
Okay. The F&B contribution you said for the company is at about 42%, correct? So I just want to understand how much can you grow that to over the next 1 to 2 years? And also on the mice business, I want to understand where are we at currently? What's the contribution and how much can you grow that?
So firstly, as far as the F&B business is concerned, we are not only running the F&B business within our hotels, we are also there in the F&B service space through our brand Flurys at the moment in West Bengal as well as in Maharashtra. Currently, we are operating 82 outlets of Flurys. Flurys is a heritage brand out of Calcutta and is known for its confections, its coffee and celebration. So it's a celebration brand. We have 82 outlets at the moment. We plan to take it to about 100 outlets by the end of H1 and then take it to 120 outlets by the end of this financial year. And going forward, we have a very strong plan of adding 50 outlets of Flurys virtually every year to take it to 350 outlets over the next 4 to 5 years. What is significant about the Flurys brand is that it is going to add, it provides for a very strong growth. The previous year, which has gone by, we have had a growth in the Flurys business by approximately 25%. And Flurys provides for industry-leading margins of 18%. And this trajectory, again, is going to continues. And this actually is responsible for the growth of our food and beverage business. On the other side, we are very successful in running our events and entertainment business in our hotel. We strongly believe that you see customer value gets added because of entertainment. So entertainment in our hotels is used to create value. And some of our nightclubs and bars are exceedingly successful. So we have decided to take one of our brands outside the hotel space. We have launched someplace else in which is our successful bar brand in Mumbai in the Geo World Mart mall, and it has been exceedingly successful. Going forward, see that there is going to be further expansion in the beverage side of the business on a standalone basis. This business also in India is also growing at a very fast rate of about 20 to 22%. So we are there.
Take that point.
Yeah.
Yeah, Mr. Dewan, running short on time, but both Sonia and I, we have visited the someplace else in Mumbai itself, and also I have roots from Calcutta, so Flurys is an iconic brand. Happy to know that it's going to go to 120 places now from 82 outlets, and at the same time 50 more being added would definitely like some more outlets in the city of Mumbai. I vouch for their breads.
Yeah,
Incredible
absolutely,
breads. Yeah,
and iconic, right? Even someplace else, it's a fun place.
It's a fun place. Thank you for joining in. Yeah, please go ahead.
I must say that we have opened 2 outlets of Flurries at the Mumbai airport in the in the Terminal 2, and we are going to be soon at the gateway of Mumbai, as well as on the Colaba Causeway during the month of June.
Perfect. I could do with one in Colaba. The airport is a little further from my house, not as much from Sonia's. We'll take your leave on that note and wish you good luck for all your expansion plans that you have. On the other side, we'll come back and we'll talk about another company which is seeing its share price expand. That's Campus Activewear, reacting strongly to its fourth quarter numbers.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
In the last couple of weeks, the aluminium prices have spiked up, but they've been fairly volatile. There have been sort of $100 swings each way, currently running at $25.50. I think that, we are sort of working with the fact that the numbers are going to be a little bit more stable around 2,400 rather than the current 2,550 or 2,600. I think our input cost, especially coal cost, there's enough coal available. So I think our cost of production in Q1 is probably going to be a couple of percentage points even lower than Q4. So I think that the EBITDA per ton in Q1 will be certainly higher than the Q4 $967 per ton.
My role would be focusing more on strategy.
Welcome back. One of the stocks of the day have to be Campus Activewear, up around 17%. And as we speak, that's on account of their numbers. The reason why that has happened is because even as the company's revenues have grown just around 4.6%, it's led by about 4% volume growth, a mild improvement over the last few quarters where we've seen revenues, struggle for the company. And that has led to an improvement in their margins from 16.3%. They've gone all the way up to 17.6%. And the net profit as a result of which has also grown 40%. What's important is that, the company said that a large part of this revenue growth in the second quarter or the second half of this year has come by on account of their focus on trade distribution. Add to that, they've also seen some improvement in their balance sheet. They've gone ahead and repaid debt worth nearly 156 odd crores, and the company has become debt-free in the financial year FY24. And add to that, they've also reduced their working capital days from a little over 100 to a little under 70. So all these factors working well for them. We had a Kotak note coming in this morning from on Campus Activewear. They have said that it's a good beat on profitability in particular, while they have an ad rating and a target price of 285 on the stock. Mind you, from its record high, the stock has seen a correction of over 40% despite this up move that we've seen. So let's see where this goes from here. A 4% volume growth that they've reported is good, but the management guides for double-digit revenue growth going forward, along with margins in this band of 17 to 19%. So good numbers on track. Let's see whether glory days for Campus come by or not at the current reckoning too. But before we slip into a short break, just also keep an eye out on the HDFC Bank stock. Remember last week, the stock had conquered all its moving averages, including the 200-day moving average. But now as we speak at 1508, it's about 7 rupees below its 200-day moving average. So if you can just, pull up the chart which has both the 50 and the 200-day moving averages of HDFC Bank, you would see that in today's trading session, the 200-day moving average of HDFC Bank has been breached on the way down. So that's the one that we have to keep an eye out on. The line in orange is actually the 200-day moving average, and we have seen the stock below that. The line in blue is the 50-day moving average, so should hold as an important support around that 1485 mark. Take a short break, come back on the other side. Manisha Gupta, as always, joins in with all things commodities.
The car. We are in fact here at Yerwara police station. There are 3 FIRs right now which have been registered in the Pune Porsche drunk driving case. One of the FIR is by the driver's family, who would allege it that that he was kept illegally confined inside the staff quarters at the family household. He was in fact, he had also mentioned that he was kidnapped and was not allowed to speak to his family for a very long time. Now this car is the car which was used to pick up the driver. Cops have now taken this vehicle into their custody. In fact, my Vijay Vasant will show you visuals of how there is a notice that has been put in the car as well. In this very car was where the driver was taken, following which he was kept illegally confined. Now cops have taken this very vehicle, they've seized it and kept it in the custody at Yerwara police station. Along with that, the Porsche car also in this case has been kept just a few cars away from this vehicle. Yesterday at this very spot was where technical analysis of the car had taken place. This is a part of the investigation, so this car would also be used for further investigation in the case. So this is the progress of the investigation so far at Yerwara police station. But parallelly, when you speak of the blood samples, crime branch is looking at that case. Details in this very case emerged, show how the sequence of event that took place on Sunday. At around 11 a.m. on Sunday was where the blood samples had reached Sassoon Hospital. Both of the accused in this case were using iPhone. So they had made a WhatsApp call so that the call cannot be traced. Through that WhatsApp call is where the conversation took place. It was Dr. Ajay Tavre, whom the father of the accused had spoken to, asking for the blood samples to be changed. On the recommendation of Dr. Tavre was where the CMO, Dr. Halnoor, ensured that the blood samples are changed. There's a middleman that could possibly be involved. Cops are trying to investigate and find out who that middleman actually is.
Welcome back, and joining us on the show now is Kunal Shah. He's head of commodities and currencies at Nirmal Bang. Kunal, hi, thank you so much for joining us. And it's a day when silver is hitting all-time highs in the Indian markets right now. So while the international markets continue to hold around that 11-year highs, it is the Indian prices which have seen this surge coming not too far away now from ₹1 lakh a kg. When do you see that level now coming in?
And in the history of the financial market, for the first time, you've seen with the US interest rate at 5.5%, we are seeing all commodities and including silver now hitting an all-time high. So if you see what has been happening, silver is having a deficit of almost 12% from last 3 years. Second, the scrap sales are not coming the way they should have been coming in the market at this price. And there is no incremental growth in the supply from last 5 to 6 years. So it is in a very strong bull run. There is no doubt about it. And yes, very likely it may test 1 lakh rupees in a matter of few days or a week. So the outlook continues to remain bullish on silver. These are the levels, you know, if you bought silver at 60,000 rupees or 70,000 rupees, then my advice would be for the traders or for the short-term investors, they can book profits. But the long-term outlook, I don't see, in spite of the fact that prices have risen so much, no major supply side growth is going to come in a shorter term. Maybe 1.5 to 2 years down the line, with the prices remaining at these levels, we may see a lot of mines may restart and exploration may start. But at this point, it doesn't look that this bull run is going to be abated. and the likelihood of it going to $33.5 looks very likely.
Kunal, while a lack of rupees is quite a given right now, I mean, as you said, it could happen in matter of days and weeks now. But on the higher side, where do you see any kind of a resistance coming in for silver? I mean, as you mentioned, the fundamentals are all on the stronger side. So in the international markets, for the Indian markets now, if we are looking at further spikes within this year, because the industrial demand will come in, we will see rate cuts, even if a few, but at some point in time in this year, what is on the higher side of sense now?
Yes, Manisha, exactly. The market is basically priced in. So whoever has been the investing community across the globe, they have taken one thing, that no matter interest rates are at a higher level or no matter what, but the monetary conditions going forward are going to be relaxed. That is the consensus across the world, because the Western central banks cannot afford to service their debt after a point with the higher interest rate and with the higher bond yield. So in spite of the fact that interest rate cuts have not taken place, you've seen a massive rally across all commodities, and all commodities is basically the rally behind. It is coming at a time when world wants inflation to goes down and China is opening up. China is coming up with more and more packages, more and more incentive to revive their real estate market. And at a time when commodity prices should have remained stable, at that time, relax monetary condition, expectation of relaxed monetary condition, and China again growing, expectation of China growing high. A lot of agencies are coming up with a higher growth forecast for China. So these two things are coming at a point where world wanted commodity to remain stable. And unfortunately, I believe that the inflation is not going to come down in the developed part of the world. It is going to go up. And we will have to live with the higher inflation going forward. So rate cuts are imminent, just a matter of time. And the fundamental of commodities, silver, continues to remain positive.
Well, that's about the precious metal prices, Kunal. But when you look at the industrial metals, we've seen a stellar April. May is only built up on that. And we've seen higher highs in many of these industrial commodities. So whether it's about copper, aluminum, zinc, we've done quite well on the charts and in sense of month-on-month return as well. From here on, for the month of June, now, would you look at consolidation at these current levels, or are you looking at further higher highs?
For the further higher highs, we require some clarity on when the rate cuts are coming. So now another trigger for metals to move up will be the trigger for the rate cut. So maybe tomorrow we have a US GDP numbers and you see a drop in US GDP, or you see a key data from US indicating that the US economy is softening. I think metals will again start to rally. So the downside seems to be very limited at this point. Upside, already we have seen a humongous upside when it comes to some of the metals like copper or, for example, zinc, 20% rally what we have seen in copper. So at this point, my recommendation is buy the dips whenever any data, anything which comes negative for base metals and you see a dip in that time you enter. So copper around 870, 880, good levels to re-enter. Again, it can surprise you on the upside to 935, 940 on MCX. Again, around $10,800, $10,700 on LME. But the broader trend for the base metal seems buy at dips, considering the expectation of easy monetary policy from the US, in spite of the higher inflation rate. And second, China really trying to grow up and trying to give momentum to its economy at a time when world want commodity price to remain soft.
All right, you're speaking about commodities, and as we speak, it is actually the commodity stocks which have seen a bit of a spike. Manisha, thanks for joining in, and Kunal for that conversation. The Nifty Metals Index should come up for you. That's moved to the high point of trade, and as a result of which we've seen the Nifty ameliorate some of the losses as well. When we started the show, the Nifty was closer to that 22,700 mark, and now it's closer to the 22,760 mark, and that's led entirely by the metal space. Of course, a big mover in that has to be Hindalco. Started off slow and steady as, the street was believing that maybe there could be some supply after the big rally that we've seen ahead of the news of the Novelis IPO. But now the street seems to be waking up to the valuation potential out there, and as a result of which there's a big up move that we've seen on Hindalco itself. Take a short break, come back. On the other side, we have Business Lunch taking all the market action ahead for you.
domestic economy seems to be having more momentum, higher growth, better macro stability than the global economy. And two is that even from a valuation perspective, some of these themes we think are, given the kind of growth that may happen, given the kind of multi-year cycle they are in, we think the valuations are pretty reasonable. But once you recognize the risk profile, I think it's such a big event, you're better off not taking too much risk. So I think it's perfectly natural for like a fund manager, if they were to go closer to the index, I think that would be perfectly natural and a decent way to handle this event. And typically in a bull run, newer sectors get uncovered.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Stocks are sharply lower with financials and realty being the big drags today, even as consumer durables and utilities see some green.
Novelis announces its IPO pricing of $18 to $21 per share, implying an equity valuation of $11 to $12.5 billion. This tops most analyst estimates and is a positive for Hindalco.
Sources tell CNBC-TV18 that Paytm boss Vijay Shekhar Sharma may be engaging with prospective investors for them to buy a slice in the payments player. Now, the talks are likely at an exploratory stage, and Paytm and Adani have denied any deal talks.
Crude scales to a 4-week high on U.S. summer demand, rising tensions in the Middle East and lower OPEC plus crude exports. The market remains on edge ahead of the OPEC plus June 2nd meeting.
Hello and welcome. You've tuned into Business Lunch. I'm Nisha Poddar, and with me, as always, is Sonia Shenoy. Now, Sonia, the market, the volatility, nervousness, and today it's a lot more pronounced that we have seen in the past. And at the moment, the entire screen is in the red, Sonia.
Oh, it is in the red, but I'm not too concerned because I think this is more election-related jitters. It always happens, Nisha. Towards election time, the market gets a bit jittery. There's a bit of volatility. But if you look at the larger picture, right, if this government comes back into power as the narrative is or all the chatter is, then this market is definitely going up. It has already, of course, priced in a lot of it. But for now, there is some election-related jitters, some exit poll-related jitters that this market is factoring in. which seems to be par for the course. But let's do one thing. Let's get you some top news stories right now. Paytm is locked in upper circuit after sources have told CNBC-TV18 that Vijay Shekhar Sharma has reached out to potential investors to buy a stake in 197 Communications. Ritu joins in with the latest. Ritu, over to you.
Well, yes, we've been given to understand from sources that Paytm's founder, Vijay Shekhar Sharma, has been in talks with potential suitors to buy a stake in 197 Communications, which is the parent entity of Paytm. And one of the suitors that Vijay Shekhar has sounded out is the Adani Group. But there is no clarity on the status of these discussions or any confirmation whatsoever if these talks are going to fructify. It also remains unclear so far on whether Vijay Shekhar Sharma is looking to sell stake or one of the other investors in 197 Communications. Because if you look at the shareholding pattern, Vijay Shekhar Sharma directly holds 9.1% stake in OCL. Another 10.28% is held by a firm registered by him called Resilient Asset Management in Netherlands. Now, if you recall, last August, Paytm had announced that Vijay Shekhar would acquire this 10.28% stake from their Chinese investor Antfin through an off-market transfer where Resilient will issue OCDs to Antfin without any actual cash transfer. So Antfin continues to hold these OCDs, which it can choose to redeem or convert at a later date if it wishes, depending on the contours of the agreement between the two parties, which have not been made public. Now, Antfin separately continues to hold 9.8% stake in OCL. Other key investors are Saif Partners, which holds nearly 15% stake through its entities, the company's directors with 9.34% stake, and so on. A quick word on Paytm Payment Bank as well, where OCL, of course, holds 49% stake. There are no talks, we understand, to sell any direct stake in the bank just yet, and until all customer deposits in the bank and wallet are fully moved out, even the regulator is unlikely to proceed with next steps or any action otherwise. The Adani Group has called reports of acquiring any stake in OCL baseless and false, while Paytm clarified to exchanges that the company is not engaged in any such discussions.
All right. Thank you so much, Ritu, for getting us all those details. Next up, we are focusing on the biggest Nifty gainer today, that is Hindalco. In fact, we had broken this story some time back that it's $1 billion that Hindalco could be looking at raising from the Novelis IPO. And that's what now comes out clearly. Now, what we are looking at is Novelis IPO and NYSE listing. And some of those details have come out at the top end of the price band that the company has revealed. Well, it's $12.6 billion of valuation that they're trying to achieve. And with the green shoe option included, Hindalco could be gaining or for raising about $1 billion by selling 7.5% to about 8.5% stake in the company. Now, remember, one important thing to note here is that Hindalco is the parent company. It holds 100% of Novelis, and even after this particular IPO in which it raises close to $1 billion, it would still be left with about 91-92% stake in the company. Now, what it does for the company for future, there are three important aspects, which is really a winner for Hindalco in this particular case, and that's what is reflecting on this particular stock price as well. One, monetization and close to $1 billion of fundraise. Second is going to be the valuation of SOTP of Novelis, which is baked into Hindalco, and with Novelis SOTP increasing, it will impact the stock of Hindalco. And the third one is very critical for a capex-heavy company and a manufacturing company, which is ability to raise funds in the future as well, because they have a listed entity, and backed by that, a lot more fund or leverage can be taken as well. So these are the three most important things. And also, these are the reasons, Sonia, why JP Morgan and CLSA have upgraded Hindalco on the back of these valuations and numbers coming out.
Okay, that's a big mover today, right? And thanks, Nisha,
and also not to forget that it's the first big US listing by an India-owned company. So it is a big thing for even our country in terms of going out and making their mark.
Okay, so big mover coming in there for from Hindalco, and big volume action as well on the stock. Don't lose sight of that. I think over 1 crore shares are being traded right now on Hindalco. In fact, 1.5 crore shares as we speak. And remember, the stock has also rallied quite a bit. I mean, this in the last 2 months, actually, in the last 1 month, it's up 10%. This year, the stock is up about 16% and in the last 1 year, it's a 72% rally that Hindalco has seen. Well, let's slip into a short break. When we come back, we'll focus on the Fed's rate trajectory. The Minneapolis Fed President Neil Kashkari believes that the Fed needs more time to assess where the U.S. economy is headed in order to decide on its next course of action. He also says that there is no real urgency to cut rates anytime soon. Listen in.
In the beginning of this year, just as Chairman Powell said, it has moved sideways, and that's raised questions in my mind. Is the disinflationary process continuing, or are we landing to more of a 3% inflation level? I think it's still too early to know, and we need to wait and see to get more confidence. What's unclear to me is maybe some of the dynamics of the reopening of the economy has raised what I call the neutral rate, or what we call the neutral rate, the policy stance that is the minimum level that we need to get to, where we're not stimulating or restraining the economy. If that neutral rate has gone up in the short run, then that means the policy would need to be even higher in order to get the inflation back down to 2%. That's very unknown right now. It's very hard to judge that in real time. And so I think we just need to take more time to assess where the economy is headed. I don't think we should rule anything out at this point. We are all committed to getting inflation all the way back down to our 2% target. The most recent inflation print that we got on the CPI data was marginally better than the earlier prints from the first 3 months, but still not where we need it to get to. So it wasn't getting worse, but we just need to wait and see. I think right now we're in a good position because the labor market remains strong in the U.S., so we have the luxury of being able to sit here until we gain confidence on where inflation is headed. Many more months of positive inflation data, I think, to give me confidence that it's appropriate to dial back. You know, the U.S. economy has remained remarkably resilient. GDP growth has been strong, much stronger than forecast. Most people thought that we'd be in a recession toward the end of last year. That didn't happen. Instead, we had very strong growth. U.S. consumers have remained remarkably resilient. The housing market has remained resilient. So I'm not seeing the need to hurry and do rate cuts. I think we should take our time.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Welcome back. You're watching Business Lunch on CNBC-TV18. As we head into the last phase of the Lok Sabha election, CLSA has identified 54 companies which are perceived to be direct beneficiaries of Prime Minister Modi's policies Hormuz is here with more details on all of that. Hormuz, over to you.
You know, CLSA has come out with a very interesting list of stocks which they call quote-unquote Modi stocks. So they've identified 54 stocks that they expect to be direct beneficiaries of the current government's policies if they are voted back to power. Now, what they say is that 90% of these Modi stocks have outperformed the Nifty over the last 6 months, and therefore they've called this market move over this in this near term election-driven rally, and they expect this outperformance to continue in these stocks if the current government is voted back to power. Now, which are these Modi stocks? I'll highlight some of them. L&T is one of them, but the majority of the names in there belong to the PSU space. Is NTPC, NHPC, PFC, ONGC, the city gas distributors, IGL, MGL make the entry there, and telecom stocks, of course, Reliance Industries, Bharti Airtel, Indus Towers, all find a name in this list of Modi stocks. Now, what CLSA also said is that this narrow election theme driven rally may see an end towards the month of June and July, and as a result banks are the best risk reward play in India right now for the second half of 2024. So beyond Modi stocks, the stocks that CLSA is betting on includes the financial names HDFC, Axis, ICICI, IndusInd, Bajaj Finance is in the list as well, Zomato and Avenue Supermarts also completing that list. But what CLSA now believes is that after this election and the post-election euphoria dies down, investors may be confronted with a reality check, and they would realize that most of the positives in these stocks are already priced in, and as a result the less patient holders of these Modi stocks may rush for some profit booking after this. And they have pointed to a similar trend in 2014 and in 2019 as well, where the PSU stocks had topped out just a few weeks after the election results. So all in all, the 54 stocks that CLSA has identified, most of them belonging to the PSU space.
All right, Hormuz, thank you so much for getting us all those important details. Now, Nomura, on the other hand, surveyed about 150 investors on what they think is going to be the outcome from the year's elections and also the possible market impact of that. Hormuz, tell us more about that as well. That is one big question on everybody's mind, actually.
Not on the investors' mind, I guess, because the 150 investors who were surveyed on the Nomura from this Nomura survey believe 99.3% of them believe that the BJP is going to win this election in 2024. And now within these surveyed participants, 83% believe that the BJP will be able to secure a majority on its own. If you further break that number down, now there is a bit of a divergent opinion on how many seats the BJP would win in this election by itself. There have been a lot of numbers that have been thrown at us over the last 24 hours, ranging anywhere from 290 to 310. Now, what the street believes is out of these 150 participants, 45% of them believe that it will be lesser than their 2019 tally of 303 seats, while 36% of them believe that it will be more than the 2019 tally. But the overall consensus is that the BJP would win 297 seats on its own, which is lesser than 2019, and the NDA together would win 344 seats, which is also slightly lesser than the 353 they won in 2019. Now, on the survey's impact on the economy, if the current establishment is voted back to power, the medium-term GDP growth, the participants see it anywhere between 7 to 8%. But if the India Alliance is voted back to power, they believe that economic growth, GDP growth might drop to 6.5%, and they also expect massive fiscal slippages in case the India Alliance is voted to power. Now, what they also say is that the market is factoring in an outright BJP win, and any other outcome besides that may be a negative surprise for the market, and this might trigger a BJP victory might trigger a short-term rally as well for the markets. Now, the sectors that may benefit if at all the current establishment is voted to power: infrastructure, capital goods, defense, sectors that the government has laid emphasis on pretty much so for the last 5 years, so they might be a beneficiary there. Now, what happens is, since the market is already factoring in a BJP win, if that happens, the index may see just a single-digit rally after the results. But if the BJP fails to secure an absolute majority, but the NDA government is in power, then there might be a correction of around 5%. But if the India Alliance is voted to power, an outcome that they see highly unlikely, but if that happens, the index may see a 20% correction similar to 2004. So a comprehensive survey there. The consensus is that the BJP would be winning this election. So all eyes now on the 1st and the 4th of June.
Okay, well, thanks a lot for that. The first phase of Mumbai's coastal road, though, was open to commuters in March earlier this year. Only a couple of months into the inauguration, the undersea section of the road has developed leaks, and has started seeping ahead of the monsoon season. Definitely a security threat, a safety threat rather. Santhya is at the Coastal Road in Mumbai to get us the latest on that. Santhya, over to you.
A couple of days ago, some videos made round on social media that how water was seeping, in fact leaking, in Mumbai's newly inaugurated Coastal Road. Right now, we are in that very tunnel from where those videos were, and you can see certain marks. These are some of the marks, and this was the seepage, the leakage social media videos were referring to. We spoke to the BMC, and in fact, the CM of the state has also come up with a clarification. They have said that this is not some leakage, this is just a seepage from the expansion joints of the tunnel, and it does not pose any threat to the structural integrity of the structure of the tunnel. But the fact is that this particular tunnel is undersea, this is underwater, and water leaking from this tunnel is a cause of concern, and that has been raised by the opposition as well. BMC is now claiming that they are conducting an investigation in the matter, and they are going to do polymer grouting of these expansion joints to ensure that no more water seeps. But for now, BMC is not clarifying whether it's seawater, how exactly did it start leaking, and what kind of investigation it is conducting to ensure that this does not happen. There are multiple questions which are still unanswered by the BMC and the state government, but for now they are claiming it does not pose any threat to the safety of the tunnel. In Mumbai, with camera person Datta, this is Santhya for CNBC-TV18.
All right, thanks so much, Santhya, for getting us all those important details. Now moving on, storms lash across the northeast India as cyclone Ramal gains strength, leaving a trail of destruction behind us as well. Now, storm and rainfall-induced landslides kills 37 across northeastern states of Mizoram, Nagaland, Assam, as well as Meghalaya. The landslides have claimed 27 lives in Mizoram alone. Nagaland reported 4 deaths and over 40 houses damaged there, while Meghalaya gave a count of 2 deaths and also over 500 have been injured there. NDRF teams have been deployed to badly affected regions for relief and also rescue operations. Mizoram Chief Minister approved a relief fund of 15 crore rupees and granted ex gratia of 4 lakh rupees to the families of the deceased.
Okay, well, on to more national developments. News coming in a short while back. 2 children have been killed and 1 injured after a car in Karan Bhushan Singh's convoy ran over them in the Gonda district of Uttar Pradesh. The police have seized the car and taken the bodies of the children into custody. Remember, Karan Bhushan Singh is Brij Bhushan Singh's son and BJP's Lok Sabha candidate from the Kasirganj constituency. The car involved in the accident is registered in the name of Nadani Educational, which belongs to Brij Bhushan's family. Further investigation is underway in the incident. Okay, let's take a short break on that note. When we return, we'll get you the latest updates on the weather as North India has touched record high heat levels. Stay tuned.
Way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube.
Welcome back. You're watching Business Lunch, and take a look at the market. 0.5% down on Nifty 50, 22,770 odd levels. And Sensex too has lost closer to 500 points at the moment. Bank Nifty is the one which is really taking a deeper cut, and it's always the big financials and the blue chip banks which take a bigger hit in nervousness. So more than 1% down there. Mid caps far more resilient at the moment, flattish in trade. So keep an eye out on the market. But there's lots of news that we are really following up for you. Now moving on to some weather updates, very critical at this point because heat wave really continues to grip northern India, with Churu in Rajasthan really recording a temperature of over 50 degrees Celsius. And Delhi, meanwhile, reported an all-time high temperature of 49.9 degrees Celsius on Tuesday. Abhimanyu is right here to give us all the details.
The national capital is scorching. Delhi had recorded an all-time high maximum temperature of 49.9 degrees Celsius yesterday, whereas Churu in Rajasthan had recorded India's highest temperature yesterday, which was over 50 degrees Celsius. However, this heat wave currently in North India is expected to ebb by the 30th of May, as some western disturbances in form of a relief are expected to bring in thunderstorms and rain to bring down temperatures in the northern plains. As far as the onset of monsoon is concerned, it is expected to come in North India at the usual time. It is expected to reach Delhi by the 29th of June and is expected to reach Rajasthan by the 7th of July. The monsoon projections have been predicted as above normal by the IMD. However, there are spatial differences. Northeastern India is expected to have a below normal monsoon, whereas Central India and Peninsular India are expected to have an above normal monsoon, amidst several reports which were doing the rounds since the past couple of months that the reservoir levels in southern India had dropped considerably even before the onset of summers.
Okay, this is a crazy situation, right? The kind of heat waves that we're seeing across the country. We continue to also watch the developments in West Asia. The United States has announced that they will not change their policy towards Israel after Sunday's deadly strike on a Palestinian camp. They called the incident tragic but said it did not cross their red lines, which would see further aid withheld. This happens as Israeli tanks push into the city center of the Rafah area in Gaza, despite international calls to stop the offensive. NBC's Alice Barr files this report.
Israeli tanks pushing into the center of Rafah, according to an NBC News crew on the ground, raising urgent questions over whether Israel has crossed President Biden's red line, warning against a full-scale assault on the densely populated southern Gaza city.
We have not seen them smash into Rafah. We have not seen them go in with large units, large numbers of troops. We're going to watch this hour by hour.
The Biden administration responding as horrific images from a weekend airstrike at a Rafah tent camp for displaced families trigger fresh outrage.
It's horrific, it's heartbreaking, and it needs to stop. We also have to remember that we are supporting Israel in their fight against Hamas.
Israel says it targeted and killed 2 Hamas commanders, but in the process, an Israeli official tells NBC News it appears an IDF bomb ignited a gas tank, sending flames sweeping through the camp, killing at least 45 people, many of them women and children, according to the emergency services in Hamas-run Gaza, and injuring hundreds more. Israeli Prime Minister Benjamin Netanyahu promising an investigation into what he initially called a tragic mishap.
We will be watching those results closely, and we will continue to emphasize to Israel their obligation to comply fully with international humanitarian law.
At the same time, the U.S. military forced to suspend aid deliveries by sea into Gaza because a temporary pier was damaged in bad weather. Another blow in Gaza's dire humanitarian crisis. Israel is showing no signs of complying with the United Nations top court's order that is largely symbolic to halt that Rafah military operation. It comes as Spain, Norway, and Ireland all formally recognized a Palestinian state, another sign of Israel's increasing international isolation. In Washington, Alice Barr, NBC News.
Very unfortunate there, the situation in Gaza, especially in the Rafah area. But getting back to our markets, we leave it with a cut of about 111 points. So the market has not gotten any worse through the course of the day. If anything, there's been a slight recovery. But important to also point out that the Bank Nifty continues to be under pressure, down about 550 odd points, while the mid-cap index has flattened out. So it would be interesting to see if the dips get bought in the latter half of trade, considering that these are just about, pre-election jitters ahead of the exit polls. So maybe there could be some buying on dips as well. Don't lose sight of that. That's all we have on Business Lunch. Mid-cap Radar comes up next.
Domestic economy seems to be having more momentum, higher growth, better macro stability than the global economy. And two is that even from a valuation perspective, some of these themes we think are, given the kind of growth that may happen, given the kind of multi-year cycle they are in, we think the valuations are pretty reasonable. But once you recognize the risk profile, I think it's such a big event, you're better off not taking too much risk. So I think it's perfectly natural for like a fund manager, if they were to go closer to the index, I think that would be perfectly natural and a decent way to handle this event. And typically in a bull run, newer sectors get uncovered.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros.
Good afternoon and welcome to Midcap Radar. I'm Nigel D'Souza and with me is Horma as well. And at the bottom of your screen, we have the big news that's coming in there. S&P on India, they've revised the outlook to positive. The ratings affirmed and they revised the outlook to positive from stable. Remember, the markets were under pressure early in the trading session, took support closer around the 22,700 odd mark. And now post that news flow, we're on the way to around 22,800 odd. This is some bit of good news that's come in there, Hormuz, so from an India perspective. And the mid-cap index, by the way, has moved into the green. So that's telling you that, in fact, portfolios may not get hit as much because yesterday, those, many of the stocks are under pressure. But today, they're pulled back almost.
There's a bit of a recovery on the index as well. The S&P has affirmed the rating. The rating remains the same, but the outlook has been revised to positive. And that is a big news that is coming in there as of now. And we'll take a look at we'll address this in greater detail as the show goes by. But the Nifty has seen a slight recovery from the lows of the day. But as Nigel was highlighting, the mid-cap index has turned positive from the lows of the day. But as we move on, let's first take a look at the headlines that we are tracking on the show this afternoon. The stocks are trading under pressure with financials and realty being the big drags, even as metals and pharma see some bit of green. Broader markets are faring better. The mid-cap index has just turned positive.
MTAR Tech reports a weak set of numbers. The EBITDA falls 60% while the margins contract by over 1,100 basis points. The company also misses their FY24 revenue and margin guidance. They have also gone ahead and trimmed their FY25 guidance.
Campus Activewear shares have surged over 16% and have crossed their IPO price today after 4 months after their fourth quarter results. The profit has surged over 40%, EBITDA is up 13%. Kotak is bullish at the stock as the management is confident of reverting to double-digit growth soon.
Suslaw's Energy receives an order from Aditya Birla Group to develop a 550 megawatt wind power project. Nuvama initiates coverage on the stock with a buy rating. They expect the order book to scale new highs, the lending revenue visibility for the next 2 years.
And in a large block deal that took place in PNB Housing, 2.7% equity worth over 500 crores changed hands. And private equity players Asia Opportunities, Mauritius and General Atlantic Singapore funds are the likely sellers in this transaction.
Well, let's get straight to our mid-cap mover segment. Then Mangalam is joining in to run us through all those mid-cap stocks that are moving around. Mangalam, take it away.
Well, the mid-caps are all moving around, and how we have a few more gainers, and now they've been increasing even as the mid-cap index has now moved into the green as we speak. It's been a relative outperformer in the sense that it did not fall as much as the frontline indices all through today's trading session, and now we're seeing signs of life spring back on that index as well. So let's talk about a bunch of these movers. Mazagon Dock reports its numbers today. Ahead of that, that stock is up 6%. Hudco continues to rally, positive commentary coming in from brokerages and the management itself. Suzlon Energy won an order, and that's led the stock to move higher. Not that it needed a reason. It's been moving higher for the last many months itself. Cochin Shipyard is the other one, which is doing well too. Speaking about, Cochin Shipyard, we've also had a bunch of these defense-focused stocks like Bharat Dynamics, Paras Defense, all of them moving 6 to 7% odd, and GE Shipping is the other one, which is a gainer. The rail theme continues to move forward, and we've seen a big spike in the names like Titagarh Rail, Texmaco Rail, all of them up anywhere between 5 to 7%. Most of the gains have come by just in the last 15 minutes or so. Jubilant Foodworks is the other one, which continues to rally up nearly 11% this week, and topping it with gains of almost 4% as well. But for a lot of the gainers, there are some stocks which are losing as well. So Monte Carlo reported a weak set of numbers. Management commentary was also not particularly enthusing, and as a result of which that stock down in nearly double digits. Hindalco Home as well reacting to its numbers. Hatson Agro saw a big up move in yesterday's trading session. Turns out that there is profit taking on that one, down about 6% after the big up move yesterday. PNB Housing Finance, there was a large trade. That stock too is down about 6%. Ujjivan Small Finance Bank down about 5%. And we're also seeing cuts on names like ICICI Pru and Jaiprakash Associates. So a bunch of these stocks moving on either side, some on the up, a lot on the low.
Okay, all right. Mangalam, thanks a lot for that. Well, Hormuz, earlier this morning I said that the one result that I'll be looking forward to is Cummins. Because the stock is at a fresh 52-week high actually. And the street is a little bit optimistic on some of these counters. Just pull up the intraday chart out there. I'll be waiting for the numbers, but for the time being, the stock has seen a big recovery from the low point of the day. Yesterday as well, the price action told you that the street is bracing for a positive set of numbers. We'll have to see what's the delivery. But for the time being, there's a massive recovery from the low point of the day. So Cummins is a stock to keep in your radar. A couple of sessions ago, there was big delivery-based buying on this one. In fact, the delivery-based buying 2 days ago was the highest you've seen all the way since September. So keep an eye out on that counter. But let's get straight to our first management. We have Uflex that's in focus. The numbers, well, they were a little bit disappointing on a year-on-year basis as well as on a quarter-on-quarter basis. To understand what's the outlook from here on, we have Mr. Rajesh Bhatia, the Group President of Finance and Accounts, and the CFO of the company who joins in. Hi, Mr. Bhatia. It's been a while since we chatted and good to have you on the show. Well, let's run through a couple of basic details then. For the past year, what was the volume growth, if you could tell us? And for the coming year, given that you have some facilities that have come on stream, what's the guidance in terms of volume growth?
I think the volume growth for the year as a whole was about 2% only. But, the initial quarters were a bit, low. So on a Q4, we have about a 7% volume growth, which is very healthy and which has also given us a much higher, about a 7% increase in the operational EBITDA to about 455 crores. So which is about 1,800 odd crores annualized number. which is going to be much better than the FY24 for the year as a whole. And, we've been again impacted by the currency losses in Nigeria and Egypt, which are very substantial this year. And other than that, I think, the flexible packaging, the aseptic packaging, the holographic, and other substrates like chemicals, every business is doing exceedingly well. It's only the films business that has seen a lower volumes as well as a lower margin. But I think in the last few days, we've seen about a 10% increase in the prices in the BOPET films in India, I think, which augurs well for the industry. And so this is without any corresponding increase in the raw material or other costs. So I think in the quarters to come as well as, this should augur well.
Mr. Bhatia, good afternoon. Thanks a lot for joining in. This 10% price hike that you spoke of, is that at an industry level or is that at a company level? So if it is at an industry level, would you as a company look to increase prices as well?
So it's at an industry level, first of all. So everybody is looking to, has done its bit in terms of the price increase because the prices had become far more unsustainable. And I think even at the current level, people will make, people may not make losses, but, still, I think the prices are way below, what the normal levels should be. So
all right, all right, Mr. Bhatia, before we get to the margin outlook, give us the spreads since the prices have increased on BOPP, I think you said, or BOPET. First, tell us what is your mix currently in terms of revenues from BOP as well as BOPET, and what are the updated spreads at current reckoning?
So we have about 30% out of the films business, about 30% is the BOPP.
Okay. And what are the spreads, sir? We lost you on that.
So I can give you a blended margin only. I think currently we are at about 11% overall EBITDA margin for the packaging films business.
But what explains the decline in the margins overall, Mr. Bhatia? It was down to around 10% from 12% in FY23. Do you see that normalizing back to around 12 or 13% in FY25?
So if I see the last two quarters, including this quarter, the operating profits margins are about 13%. So they've been in the range of 12.5% to 13%. I think with this 10% increase and also, some of the investments that have come on stream in the current will come in the current financial year. I think we'll look at least, over the current year, we should be easily looking at a 2,000 crore plus EBITDA levels in FY25. And that seems quite doable given the Q4 run rate and Q3 run rate as well. So I think we're very positive on the volumes. Aseptic packaging, we've done the highest ever production, and this year we were constrained for the capacity, so we couldn't have done much better. Against a capacity of 7 billion packs, we actually sold about 7.4 billion packs in FY24. And our exports are also resounding. We do export about 40% of the aseptic packaging from India to global markets.
All right, just to get that number correct, sir, on the aseptic business, it is 7.4 billion packs.
Yeah, is what we sold in FY24. We have a commissioned capacity of 7 billion packs at our Sanand plant, and we actually did a slightly above that.
Okay, and what does it mean in terms of revenues for the aseptic business?
The revenue would be close to about 1,300 odd crores.
1,300 crores, all right, and that's at optimal levels, right?
Yeah, that's the optimal level for the current capacity, but as we are debottlenecking, and that is currently on. So before the next season begins, the capacity will go up from 7 to 12 billion packs.
Okay, all right. And just to reconfirm, sir, just wanted to confirm that EBITDA you're guiding for around 2,000 crores in the coming fiscal, and that compares with around 1,400 crores, right?
So that compares with around 1,500 odd crores in the current year, because I think we looking at the operational EBITDA and excluding the impact of all these currency deviations and all that. So that in the current year is about 1,577 crores in FY24. And surely we are looking at a 2,000 crore plus number in FY25.
So that's broadly a 25% increase in the absolute EBITDA number on your calculations.
Yeah.
And what about the debt number? The interest cost still remains reasonably high. So if you could give us what is an updated debt number? I recall you telling us that maybe at some point of time you'll start paring down the net. What's the net debt number?
So the debt is about 5,500 odd crores. And as on 31st of March, we've added about 1,200 crores in the fiscal FY24 as we commissioned our Panipat PET chips plant, as we commissioned some of our PCR and the CPP facilities in Russia. So the debt level is now 5,500 odd crores, the net debt level. And we have a scheduled repayment of about 1,000 crores in FY25. We also had a similar sort of a repayment in FY24 as well, which we paid. And we have a similar level of repayment coming in FY25 as well.
One final question, Mr. Bhatia. You spoke about Nigeria and Egypt. How much does that as a geography contribute to your overall top line? Because you've mentioned that you are extremely sensitive to the currency devaluation there. What are the steps that you are taking to offset that pressure that is coming in from these geographies?
I think they are more or less, the losses because we have to convert from their respective currencies to reporting currency, first to dollar and then to reporting currency in India. But if we look at their standalone, the local level currencies, I think we continue to be in an extremely good position in both the jurisdictions. Egypt, outside of India, Egypt is today our largest, sort of setup outside of India. So they have a substantial capacity, and we are expanding there as well in terms of setting up a PET chips resin facility. So both India and Egypt PET chips resin facility will actually help us to almost complete more than 80% backward integration in terms of our raw material requirements for the BOPET films, which will, I think, is a long-term good for the company, as I said earlier also, we lost in the last few years quite a bit of a margin on the raw material purchases when the markets were at their high. So I think that will provide more stability to the earnings. So the only thing that you will be left to is the market prices of the packaging films. At least on a raw material side, you will have a much more certainty as we go forward in FY25 and beyond.
Appreciate you joining in, Mr. Bhatia. Good chat after a while. You're sounding quite optimistic about the future. The past year wasn't that great, but you're saying on a like-to-like basis, the EBITDA number, the absolute number, will pop up by close to around 25%. And you're seeing signs of pricing improving on ground as well. For the time being, the stock is down close to around 4% because the past quarter's numbers were a little bit disappointing and the year on the whole was quite challenging. We'll slip into a short break. On the other side, we'll be joined by Mr. Agarwal, the Managing Director of Insecticides India. Stay with us.
Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over
the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Back with us on Midcap Radar, onto the other corporate conversation, that is Insecticides India. The company reported a net profit of over 7 crores and an EBITDA gain of over 8 crores in the quarter. We have Rajesh Agarwal, the managing director of the company, joining us now to discuss the quarter gone by. Mr. Agarwal, good afternoon. Thanks a lot for joining in. What explains the drop in margins this quarter, Mr. Agarwal? The margins are down year on year and on a sequential basis. For the full year also, the margins are lower. Are you seeing this trend stabilizing as you head into FY25? What's your call on the margins now?
I would say that in last year, if we look at the year as a whole, then we have made a recovery and we have posted a PAT margin of roughly 100 crore plus, which means that the strategy is working out, because the time was very, very challenging when the prices, we saw falling prices after COVID, and there was high price inventory, which was troubling in the previous year. We had the impact in 23-24 also. There was some partial impact, which was very much there. But now we see that whatever inventory is there in the system is the low price inventory, and the monsoon is looking good. So overall, I believe that we should make a recovery in our EBITDA margins. We are moving towards a double-digit margin on a EBITDA level, and you will see that slowly this growth will come in the PAT margins also reasonably. And our star products, which are particularly the Maharatna products, they will also grow with time, because this was the strategy which we played in 23-24. And it played out well, I would say, because our products have grown by almost 27%, the Maharatna products. And from 51%, the entire sale of B2C has increased to 59% for these products in particular. And with the new launches also coming in this year, and the last year launches also going ahead, I believe that this will support the company in improving the margins.
So do you stick to your FY25 revenue growth guidance of being in double digits as well? You had mentioned that at the end of Q3. Do you stick to that as well?
Yeah, definitely. We see a double-digit growth possibility in this year, at least in the B2C segment. But in the international business and IBD also, I presume a similar type of growth.
All right, sir, if you could help us out with what is the split between B2B and B2C?
Generally, our B2C is roughly about 65%, roughly.
Got it.
And,
okay.
Yeah.
So B2C is 65%, and out of that, the contribution coming in from Maharatna is approximately 59% of that 60.
Yes.
59 of that 65%. And you see this number move up from 59% to what levels in FY25 and FY26?
There will be a continuous improvement, actually. So we target 65% in next 2 years. So slowly keep on improving. And at the same time, the absolute number will show more increase. Like in the previous year, from 51, it has improved to 59. But overall growth is 27%.
Got it. What about exports, sir? Exports are a small proportion of your business, I think 5%. But there are various challenges out there. So if you could tell us, how do you see exports shaping up in the coming year?
Because all the challenges which are for any general industry, we also face those challenges in the international business. But now we are bagging more registrations, and we believe that this year we should see our entry into the advanced markets of South America and also in Europe, so which will support us. And we also see the business increasing in ASEAN countries as well as Middle East and Africa. So we have the target of improving on our export segment also, at least 40 to 50% from here where we are. And definitely it will keep on growing for us. So at the moment, yes, the contribution from export is very, very low, but you will see a definite increase in this percentage.
So from 5% of the total mix, you think in the next 3 years it will double to 10% of the mix? That is by FY 26-27?
Yes, that assumption can be taken, yes.
Okay. And what is the profitability difference between exports and domestic? Is exports better, is domestic better, or there's no difference in margins?
Broadly similar, actually, because it depends on the product mix, what type of tie-up we have and what type of products are going. So yes, in future we see the export happening or increasing from the new generation products. So yes, there will be some advantage.
What about product launches, Mr. Agarwal? You had mentioned earlier that you plan to launch around 7 to 8 in FY25. Are these plans on track? And if you can give a timeline on as to by which quarter do you plan to launch these products?
Yes, in the first quarter itself, there will be launch of 3 to 4 products. And then the further products will come in the second quarter, because there are some products which are pertaining to the Rabi season or the winter season also. So these launches are in line and their products will come. In the previous fiscal also, we have launched about 8 products and which have contributed roughly 50 crores. But if I go down the line to from FY20, then these products have contributed more than 500 crores to our turnover, which means that people are appreciating, the market is appreciating our new product range. And these new product range, whatever is coming in our Maharatna segments with higher profitability. And we are trying to build a premium business for our company so that the profitability can be built, not just the volumes or the numbers actually.
All right, Mr. Agarwal, pleasure as always. Thanks a lot for joining in. Wish you good luck for FY25 and for your new product launches as well. That was the management there of Insecticides India sharing their outlook for FY25 and a timeline on the new product launches. The stock, though, is down 5% in today's trading session. Time for a short break. We'll get you more on the markets and specific stocks on the other side. Stay tuned.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines. 25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. Well, just highlighting a couple of stocks. Nava Limited, well, their Zambian arm has got the go-ahead to add 300 megawatt of capacity at a cost of around $400 million. So explains why that stock from the low point of the day has seen a fairly good recovery. And the other one is RCF. You know, the start of this week I highlighted that the delivery volumes were rather large. So that stock as well from the day's low has seen a bit of a spike up. But Campus Activewear, that's the stock of the day. Mangalam joins us to run us through a quick analysis on those numbers. Mangalam?
Well, it's a decent set of numbers that have come in from Campus Activewear, and after a lot of underperformance, the stock has finally managed to cross its IPO price. Remember, at record levels, the stock was closer to 600 rupees as well per share. So, this underperformance is now coming out for Campus, and that's because there are signs of some recovery. The revenue for the company in the fourth quarter grew by about 4.5%, but that led to a higher growth in the EBITDA, and as a result of which the margins came in around that 17.6% mark, which is a 130 basis points improvement. The net profit also, as a result of which, grew over 40%. And, the internals looked pretty strong as well, where the management said the second half of the year actually did well because of their renewed focus on the trade, and at the same time their average selling price also was more or less flattish, while the company managed to repay debt worth over 150 crores, become net debt free, and at the same time reduce their working capital days from a little over 100 to a little less than 80 as well. So all those factors working well for Campus Activewear. In fact, we got a note coming in from Kotak as well this morning, where they have an ad rating with a target price of 285 on the stock, saying that there was a good beat on profitability, and they believe that the multi-brand outlet channel for the company grew at around 7.5%, which was higher than the overall 4% volume growth that the company posted. And add to that, they had a word with the management, who guides for near double-digit growth going forward if the macros are favorable, with margins in that 17 to 19% band. So all these factors working along with the earlier underperformance of the stock, and that results in a big spike in the shares of Campus Activewear today.
Pretty active is Campus Activewear, 16% higher, and this surge has not only taken the stock past its IPO price in the terms of the intraday high, which was 296, the IPO price was 292. It's also turned positive for 2024 courtesy this surge. Now 15.5%, almost 16% higher is Campus Activewear at 290. But with that, it's a wrap on this edition of Midcap Radar. From Nigel, me and the team that put this show together, thank you so much for watching. Your Stocks takes the action forward.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
In the last couple of weeks, the aluminium prices have spiked up, but they've been fairly volatile. There have been sort of $100 swings each way, currently running at $25.50. I think that, we are sort of working with the fact that the numbers are going to be a little bit more stable around 2,400 rather than the current 2,550 or 2,600. I think our input cost, especially coal cost, there's enough coal available. So I think our cost of production in Q1 is probably going to be a couple of percentage points even lower than Q4. So I think that the EBITDA per ton in Q1 will be certainly higher than the Q4 $967 per ton.
My role would be focusing more on strategic financing and M&A, because I think that these are very important things that the company is now looking at to transform itself into a global top 10. I think, this role is going to be, more, as I mentioned to you, on strategic financing, M&A, and I would also have, to be involved a little more on the subsidiaries itself. Ashok Leyland has a lot of subsidiaries which are today, on value generation mode. So this is another part of my role where I would be interfacing with the management of these companies to look at opportunities for.
Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a day which is down for the market. So we have the Nifty, which is down around 135 odd points. The Sensex, which is down around 500 odd points at this point in time. The Bank Nifty, which has given up a gain of around 1 odd %.
and the mid-cap index, which is also in the red but doing relatively better. Advanced decline ratio on the declining side. We have a lot of stocks to cover, considering that we have a whole host of cues to watch out for, and the big one, top of mind, would be the election verdict. We have the exit polls on the 1st and the final verdict on the 4th. Well, joining us this afternoon, we have Rajat Bose of rajatbose.com and Astha Jain, research analyst at HEM Securities, to answer all of your queries. Rajat as well as Astha, welcome to the show. Well, Rajat, as always, before we kick off the show, what are the technicals telling you today?
Good afternoon to you both, Ekta and Astha. Thank you for having me. Now, coming to the index, I would say that, tomorrow is the monthly clearing of futures and options. So the actual weakness in the Nifty is likely to come tomorrow. But today it has managed pretty well because it has not fallen below 22,700. If 22,700 gets taken out, then there would be a further fall. But so far as 22,700 is not taken out, it can always show a counter swing. Regarding the Bank Nifty, what I would say is that there is a gap down fall in the Bank Nifty. If the Bank Nifty were to fall below, say, 48,300, then you would expect that 48,000 might also be tasted. Otherwise, there is not much about these two indices. Regarding the CNX, it is still managing pretty well. And what I would like to comment on is the India VIX. India VIX, we are still better off because it has not crossed 25 and sustained there. If it were to do so, then increase in volatility would suggest that there would be more profit taking and some stocks may get into downtrend. That kind of a scenario we can envisage.
Okay, all right. Well, the Met Department has said conditions continue to be favorable for a monsoon onset over Kerala in 24 hours. So that's pretty much generally when the monsoon does, come through in Kerala. It's the end of May, around the 30th, 31st. So that's what we can probably expect from the Met Department. Conditions continue to be favorable for the monsoon. But Vinod now writes to us from Hyderabad. He holds 6,500 shares of RailTel, which he's bought at around 388. He wants to know if he can hold his shares for the longer term. RailTel is what he's bought it at. He's sitting on a profit at this point. Astha, what would you recommend on this?
Hi, good afternoon, Ekta. Good afternoon, Rajat sir. So talking about RailTel, first of all, the results were a mixed set of a bag because although we have seen a growth in their quarterly results, but their financial results, the PAT was a decline. So now the major positive point for this company is their order book, which is at around 4,700 crores. So order book is strong. In fact, now they have, when they have entered into the agreements with one of the company by the name of Quadrant. So I think for the participation in the Kavash tenders, so that can be the growth driver for the company going ahead, because the company is expecting 4,000, 5,000 deliveries from this agreement. So I think this can be the growth driver for the company, and in the longer term, the company may perform, but in the shorter term, due to not very strong set of numbers, we can expect further downside. My idea here is to stay invested in the counter for the initial price target of 455, 460, but horizon should be medium.
Okay, all right. Well, we do have, what about the technicals, Rajat? On RailTel, it's given returns of around 40% in just the past couple of months. How much more do you think it can probably go? And your target price and stop loss?
Ekta, this investor actually bought the stock on the day it posted its all-time high. And that was 28 February when it touched a high of 494, and the 488 happened only on that day. So if you buy the stock when it makes its 52-week high or all-time high, it's chronicle of a pain foretold kind of a scenario. So now I would also say that there is a possibility that it may come down, but so long as 394 is not taken out by the stock, it has got potential to bounce back again. And for the bounce back to sustain, it needs to move above 450. But by any chance, if it were to fall below 394, you can up to a maximum of 375, you can wait. After that, you need to get out of this stock. Otherwise, there will be greater pain.
Okay, all right. Well, we now have Sagar, who writes to us from Mumbai. He holds 136 shares of Anand Rathi Wealth, which he's bought at around 3,636, and 70 shares of Nuvama Wealth Management, which he's bought at around 4,940. He wants to know the future prospects of both of these investments at this point in time. So he's sitting on a profit on both of them, and interesting bets considering the kind of gains or the kind of interest that we are seeing in terms of the markets, and that's not supposed to wane off. So from that perspective, Asta, what would your approach be on both these counters?
So talking about Nuvama, first of all, because we don't cover Anand Rathi, so I can comment only on Nuvama. We are recommending buy as well as hold on this counter, and there are strong reasons for giving buy because the kind of performance which this company has posted in their quarterly results as well as yearly results, I mean more than 100% rise in their top line, 51% rise in their bottom line. I mean very strong numbers posted by this company. Apart from that, they have a dominant in the niche position in the ultra HNI and HNI segment, and with the continuous addition of the RMs also, the company is poised to post strong future growth in the coming years also. So I think Nuvama is a very strong counter, recommending a buy as well as hold. Price target can be set at around 5,500 levels. But for Anand Rathi, we don't cover this counter, so cannot comment on this.
Okay, technically both these counters, Rajat, how do they look to you?
Well, regarding Anand Rathi Wealth Management, I would say that this has had a phenomenal performance. Say in less than a year's time, it has pentupled. It has moved up 5 times from levels of 800 to 4,100 plus. So the long-term trend is up, the medium-term trend is up, and the short-term trend is sideways. So I would say that since it is above most of the moving averages, especially the 20-day and the 50-day moving average, it should be held. And if one were to put a stop loss, one should put a stop loss around, say, 34.50. Before that, this is a trending counter as far as its long term goes, so one should continue to hold. The other stock was Nuvama, right?
Yes.
Nuvama short term trend is down, but it has actually completed its short term correction and it did not fall below the 50-day moving average. It did fall, but it bounced back. And now it is above the 20-day moving average, in fact, above all the short-term moving averages. So I go with the same assessment that one should continue to hold this along with Asta. She recommended fundamentally and technically also it should be held. And these stocks too, one should keep a stop loss below a say 4,400 and continue to hold the counters because they, Anand Rathi of course is much better compared to Nuvama, but quality-wise, even this stock should be.
Okay, all right. Well, let's get in another query now. Suresh writes to us from Chennai, holds 100 shares of Alembic, which he's bought at 565, wants to know what to do, stay invested or book his profits. He's doing well on this particular counter. And in fact, talking about numbers from the pharmaceutical space, we had Ipca Labs and now Alchem, which is reported. Alchem reported a marginal increase in terms of their margins, but the profit is below the CNBC-TV18 poll. But in any case, what would your call be, Asta, on Alembic Pharma as well as maybe Alchem?
So since Alchem is just posting its numbers, so we really need to see the numbers in detail. Prima facie may be not on the expected lines for Alchem, I can say. Now talking about Alembic Pharma, although they have shown some sort of a growth, especially single-digit growth in their top line. But the problem is coming not from the US business, but from the domestic business, because what we have seen that their US business is performing very good, but we have seen some sort of pricing pressure in the domestic business, as well as API business is also seeing some sort of pricing pressure. And that is why the company is not able to produce strong set of a number. Another major factor regarding these sort of number is that they have a strong base in the last year, especially in their anti-infective and respiratory therapies in the domestic business. So that has also created, some sort of a problem in posting strong set of a number this year, maybe this quarter, I should say. So talking about our overall, I mean, it's a hold from my side. And since the investor is already getting strong profit, so my idea here is book some profit and partial book some profit and hold partial quantity with a price target of 1,050 to 1,100. But partial profit booking is also advisable at this point of time.
Okay, all right. And what about you, Rajat? Technically, how would you approach Alembic?
Technically, I would say it's a sell and one should sell it. The reason behind that is between 2020 and 2021, again, this 950 to 1,100 range. At that time, it took a longer time to do the distribution and then it failed to below 500. And that was last year. And from there, it has moved up. Now, again, if you look at the weekly chart, it clearly shows distribution. And if 900 were to be taken out, you will see 800 or even that 200 week moving average around 750, that will be tested. So since he or she is sitting on good profits, why not book it? Because most of the things in the market is already discounted. What are you going to discount next? That's a big question. So if there is good profit, book it.
Okay, if there is good profit, one should book it. Does that apply to all stocks, Rajat, or are some just holes?
See, unless you are willing to hold a stock for more than 5 years, if not furthermore, then you can stay put. Otherwise, just one simple thing. See, even if we get a 400 par, that is the best case scenario next week. And in that case, what my idea is that the Nifty might go up to say something like 23,700 to about 24,100, that kind of region. Otherwise, anything less, there would be. Even in that case, the profit taking will happen and June will be a very volatile month. And if that doesn't happen, something else happen, something less happen, then also there will be a lot of profit taking, a lot of supply pressure at higher levels. So why not take this opportunity unless you are holding a stock for real long term and you have solid conviction in them and they are really good companies, you should book profits.
Okay, all right, Rajat, as well as Asta, a lot more queries, but we'll take a quick break and be back.
Value enrichment. At the moment, it's a little too early for me to state what the specific M&As would be. As and when they happen, you will certainly come to know of them.
The passenger vehicle, two-wheeler and four-wheeler stocks have become slightly more fairly valued versus last time. Incrementally, I'm a bit more bullish on CVs because, see, traditionally what we've seen with CVs is that it goes through deep down cycle and a sharp up cycle. But the sustained momentum in the economy today could mean that the last 1 to 2 years of consolidation we've seen in CV volumes, unless we see a bit kind of global recession or big unexpected shock, we might see the CV cycle bottom out at these flattish volumes.
The car. We are in fact here at Yerwara police station. There are 3 FIRs right now which have been registered in the Pune Porsche drunk driving case. One of the FIR is by the driver's family, who would allege it that that he was kept illegally confined inside the staff quarters at the family household. He was in fact, he had also mentioned that he was kidnapped and was not allowed to speak to his
Welcome back. You're still tuned into Your Stocks. We have with us Rajat Bose and Asta Jain to answer all of your queries. Well, we have Kumaresh Bapu, who writes to us from Tamil Nadu now. He holds 11 shares of Adani Wilmar, which he's bought at around 383.9 rupees. So he's sitting on a marginal loss there. He wants to know what to do with this particular investment. Rajat, what would you recommend on the technicals?
Technicals, it is moving sideways. The gradient is down, but the movement is so slow that it is more or less a sideways movement. However, if it were to fall below 320 or say even 300, in that case, there will be much further fall. And unless it takes out the levels of, say, 360, 65, where the 200 exponential moving average is located, it would not give any significant upside. Significant upside can only happen when the 200-day is decisively taken out. It tried to do so in the month of March. It did not. Hence, it is coming down again and continuously distributing.
Okay. What about you, Asta, on Adani Wilmar?
So recommending hold on this counter. Initial price target can be set at around 395 to 400 for the medium-term perspective. Talking about this counter, because they have expanded their distribution reach, so that is reflected from the improved market share in some of the segments like atta as well as mustard oil. Going ahead, we believe that growth will be coming because now they have the already working on improving their brand mix, increasing penetration, increasing their reach, as well as declining raw material prices has also helped the company in past also posting strong set of a number that is in the Q4 of FY24. And this will be continuing. So on the basis of all these factors, we are positive in the longer term, recommending hold, not a buy, but yeah, hold can be maintained on the stock with a price target of 395 to 400.
Okay. All right, Adani Wilmar, that stock up around 2% odd. Shafi now writes to us from Andhra Pradesh, holds 1,000 NTPC shares at 171. So sitting on a profit, wants to know what to do in the short term. And what is the short-term view on the stock? Well, Rajat, what would your short-term view be on NTPC?
The NTPC so far has maintained its uptrend pretty well. Intermittent corrections continued to happen and it moved up in a more or less 45-degree angle kind of a thing. So that's a very strong uptrend. It's not like skyscrapers or parabolic rise that has happened. So NTPC, I would suggest a hold because it is not falling below the 50-day moving average. It did fall in the month of March, but it quickly recovered and it still has potential to move further up. So on the upside, if 380 is taken out, then 405 to about 410 would be the target, and one should put a stop loss below 350.
Okay, stop loss below 350. That's the word coming in on NTPC. Pradeep writes to us from Pune. He holds 50 shares of Berger Paints, which he's bought at around 492. Wants to know what to do, whether to hold or sell at these current levels. So Berger Paints is the stock in focus. He's just about breaking even or maybe just about sitting on a marginal profit on this one. Asta, over to you. We've discussed this with regards to Asian paints. You know, you've spoken to a lot of paint companies with the heavy competition from Grasim, which is coming in. In that context, a stock such as Berger Paints, what would you view it as? And fundamentally, is it a good call?
Recommending a hold on this counter on the fundamental basis with the price target of 525 to 530. So talking about this counter, they have shown volume growth, especially if we see this sort of volume growth, it is coming due to their putty and due to their adhesives segments. And in fact, they have launched new and innovative products also. So that is also helping the company in posting strong volume growth. So what we are believing that company will continue to show this sort of a strong financial performance in the quarters coming up. And that is why recommending just a hold, because even we want to see that whatever we are expecting, company will be doing that on the expected lines or not. So not recommending a buy, but yes, a hold from our side, 525 to 530 can be set as a price target.
Okay, and what about you, Rajat? Berger Paints?
Well, Berger Paints is actually a leader in the eastern side and it does pretty well. But the point and the other metrics, apart from what Asta said, that it also maintains a 3 to 4% advertising budget. but I have not been able to find out as to how much Grasim would be spending. Asian Paints spends about 1,200 crore on, say, advertising, and this also spends quite a bit. So if the ad spend is pretty high and other things are pretty good, then Grasim will definitely give Asian Paints a run for its money, and Berger will continue to be the second and the third. So I would also say hold on to it because it has already corrected so much. If you have to put a stop loss below 450. And on the upside, if it were to cross 520, then 550 might be scaled up too. But do not expect the yesteryear's gains in paint industry, at least not for the next 2-3 years, because 2-3 years there will be massive competition. Indigo Paints and others are also catching up, so there will be a lot of work.
Okay, all right. We have Lakshman now, who writes to us from Andhra Pradesh. He holds 1,000 shares of SBI, which he's bought at 287. He wants to know if he can hold the shares for another 2 years. So his outlook is to hold SBI for another 2 years. Let's go over to you on this one. Astha, what would you recommend? SBI, it's a portfolio stock. Another 2 years is the horizon.
Yes, in fact, when results came, we were discussing that time results also. And in fact, my stand at that point of time was also that remain invested in the counter with a price target of 900 to 950. So I am continuing with that stance. Yes, we are recommending hold it on this counter because the results were exceptionally well, especially their core operating performance was strong. And in fact, whatever management has guided regarding maintaining ROA as well as giving the credit growth guidance of around 13 to 15% is looking very well for the stock, and that's why we are positive on this counter, recommending a hold for the price target of 900 to 950, but 950 is a longer term target. Initially 900 can be kept as a target for this counter.
Okay, all right. And SBI and PSU banks in general, how would you approach them, Rajat, technically?
See, SBI, I would say, since the purchase price is so low, one should continue to hold it, and one need not get out of it because it has the investor has got so much of cushion. And regarding the target on the upside, even I would say that 900 to about 950 would be the immediate target. Of course, one can see a lot of volatility in the next month, but SBI is worth holding for the long term. That is good. Apart from that, I would say that if you are planning to purchase public sector banks, wait for the month of June. You will get them on volatility. They will also come and correct. At that point of time, Canada Bank, Indian Overseas, lots of banks are there you can buy. I mean, there are lots of good banks one can think of buying.
Okay, all right. Rajat as well as Astha, it's always a pleasure listening to your views. Thanks very much for joining in and giving us all of your perspective that you do have. That's on Alchem Labs. The revenue in terms of the US has come in just about a little lower than what the street was anticipating. I think it's at 75 million or the opposite. We'll just wait by for that flash to come through again for Alchem. But over $70 million is what they have done in terms of the US revenues. For the markets, it's pressured for sure. So we have the Nifty, which is down around 134 odd points. The Bank Nifty, which is really the key culprit today, so it's lost almost around 600 odd points at this point in time. Top losers in terms of the Nifty include SBI Life, HDFC Life, both those stocks down 2.5 odd percent. ICICI Bank, which has lost around 2 odd percent in today's trading session, and giving it companies something like an Axis, which is down around 1.7% as well. On that note, that's all the time that we have on the show. But do remember to email us your questions. We'll address them with our experts. Closing bell up next.
Long time. Now this car is the car which was used to pick up the driver. Cops have now taken this vehicle into their custody. In fact, my Vijay Vasant will show you visuals of how there is a notice that has been put in the car as well. In this very car was where the driver was taken, following which he was kept illegally confined. Now cops have taken this very vehicle, they've seized it and kept it in the custody at Yerwara police station. Along with that, the Porsche car also in this case has been kept just a few cars away from this vehicle. Yesterday at this very spot was where technical analysis of the car had taken place. This is a part of the investigation, so this car would also be used for further investigation in the case. So this is the progress of the investigation so far at Yerwara police station. But parallelly, when you speak of the blood samples, crime branch is looking at that case. Details in this very case emerge, show how the sequence of event that took place on Sunday. At around 11 a.m. on Sunday was where the blood samples had reached Sassoon Hospital. Both of the accused in this case were using iPhone. So they had made a WhatsApp call so that the call cannot be traced. Through that WhatsApp call is where the conversation took place. It was Dr. Ajay Tavre, whom the father of the accused had spoken to, asking for the blood samples to be changed. On the recommendation of Dr. Tavre was where the CMO, Dr. Halnoor, ensured that the blood samples are changed. There's a middleman that could possibly be involved. Cops are trying to investigate and find out who that middleman actually is.
Domestic economy seems to be having more momentum, higher growth, better macro stability than the global economy. And two is that even from a valuation perspective, some of these themes we think are, given the kind of growth that may happen, given the kind of multi-year cycle they are in, we think the valuations are pretty reasonable. But once you recognize the risk profile, I think such a big event, you're better off not taking too much risk. So I think it's perfectly natural for like a fund.
The Hang Seng continues its streak of underperformance. It's down over 1.5%.
Novelis, it has kick-started its IPO process with the investor roadshows for an NYSE listing.
On the way up, of course, I mean, 23,110 is the immediate upside level, and beyond that, you look at fresh highs.
Adani Group, we understand, is one of the potential suitors that Vijay Shekhar Sharma has directly engaged with.
Mid-cap index is down about 0.4, Sensex is down 0.3.
The local economy should continue to grow much better than the rest of the world.
The EBITDA has grown by about 13%, margin improvement of around 130 basis points.
The 0.6% gone in the benchmark indices, the mid-cap index in the red now.
90% of these 54 stocks they've identified have outperformed the Nifty in the last 6 months.
Registered weak set of numbers both in Q4 FY24 as well as FY24 on a full year basis.
The current establishment is voted back to power. The medium-term GDP growth, the participants see it anywhere between 7 to 8%. Bit of a recovery on the index as well. The S&P has affirmed the rating. The rating remains the same, but the outlook has been revised to positive.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, caution once again this Wednesday afternoon with the markets down. Nifty is down 100 plus points, 150 nearly. The Nifty Bank is down more, is down 1% on the day. Broader markets are flat. So it's just once again, I think, a one-day closer. But the waiting game is very much on. It's kind of painful, but that's where we're at. We're, of course, coming to you from the CNBC-TV18 Motilal Oswal studios. This is Closing Bell. I'm Prashant. With me, my colleagues Reema and Surabhi here. Nigel is joining in from the newsroom floor. Guys, good afternoon.
Good afternoon. And speaking of waiting, it's the same feeling, right? Waiting for the rains, waiting for monsoon, waiting for June 4. And I think both will arrive at the same time. Clarity in terms of elections and perhaps the monsoons here in Mumbai.
The proverbial rains, huh? Are you referring to the actual rains?
Well, we'll have to see.
But yeah, I mean, it's just waiting. And I think that's what markets are doing. It's a little bit down, a little bit up. That's essentially what's happening across range of stocks and sectors. So, you want to look at technicals, etc., but you want to be a little cautious with this because this is all, of course, it's not even pre-positioning ahead of results. It's just a little bit of risk reduction more than anything else because, you really can't take a view. It's not as if it's some economic data where there is, of course, there is consensus expectation, more so like a base case outcome of the elections. But in that sense, I wouldn't call this pre-positioning, just a little bit of caution. So we are on the Nifty and the Bank Nifty under the 40 hourly average, hourly exponential moving average, both on the Nifty and the Nifty Bank. So, to that degree, maybe a little negative, but broader markets are flat to even slightly higher. The last I checked, the small cap index was up 1/3%, declines more than advances, but again, not by very much. And there is Pharma as a pack, which is doing well. It's turning out to be a good last 4-5 days. Metals are higher. Hindalco, Nigel will talk about that. And PSUs, which are not up wildly or anything, but look at defense names, shipbuilders especially, Cochin, Mazgaon, Garden Reach. PSUs are doing well. And defense, of course, remains a strong theme. Rima.
Well, if you pull up that intraday chart, when S&P revised the outlook for India to positive, there was a bit of a spike that we had intraday, but that's been sold into. And once again, the Nifty is now down, not in the day's low, but it's still significantly lower. That spike you saw closer to, between 12:30 and 1 is when that S&P news came out. And now we're down 150 points in the Nifty, Sensex down close to about 560 points. Banks are underperforming for the second day in a row. The Nifty Bank is down close to about 1.5%, declining for the second day. And we were hoping that this week we make that march towards 50,000. But in fact, we've retraced quite a bit. Today, ICICI Bank, Axis Bank, HDFC Bank continue to see a fair amount of weakness. On the way up, it's Hindalco, a couple of these Adani Group stocks like Adani Enterprises, Adani Ports, and throw in even a Power Grid, which was higher yesterday. Which was under pressure yesterday, but today it's higher.
Absolutely mixed trends, but more red than green. I guess that's the short point. Just on the S&P upgrade of the outlook, not the rating, but the outlook. So 3 key points they cited as to why they've done that. Number one, very strong GDP growth in India. Number two, the improving quality of fiscal spending. And the third is the commitment that they see, the government's commitment towards fiscal consolidation. So that's why they've upgraded the outlook. Now, will they upgrade the rating itself? To that, S&P has clearly laid out, a couple of conditions. They're saying, first of all, central government debt must fall to less than 7% of GDP on a sustained basis. That's when they'll think of an actual ratings upgrade. And second, of course, reforms and stability and the cautious stance on, fiscal consolidation, fiscal prudence, that should continue. And then they'll take a call on the rating. Interesting, of course, that this comes in before the election verdict. And that's what S&P is saying, that, this is agnostic to whatever is the electoral outcome. So that's S&P. We'll discuss this with a guest in just a bit. But something else that caught my eye was the selling in life insurers today. So a lot of the private sector life insurance names, there you go, very clear-cut patterned out there. And ICICI Prudential is falling a little more. We'll ask our guests about this as well. The 3 main life insurers, also even LIC for that matter, most of them under pressure. Nigel.
All right, guys, I'm looking at 2 stocks and both those 2 numbers will come post-market hours. One is Tata Steel, because we'll have to keep an eye out on the European business. Last 5 quarters, it's been making losses. For the time being, the stock is more or less flattish. So on Europe, what could happen is something that we'll be keeping an eye out on. Can those losses reduce? We are working with a net loss number on the European business of roughly around $85 to around $90 odd. So can it be less than that? That's going to be a key trigger that the street will be looking forward to. And the other one is Cummins. Again, another stock that's more or less flattish, but it's recovered from the low point of the day. So 2 big numbers, and the market reacts to these numbers. That's why I'm just pointing both these 2 stocks up, both of them as flat as can be. Shrikant Chauhan is with us, though, to help us with the trade on the index. Hi, Shrikant. Good afternoon and good to see you in. Well, we'll be having the Nifty Bank that will swing along in the next 60 minutes or so. For the time being, it's down 600 points, and it's not able to recover a goodish bit. What's your take on the Nifty as well as the Nifty Bank?
Yeah, good afternoon, Nigel. Good afternoon, everyone. Well, for Bank Nifty, the view is that it is oversold. It is very close to its crucial levels, but because it's a monthly expiry, weekly expiry for the same, we are of the view that near the expiry, most of the time we see a lot of pressure at certain levels. So till the Bank Nifty is not again coming back to the levels of 48,800, it is going to remain under pressure. But in case if we see any furthermore decline in today's date, then close to 48,300 levels, we should look for adding Bank Nifty with a positional view, with a view of at least next 2 to 3 days. For the Nifty also, the view is almost like of the same, that if there is any correction or even at current level, it's a buy with a stop loss close to 22,600. We are expecting market to rebound back to the levels of 23,000 in the near term. So at current levels, it's a buy. But for Bank Nifty, I think it is better to wait for some more time.
What would your stock picks be, Shrikant?
Okay, then in that case, I would like to go with Nalco, National Aluminium, because yesterday, despite these strong numbers, the stock fell to its important support levels of 190, 188. The volumes were much above the average volumes. And that's the reason we are of the view that it is very close to its crucial supports and there is a buying interest. Even the entire metal sector is doing well. So in that space, Nalco looks good to buy even at current levels with a stop loss at 193. We are expecting stock to move towards 210, 250. And the other stock which we like is State Bank of India. The reason is because it is down, but it is very close to its support levels of 825, 826. And whenever the stock has fallen to these levels, we have seen recovery up to 840, 855. So at this level, risk reward ratio is quite favorable. It's a buy at current levels with a stop loss close to 815 for the target of 845.
Okay. All right. Shrikant got that. We'll come back to you for some more trades in just a bit. Now let's get you that promised take on S&P's view on India, the fact that they've upgraded the outlook on the country, and sovereign ratings, of course, remain unchanged. We have Lakshmi Iyer joining in from Kotak AMC. Lakshmi, good to have you on the show. So interesting, coming just days ahead of the big event. And, I was just outlining the reasons. Basically, they're saying that the commitment to fiscal consolidation looks good. The quality of fiscal spending is increasing, all of that. But how do you interpret the market reaction to it? Not much on equities, but does it move the needle at all for the bond market?
Well, if you ask me, in the very near term, will it have a significant impact? Would be the answer is probably not. But it's definitely a huge psychological or a sentiment booster, because this is kind of crystallizing two things, at least in the mind for now, that this gives a lot of confidence or a leg up to the foreign investor who otherwise has been kind of doing a little bit of fence sitting, both on the equities and fixed income side. They've been kind of dribbling money into the markets very recently. So I think that leg up comes in very close to that, index inclusion actual date slated for the end of this month. And secondly, obviously, they are kind of endorsing the fact that there is clearly a diversion of spending towards the productive sectors. And of course, this will aid in overall fiscal deficit reduction. So I think it's a sentimental boost. Eventually, will it play well into the markets, both capital markets and bond markets? The answer is yes, but don't expect miracles overnight.
Lakshmi, I'm surprised you're saying FPIs are fence-sitting when it comes to the bond market. They've pumped in 50,000 crore rupees, right? The net outflow from the equity market is about 20,000, but 50,000 crores has gone in. So just your thoughts, because you mentioned the index inclusion as well. From a FPI flow perspective, further movement of flows and then the movement of yield, what are you envisaging as we actually get to that event of the inclusion?
Yeah, so the pace at which they were deploying has obviously slowed down, because US yields also have been playing a very critical role at 4.5 levels on the US 10-year. There is obviously some natural tendency to buy the US Treasuries also, and obviously the gap between the both yields are pretty narrow. So that is number one. Number two is obviously compared to equities, they've been pumping in more money into Indian fixed income. And we believe that trajectory is likely to continue. Announcements like these, though there is no actual rating upgrade, but at least the FPI making an allocation to India will definitely consider this as a positive stroke to lead into better outcomes as we march ahead.
That inclusion, Lakshmi, hi, good afternoon, is end of next month, the bond inclusion?
Yeah, 28th of June.
28th of June. By the way, we get stock market types and we ask them about the election outcome and what markets will do. Let me put that to you from a bond market perspective, Lakshmi. What are your thoughts? What's the buzz around elections? Because that's a big one.
Yeah, so the bond markets already got their buzz or bazooka through the dividend payment, to the government. So I think that was a bigger news, and definitely, the outcome on the politics front is important. But I think the outcome on the policy will assume more significance for the bond markets. And of course, it's an interplay of both these events, a few days apart. So I think the sentiment definitely will get a massive boost. So, if you're looking at a vociferous, majority, stability is not something which people are doubting. I think that positive sentiment which continues in equity markets will also flow through positively for fixed income, because it has ramifications also on the currency.
All right, Lakshmi, appreciate you joining in and filling us in with all those details. Thanks a lot for giving us that quick analysis. Let's get back to the stock markets, though, and Hindalco, that's one of the top gainers in today's trading session. Let's run you through the details. Well, that's because Novelis has announced that they're going ahead with their IPO, and they've announced the price band as well. Hindalco, remember, is the owner of Novelis, so that's why, in fact, it's a positive rub-off. The price that they're fixed it at is around $18 to around $21 per share. The total number of shares equates to close to around 7.5% dilution. And for the 7.5%, they'll raise anything between 6,700 to around 7,800 crores. Valuation-wise, well, on an equity parameter, it values the company at around $10.8 to around $12.6 billion. But you need to rope in the $3.5 billion of debt. So put that together, the total enterprise value is around $15 to around $17 billion odd. Now, on an average, the street is working with around $2.1 billion of an EBITDA. So then, in fact, 15 divided by $2 billion or 17 divided by $2 billion, whichever way works for you, it'll work out to an EV upon EBITDA of around 7 to around 8 times odd. That compares with the street, which is working with around 6.5 to 7 times. So that's good news for Hindalco, right? Because the street was giving it a relatively lower multiple, while the IPO will be priced at a higher multiple. Post-listing, there will be a couple of challenges, though. Why do I say that? Because the stock is up close to 25% from the time the IPO was initially spoken about. That was in February. The stock was at around 520 rupees approximately. So that's one factor. But and the other headwinds for them will be that an FII, which owns a stock in Hindalco, could be tempted to shift to Novelis, because as a percentage of the SOTP, Novelis is where the value is at. So now they have an alternate way. They can go directly and buy it, if it's listed abroad. And also there'll be a holding company discount that will come in. Keep in mind, today, even Nalco is higher, Hindalco is higher, so it seems an aluminium play that's playing out there. But for the Hindalco to run away from here solely on this news will be unlikely. Brokerages like JPM as well as CLSA, both of them are positive on the stock. So that's about Hindalco. Prakash Diwan joins us. Prakash, what do you do with Hindalco at around 710 rupees? Because the stock has run up a goodish bit. I think for the stock to run up further from here, then the domestic business has to do much better. The EBITDA per ton has to do much better of the aluminium business. The copper, TCRC business has to do much better. Your take?
No, absolutely. So, we spoke about this event that was around the corner. And the best time to look at the stock was when, the numbers came up and the commentary on the capex was something that the street wasn't very well prepared for. And of course, it was followed by the Novelis IPO plans. But, if you look at from 500 to 700, the journey has been fairly quick, Nigel. I mean, 40% in 4 months. I would believe people will look at booking profits for sure. Because post the IPO, you will have to start looking at Novelis as a separate business with its own dynamics, and the kind of the constitution of the shareholding pattern out there is not going to be as simple as what Hindalco is right now. So you'll probably have much more volatility to grapple with, and as you rightly pointed out, it's a domestic business that finally you need to kind of depend on. So I would start booking profits at the 700 plus mark for sure. It's not a bad level to book profits. Wait for the right opportunity after all of this event is played out. And then probably, you could buy it at, even if you were to buy it at slightly higher than what you exit, but with more clarity and visibility coming.
Prakash, afternoon. Would you play Paytm on the hope that maybe Vijay Shekhar Sharma has reached out to some investors, as we've picked up from our sources? Is this a story worth playing?
I don't know whether, his selling stake is going to impact the business directly and immediately. So, I'm sure we'll get opportunities to look at it once, some development happens. Right now, it's too much of assumptions, too much of conjecture. Of course, it's all in the realm of possibilities, Rima, I understand. And the market is latching onto anything that's even remotely positive for this beleaguered name to kind of start looking up. But I would not jump at it, especially in an environment like today's. Just with 4th June around the corner, there's so much of uncertainty, which could kind of take your attention away from even events like even transactions like what you're talking about.
Okay, let's get to one big mover, and that's Campus Activewear. The stock is up more than 15%. Good Q4 numbers after what's been a tough FY24. Mangalam joins in with more. Mangalam.
Indeed, it was a tough FY24 for all the footwear makers, and Campus was, one of the worst hit when it came to stock price as well. From its peak, it had seen a correction of over 40-45%, and it's only after today's move that it briefly moved towards its IPO price. In fact, as we speak, it's very close to its IPO price of about 292 rupees itself. What the street liked this time around was the hope of some growth recovering for the company. I mean, 4.5% revenue growth is a slight improvement versus what we had seen in the first 9 months of this year, and as a result of which the company's EBITDA improved as well by about 130 basis points. The net profit came in closer to 33 crores, and that's a 40% jump over last year. Importantly, there were some good internals. The first part, the company's focus on trade distribution over the last couple of quarters did well for them. That's what the management said. The ASPs, or the average selling price, has remained stable, and add to that, the company has managed in a difficult year to go ahead and repay some debt as well. So 156 crore of debt off the books. Now the company is a net debt-free company, and the working capital discipline has also improved from over 100 days to about 80 days or thereabouts itself. Kotak has written a note on Campus this morning. There was a big beat on their estimates when it came to profitability, and as a result of which they have an ad rating with a target price of 285 rupees on the stock. What they believe is that the management has guided for double-digit sort of revenue growth coming by, and the 4% volume growth was actually led by 7.5% growth in their multi-brand outlets. With margins of around 17 to 19% going forward, with the promise of double-digit revenue growth, maybe some growth recovers, and which is exactly what the street is backing right now, especially after the drubbing that the stock had seen earlier.
Okay, all right, got it. Thank you very much, Mangalam. So that explains the up move on Campus Activewear, and a big one at that. Even on a sluggish day when it's holding on to all of that 16% gain right from the morning. Prakash, hi, good afternoon. I don't know if you buy their shoes. Will you buy their stock now? Do you see this as a potential turnaround story?
No, so I honestly haven't bought their shoes. The stock could start looking interesting now that, all the weekends are out. We've seen the capitulation. It's just kind of crossed its IPO levels. Sumi, what happens is when these kind of companies turn around, you need to still be reassured that this is more secular than just one quarter. Now look at another company, and probably the leader in that space, and that's Bata. Brilliant business, everything is strong in terms of franchise distribution, but certain things, there's something which is missing, which is not making it deliver. Now, if you actually look at from wherever 1750 whereabouts, that was as high, it's actually lost almost 30%, 25% so quickly. Now, whether that can turn around and sustain is a different question, because they have certain other things which probably stand better than Campus. So I would go with a more tried and tested name, especially when rural demand is coming back. It's the likes of Bata that will benefit much more, where they're fairly diversified in their SKUs as well as their price point. So Campus is interesting, sure, but not yet willing to write a check and buy the stock.
One of the, as Prakash said, Motilal was the early holder of the stock. They sold out, and very few mutual funds now own it. One new entrant into the mix is SBI Mutual Fund, which I think picked up stake only in the March-ended quarter, and now I think they own about 2% or so. So that's the new entrant. But otherwise, if you look at the sort of mutual fund list, etc., it's a little light. Of course, after what's happened over the last 2 or 3 years now. But broadly, one is, of course, early stages, and you need more conviction, Prakash. But we've heard this from a few people now over the last couple of weeks, that maybe at the lower end mass segments, you got to start to relook. Maybe it's just because the higher end things have done so well and valuations are so rich, so you're basically forced to look at stuff which is not done well. So is that what it is, or you think there's potential, there's a bit of a turn? Names like,
No,
for example, QSR names also, right? Jubilant Food, etc.
Yeah. No, absolutely. Whether you look at shoes, while Metro is doing extremely well, you end up paying such a premium to buy that stock. And that's why I gave the example of Bata, which is struggling, and it's primarily because of the demand slowdown. The same thing is not just QSR. You look at, even staples. The smaller packaging is yet to kind of take off. We saw some of the numbers that started giving you a certain improvement in volumes, but where the pricing has come back, and that's from numbers like Dabur. I keep on saying Dabur is probably a very good proxy to the right price point, the right distribution presence, the right product mix. And if Dabur were to take off, you will see rural demand come back. QSR is become more of an urban thing, Prashant, in my view. It's kind of, reached a stage where there's nothing much that's kind of leading to a change. It's just the Zomatos of the world that are growing for obvious reasons. So I would believe that you'll probably have to shift money to some of these other things. And the last thing that I want to leave you with on this part, where there's a lot of shift that's happening in strategies from most companies that I speak to, especially on distribution, is that they're looking at the ONDC in a very significant way. Now, if that adaptation is high or rapid, you'll probably see the likes of delivery and all come back. I mean, we've already seen how some of these beaten down, new age, internet-based companies had underperformed post their IPOs, whether it was PB Fintech or Zomato, Nykaa to some extent. Delivery also probably, falls at that same club, but it's made a comeback. I can tell you the numbers start giving you that, promise or the glimmer of hope that things could probably start looking up. And we spoke about this, Mangalam and I had a chat on delivery, I think 2 quarters back when the turnaround started. So I would look at those kind of things structurally, which are far more salient rather than, just certain pockets which are fairly narrow in terms of focus.
Prakash, thank you for joining in. Enjoy the rest of your day. Some stocks worth mentioning. One is Samvardhan Motherson, came out with the Q4 numbers a while back. One, there is an improvement in margin. So EBITDA margins at 10.8% have improved versus 9.2% same time last year. And also there is a reduction in the gross debt. And the reduction in gross debt is quite substantial, close to about 2,000 crore rupees. From about 19,200, the gross debt is down to 17,350. Railway-related stocks are also higher. So Titagarh Rail is up 11%, and Jupiter Wagons is also inching higher now. And the other one is shipbuilding stocks. Another day of big gains. So Mazgaon Docks, Cochin Shipyard too are flying in trade. Get into a break. On the other side, we'll invite Gautam Trivedi of Nepean Capital. Stay tuned.
To go closer to the index, I think that would be perfectly natural and a decent way to handle this event. And typically in a bull run, newer sectors get uncovered.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back. It's almost the final countdown now as we head into the last phase of the Lok Sabha election. Now, interesting opinions are coming through. Nomura has surveyed 150 investors on what they think is going to be the outcome from this year's mega elections and the possible market impact. Hormus is here with the details on this. Hormus.
Well, the consensus from this survey, at least the 150 participants that were surveyed, is that the fact the BJP is going to return to power, at least that is the view of 99.3% of the 150 participants that Nomura surveyed in this. And when we break the numbers down now, among the 150, 83% of them believe that the BJP on a standalone basis would be able to get a majority by themselves. If you break it further down, now there are divergent opinions on how many seats would the BJP win on their own in 2024, whether they would better their tally of 2019 or they would be lesser than that tally of 303. On the better front, there are 45% of the participants. On the lower than 2019 front, we have 36%. But on a consensus basis, the investors believe that the BJP would win 297 seats by themselves and the NDA would win close to around 344 seats, both of which are lower than the 2019 figure. Now, when it comes to the economic outcome, they believe that if the NDA is voted back to power, the medium-term GDP growth would be anywhere between 7 to 8%. But if the India Alliance is voted to power, then that GDP growth figure would slip down to 6.5%, and then they expect major fiscal slippages as well if the opposition alliance is voted into power. Now, what the market is factoring in is that they are factoring in a BJP victory here in the Lok Sabha polls, and any other outcome, according to Nomura, would be a negative for the markets. But this sectors that they expect to benefit if the BJP does win this election is infrastructure, capital goods and defense, something that the government has been laying a lot of emphasis on over the last 5 years. And what they say is that if the BJP wins, it will be a single-digit rally on the Nifty, single-digit percentage rally on the Nifty, because the market has mostly factored this in. If the BJP comes to power with a coalition government but without a majority, there will be a 5% correction there. And if the opposition alliance is voted to power, you might see a repeat of 2004 when the index corrected 20%. But that is an unlikely possibility according to Nomura. So all in all, the consensus on the street, at least for the 150 participants, is that the BJP is most likely to be voted back into power in 2024.
Okay, all right, Arma, just hold that thought. I just want to address a couple of stocks here, Adani Group stocks. As per the exchanges on Adani Green, there's a big promoter buy as well. We should be putting that out on Adani Green. More than a crore shares, I think, in terms of a promoter buy. So I think our ticker team will be addressing that in just a bit. Once that's out, we'll address it as well. But Arma, tell us, CLSA as well has come out with the note. Tell us more on that. Which are the companies that are perceived to be beneficiaries?
It's interesting from CLSA, Nigel. They're saying that they've classified a set of 54 stocks that they expect to benefit as direct beneficiaries of the government's current policies, and that they have classified them as Modi stocks, and they call them that 90% of those Modi stocks have outperformed the Nifty in the last 6 months, and hence they are calling this last 6 months gain that the index has seen as an election-driven rally, and they expect this outperformance to continue if the current government is voted back to power. Now, what are these Modi stocks? Most of them are PSUs, NTPC, NHPC, ONGC, PFC. There is L&T also in this list, and then come the telecom players, Reliance when it comes to Jio, Bharti Airtel, Indus Towers, all of them finding a name there. Now, what CLSA is also saying is that this narrow rally that we have seen may taper out by June or July, and hence banks is the sector to watch out for when it comes to it on a risk-reward basis for the second half of FY24, and hence of calendar year 24, beg your pardon. But the list of Modi stocks, beyond the list of Modi stocks, CLSA is betting on names like HDFC, Axis, which are already part of their India portfolio, as well as stocks like Zomato and Avenue Supermarts. And lastly, when they say that investors may face some bit of reality check once this euphoria dies down sometime in June or July, and some of those less patient investors may head for some profit booking going forward. And they also alluded to the topping out of PSUs in 2014 and 2019, a few weeks after the election, and they are hoping and they are expecting a similar trend this time around as well. So they have classified a list of 54 stocks, but watch out for PSUs after the election results.
Okay, all right, Hormuz, thanks very much for that. So interesting notes, right? One after the other. Yesterday we had 3 notes on elections and markets. Today we have 2, say let's say Nomura, and I'm sure we'll see more as we head into that important sort of outcome, the election outcome. Gautam Trivedi is with us. He's a co-founder and managing partner at Nepean Capital. He's with us here in our studios. Good to see you, Gautam, and good to see you here in our studios.
Hi.
You just back from the US, we were just talking.
That's right.
And I'm sure that elections and what happens after that came up quite a bit in those conversations. I want to ask you to sort of, put your neck out and say, well, what's going to happen? Yeah. But let me, so something that which Nomura said, right? Even if the base case is true and the BJP comes back with a majority, they're saying low single-digit gains for the market. I just want you to respond to that, how you think about it. So this is a slightly more near to medium-term question.
Fair enough. It's a valid question, so it's not it's not putting me in a tight spot, which I was scared you might do. But the fact is, I think around 330, 350 is already priced in. The markets, as we've known for the last 6 to 7 months, it's very expensive. It's hard to find stocks. Even we have a hard time trying to find stocks, mid, small, large cap. Well, there are some large caps that haven't moved, but in the certain sectors, maybe chemicals, specialty chemicals, agrochemicals, that have underperformed. But in general, on a broader scale, the market's obviously pretty expensive. And I think the trip basically where I met a whole bunch of asset allocators, fund managers, I think they're very excited about India from a long-term perspective. There is no doubt about the longer-term India story playing out. And a lot of people ask me, is India where China was 10 years ago, 12 years ago, 15 years ago, depending on their experience with China and India for that matter. But I think the election is an important element in their final decision making. They would like, I think, for the most part, to see the BJP and the NDA come back with the Prime Minister Modi having a third term, because they believe that's going to be continuity in terms of economic policies and the ongoing infrastructure build out, which the previous government wasn't that focused on, but these guys clearly are. So that would be a huge positive that would have come. Having said that, valuation still remains a big concern.
So one of the key talking points with all your conversations with investors is political and policy continuity. What else? What else was, top of mind for investors? Because FPIs have been holding back when it comes to investing in India right now.
Yeah, so you raise a good point, Rima. So if you look at it last year, if you look at the last 3 years, India's been at more than double the valuation of China, right? At one point, I think the valuation gap hit almost 160%, as in MSCI India over MSCI China. So I asked the question, okay, for the last 3 years, India was always expensive. What's changed in 2024 calendar? And what's changed really is the fact that, and considering the fact they put $21 billion last year of net FPI flows that we saw last year, they said, we have an alternative, which is China. So China's, if you look at the table this year, from the amount of money that's come into Asia, Japan's the top with 33 billion of net FPI investment. Then comes Korea with 16, China with 12, Taiwan with 6. So we are actually at the lowest end of the pecking order, but a negative 2.4 billion of outflows this year to date. So I think the valuation has become now an issue because there weren't any major alternatives last year, or more so even the last couple of years. But with the Chinese government announcing a slew of measures to open up the economy, stimulate the economy, money has gone there. Some of it, I think, is still FOMO money because people have been left behind. They've lost money in China. Some people are holding on to their positions. They've come back to life, some of those positions. So they're not exiting China, but incrementally, money is not coming into India as of now. Things could change coming Tuesday if the BJP / the NDA gets a much bigger number than anticipated.
Okay. So, Gautam, let's go back to the central problem, and that you're saying high valuations and tough to find stocks, right? Yeah. But what the earnings season has sort of taught us is, at least for some of these capex plays, including a lot of the PSU stocks, earnings are still coming through. At least we haven't run into major disappointments over there. So, I mean, how would you cut it? How would you? I think that's the problem people are facing, right? Do you go with the leaders, which have run up 100%, 200, 300%, or do you wait for the laggards like, say, FMCG to turn around?
So, I think the way to look at this is, and the one question that I was asked across on this trip was, what will cause the correction? When will India come back to, let's say, 18 times or 17 times, which is currently at 21 times, calendar 25 PE? So I think there are I don't know the answer to that. What's going to cause the correction? Maybe an upset on Tuesday, or maybe a number that's a lot lower than what the market was anticipating. But the problem I see is that the domestic flow is coming in non-stop month after month. In fact, the SIPs are actually hitting a new record high every month. So as a result of which, the weightage of India, the market cap's going up as a result, and the weightage of India from a pure market cap perspective within the MSCI universe actually is increasing, which means the passive funds have to match that, which brings in that FPI flow, which is non-active. I'm talking of non-active. Passive money still has to come and match the increase in the weightage of India. So I think that becomes, in some sense, or has become, what I'm seeing over the last 12 months, a self-fulfilling prophecy. So until there is no slowdown in the domestic flows, which you and I guess all of us sitting in this room, unable to foresee that slowing down, which in a way is also good. The other side of that is that it's good that the financialization of savings is happening. The average Indian who basically 10 years ago, I remember saying, we'll never invest in the stock market, is coming in. So I think it's good for the longer term development of India's equity capital
We're not
markets.
getting the so-called healthy correction, the deeper healthy
We need
correction.
that, and I think maybe the government or the SEBI takes some steps to control some of the F&O, madness which is happening right now, post-elections.
Okay, hi Gautam. Good afternoon and good to see you in our building, in our studios as well. Gautam, I wanted to ask you about the EMS space. That's a space where you've been quite positive on. I recall in the past you've said that the EMS space could probably be where the IT sector was in the past. These stocks have run up and they've done very, very well. How much is left on the table for investors as of now?
See, the thing is India going to become the manufacturing hub for IT, for mobile phones within Asia, ex-China? I think the probability of that happening is clearly playing out, and within that comes the entire component ecosystem. So I see that clearly happening over a longer term period. Some of these stocks have had corrections, including some of our holdings. But having said that, I think if you're in for the long haul, you will see the next Foxcons being built in India, for sure.
And picks, Gautam, in that space now from here?
Well, we hold Sirma SGS, so we still like the stock. But I think Dixon, we don't own Dixon, but I think Dixon will be a much bigger company in the next 3 to 5 years. They're doing all the right things.
What else do you like? I mean,
within the EMS space, or?
I mean, overall, top ideas now.
I think power is still going to be a very big business going forward, power generation, whether it's renewables, whether it's thermal, because if you look at what's happening back in the States, and this is some of the feedback that I got, data centers as a percentage of total consumption of power in the United States is 3% of the total power generated in the US. By 2030, it's going to go to 8% because the number of data centers that are coming up and will be needed given 5G, given...
And power consumption is much higher, right?
Is much higher. So the United States is going to be adding another about 47 gigawatts of capacity, power generating capacity over the next 6.5 years. That's about $50 billion of net investment. Before I left for the States about a month ago, I was on the Blackstone quarterly call, where the chairman, Steven Schwarzman, basically said that Blackstone, as a private equity fund, has invested $50 billion in the data center business. They have earmarked another $50 billion to be deployed within the data center business, which means their bet, and this is the world's biggest private equity fund with over $1 trillion in assets, that's the big bet they're taking. So I think power generation, newer industries like data centers, there's no pure play today on data centers. Maybe some of those companies will get listed in the future. So you'll see some of that happening.
So what about transformers and those kind of companies?
I think so too, yeah.
Power is a sort of a...
See, the problem in India, and again, I've been asked this specific to one of our holdings called Varun Beverages. Why does this stock trade at 42 times or 45 times forward earnings? The problem I see with some of these sectors, in fact, for that matter, even the wind space, there are only 1 or 2 companies listed. And unfortunately, these stocks are going to trade at a huge premium to the rest of the market or even to their global peers.
But power does not have that problem, right?
Power doesn't have that problem as yet, but specific to transformers, as you asked, there are very few ways to play that.
Correct.
That's the issue.
Any other new ideas? Power is one. Anything else?
If I could just sort of add in over there, since we're talking futuristic sectors, I was just curious on what you're hearing on EVs.
Yeah.
Because, I mean, here there are a couple of stocks that are the play, but just want to understand what the overall thought process is. There's some chatter about how adoption is coming down because in India we have our own issues with charging infra, etc. What's your take?
I think there are two ways to look at where India is going to be on the EV space. Either it goes the US way, which is you're seeing a slowdown in EV sales, or it goes the China way, which is, incrementally China's EV market. It's not even an ICE market anymore. So I don't know how India is going to play out, but the charging infrastructure, to your point, Surabhi, is that yes, that has to be big enough for people, large enough for people to think about buying an EV and not get stuck between Bombay and Surat, or forget about Bombay, Delhi. That'll take some time. But I think the EV space, the only pure way to play this, we have a stock in our portfolio, which is called Hexacom Systems, which makes the EV charging stations. That's 30% of their revenues. They do other stuff too, but that's incrementally going to become a bigger business. I think I think JLR is in Tata Motors, and assuming once that gets split, that could be one way to play it. And I think Mahindra, they very clearly said 30% of their sales are going to be EV. So, and some of the models that I'm seeing are really fantastic. So my view is there are indirect ways to play EV in
some of the battery companies, Excite, etc., right? Which have
they could be as well, yes. I mean, they've had a huge run-up, but yeah, valuations aside.
Anything else new? The new thing? Gautam?
I can't think of anything new right now. But I think the good news is you've seen a flurry of IPOs of companies and sectors that didn't exist 5 years ago.
Yeah.
So I think there'll be new stuff coming out. So.
Yeah. By the way, you were in the US for
about 3 weeks, yeah.
Wow. So how's inflation? I mean, I was talking to a friend who came back recently, spent 2 weeks. Absolutely crazy inflation.
So I'll tell you, 4-star hotels in New York are anywhere from $400 to $650. That includes taxes, but no breakfast. A one-way trip from JFK into New York City is $120 by taxi.
Wow.
So, and obviously you have to when you leave, you pay $120 as well. So the cost of just getting into Manhattan is roughly about $250. And that doesn't include the tip, which a cab driver usually expects.
That's now we know why the Federal Reserve is going easy on cutting rates, right? Makes perfect sense.
It's not happening.
Yeah.
The economy is flying in America right now.
Okay. All right. Great to have you with us here, Gautam. Thanks very much for your time.
Thank you.
And good conversation as well. Well, that's, markets for you. Well, the market here and now is down 170 points. So a little bit more on the downside is where we've gone. 22,700 or so on the index. Let's just take a quick look at the Nifty Bank as well, which was down more, 1.25% down there. That's about 630 points. So no incremental cuts there. But caution being built in as we head into the election outcome. Exit polls, of course, the first that we will get Saturday evening before the results next week. We'll take a break. We are back. Short-term trading ideas with our technical experts on the other side. Stay with us.
Have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Welcome back. Well, we briefly breached the 22,700 odd mark, but HDFC Bank is cutting its losses now, so that's what's helped the Nifty claw its way back up. And even the Nifty Bank, that was down close to 700 points, that's pulled back a little bit from the day's low. And Bharti Airtel, that's the other one in there, that's gained close to around 0.5%. Given its weightage, that's some kind of a fight back that we're seeing from Bharti Airtel. So both these two heavyweight names should come up for you, and Hero MotoCorp as well. It's cut its losses into half, now down only around 0.5%. Shrikant Chavan is back with us. Shrikant, it's a weak trading session, no two ways about it. But do you think the Nifty Bank is getting to a zone where, in fact, it finds some kind of support?
Yeah, Nigel. Bank Nifty is like very close to its important support levels, and but because it's like very close to expiry days, most of the time we see continuous pressure on the stock specific or.
I think we are having some issues with that line, so we'll just go to Shrikant as we're told the line is fixed. So those are sort of short-term trading ideas with Shrikant coming up in just a bit from now.
By the way, markets are at the day's low now, so on the verge of now breaching 22,700 on the Nifty.
Yeah, no, absolutely, and the pressure is coming. But again, I mean, it's in percentage terms, it is about 0.75%, right? So keep that in mind. Nifty Bank is also down 600, 650 points, but that's about 1.25% or so. So this is once again, a little bit of caution and a little bit of profit booking going into the big event. Of course, this comes after the run-up that we've had in the recent past. Now, Paytm is the name that we're going to focus on. Shrikant in a bit, but Paytm is locked up still in upper circuit. Sources tell CNBC-TV18 that Vijay Sharma has reached out to potential investors to buy a stake in 197 Communications. Ritu's here with what she's picking up. Ritu.
Well, yes, we've been given to understand from sources that Paytm's founder, Vijay Sharma, has been in talks with potential suitors to buy a stake in 197 Communications, which is the parent entity of Paytm. And one of the suitors that Vijay has sounded out is the Adani Group. But there is no clarity on the status of these discussions or any confirmation whatsoever if these talks are going to fructify. It also remains unclear so far on whether Vijay Sharma is looking to sell stake or one of the other investors in 197 Communications. Because if you look at the shareholding pattern, Vijay Sharma directly holds 9.1% stake in OCL. Another 10.28% is held by a firm registered by him called Resilient Asset Management in Netherlands. Now, if you recall, last August, Paytm had announced that Vijay would acquire this 10.28% stake from their Chinese investor Antfin through an off-market transfer where Resilient will issue OCDs to Antfin without any actual cash transfer. So Antfin continues to hold these OCDs, which it can choose to redeem or convert at a later date if it wishes, depending on the contours of the agreement between the two parties, which have not been made public. Now, Antfin separately continues to hold 9.8% stake in OCL. Other key investors are Saif Partners, which holds nearly 15% stake through its entities, the company's directors with 9.34% stake, and so on. A quick word on Paytm Payment Bank as well, where OCL, of course, holds 49% stake. There are no talks, we understand, to sell any direct stake in the bank just yet, and until all customer deposits in the bank and wallet are fully moved out, even the regulator is unlikely to proceed with next steps or any action otherwise. The Adani Group has called reports of acquiring any stake in OCL baseless and false, while Paytm clarified to exchanges that the company is not engaged in any such discussions.
Thanks a lot for that, Ritu. I believe we have Shrikant Chavan back with us. That line's back. Shrikant, you were running us through your picks. Please go ahead. Oopsie. We lost him again. Hopefully, we'll have him back very, very soon. For the time being, the Nifty has moved below the 22,700. The Nifty Bank as well. That's struggling, actually. That's been the big drag on the index. Let's see what's moved to the low point of the day. Titan. Actually, pull up the intraday chart of Titan. That stock has suddenly moved lower. You have Asian Paints as well, I beg your pardon. That one, in fact, has moved a little bit low in the last few minutes. So both those two are struggling. From the broader markets, the stock that catches your eye is Aditya Birla Fashion and Retail. Remember, it's been a big underperformer in comparison to what Trent has done. But just take a look at that stock. Now it's up close to around 5%. The operational performance actually was quite good. It reported a net loss, but the operational performance was good. And it seems the street, for the time being, likes what they see out there. So that explains why that stock is moved to the high point of the day. Since we have some time, let's run you through the expectations on Tata Steel. The revenue number we're working with is around 58,000 crores. The EBITDA number is around 6,150 to 6,200 crores. The operational performance is what we focus on, so just stick to that. The PAT number normally is very, very volatile. Operational numbers we have with us, the India business, the Europe business, that's Netherlands as well as UK. On all the three businesses, there's a good recovery on a sequential basis. So on a sequential basis, there'll be operating leverage that will play out. Now, the key factor to note in the past quarter for the Europe business is that the Netherlands, blast furnace revamp, that's completed, and the furnace did restart. So that's what will help them in terms of volumes. And UK business, seasonal factors play out there. The most important numbers for Tata Steel is the Europe EBITDA per ton and the India EBITDA per ton. And both those two numbers should come up for you in this train. So for India, you're working with 14,150 rupees per ton. Keep an eye out on that number. That's the India EBITDA per ton. On the European business, we're working with a loss of around $87 per ton. If in fact it can narrow those losses, remember last 4-5 quarters we've seen losses. If the loss can come down, then the street will track that very, very closely. The other factors that play, the standalone EBITDA per ton is under pressure because pricing has been weak and coking coal costs will go up by around $10 to around $20 on a per ton basis. For TSC, the losses will come down because operating leverage will play out, as I told you, because Netherlands has restarted, and also they've taken some cost optimization measures. So we'll keep an eye out for that, for the numbers. It comes post-market as, and any kind of debt reduction is something that we could look forward to as well. For the time being, slip in a short break. You come back, we'll run you through market closing.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage. Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. Well, the stock that we are focusing on is ABFRL. Mayuresh Joshi, the head of equity research at William O'Neill, joins us on the show. Well, hi Mayuresh. Good afternoon. Good to see you in. What's your view on ABFRL? A big underperformer, didn't do the right moves. Now they're announced segregating of the businesses. Looks like they want to unlock some value. Your take?
Afternoon, Nigel. No, I think the numbers have been sequentially and on a year-on-year basis quite good. So if you probably look at the standalone numbers, if I'm not mistaken, they've done EBITDA margins close to 14.5%. And even on a consolidated basis, they've come close to 11%. Obviously, if you look at the segmental classification, the lifestyle brands are expected to continue doing well. So they've seen a very good recovery on a year-on-year basis. And when you're probably looking at the entire perspective in terms of the ethnic business, how the demerger is expected to play out as well with ABFRL, the expectations of more stores coming in. I think a large part of how the distribution network is, how their key bands will work, specifically in terms of lifestyle, the youth western wear, sportswear, they're also getting into innerwear. So I think there is expectations of good volume growth coming through on the branded part of the business. And therefore, as discretionary spends keep on going higher, specifically for urban as well as semi-urban areas, I think this should be a key beneficiary as far as numbers are concerned. Obviously, the chart that you're now putting out, Trend has been a huge outperformer. But at some point, I think with the numbers that ABFRL has posted, there is some recovery that is expected. So anybody holding onto the stock should continue holding. There should be good, solid recovery from the second half for ABFRL and a consistent one at that.
Okay, got it. Mayuresh, hi, good afternoon. I was highlighting this earlier as well. The selling on life insurance stocks, a lot of the private insurers, HDFC, SBI, ICICI Pru, they've all been down quite a bit today. Would you read anything into it, hearing anything about it? And what's your take on the sector?
No, not too sure. I think whether there are any regulations that have been proposed by the regulator, and that's why the stocks are down. But generally, if you probably look at Survi, the entire construct of these players, since the tax tweaks that happened last year in the budget, many players, including HDFC Life, ICICI Pru, even LIC to a certain extent, had to go through a change in their product mix. And with the change in the product mix, obviously the entire expense part that gets front-loaded, both in terms of commissions to be paid out and the operating expenses as well. They were on the higher side for both these players. They started moving higher, and the value of new business margin starts coming down. So to that extent, I think till the appropriate mix is achieved, which might take a few quarters more, I think the numbers might still be a little bit on the softer side. I think SBI Life is something that still stands out in our opinion. Obviously, price action has been very, very muted for all the players. We'll still need to see good price action, specifically on the EPS and RS ratings that we see at Markets with India. But as far as the product mix is concerned, I think it's got a very, very stable product mix. When it probably comes to the VNB margins as well, that should be maintained because the product mix is very, very appropriate compared to the three players. They've got a huge bank assurance tie-up through SBI, which gives them a huge network and distribution reach. And the overall operating costs are very, very minimal. And they've done an added provisioning as well a few quarters back, which also gives them the cushion. Therefore, I think in terms of expected embedded values, expected return on embedded values, as well as VNB margin maintenance, I think SBI Life should relatively stand out compared to the other two life insurance players.
By the way, Mazgaon Docs reported numbers a while back, about 30 minutes back. Revenue jump of 50%, margin expansion of more than 700 basis points to 17%, and the profits have doubled. Look at that stock reaction after 3 o'clock when the numbers came through, now up close to about 11%. And Sumitomo Chemicals was a big mover yesterday. Today it started trade a bit soft, flattish, but now the stock is up. It's a double-digit gain now again on Sumitomo Chemicals. So 2 back-to-back days of big moves. Mayuresh, in this earnings season, in the last leg over the last couple of days, which stocks caught your attention in terms of strong numbers where we've seen earnings upgrade and a potential to add to one's portfolio?
Afternoon, Rima. So I think from a Markets with India perspective, what we found out is domestic infra-related stocks can still continue doing well. So Welspun Corp, Jindal Saw, as an example, is where I think the potential in terms of business outlook and opportunities are still underutilized. So to that extent, I think the 16,000 kilometers to get extended to 27,000 kilometers, the huge pipeline that is expected to get put out. A lot more orders can come through from the domestic business. Nal Sejal has an outlay of 70,000 crores. As does Saudi Arabia. I think Saudi Arabia is spending big time in terms of not just the pipelines, but also the desalination networks as well, which helps these players. So I think a few of these players like Welspun, Jindal Saw, the numbers were decent, can do well. One outlier that we probably are liking at this juncture might be Balmal Lorry. This stock, typically a government entity, but largely into logistics. They've got leadership position in terms of industrial packaging, steel drums as an example. What you will also see is the kind of capex that they're probably doing in terms of third-party logistic warehouses, which is going to be a big thing going forward. And therefore, I think the management has a clear vision in terms of achieving a revenue of around 6,000 crores over the next 2 to 3 years with very, very healthy margins. And even for this year, on an annualized basis, they've done an EPS of 15 rupees compared to 10 rupees for FY23. So I think one stock where the dividend yield is decent and earnings can be decent can also be Balmal Lorry. So construction, manufacturing are themes that we probably like at Markets with India.
Okay, all right. We'll leave it there. Out of time, Mayuresh, thanks very much for joining us here on this program at least, and we'll continue our conversation a little later. Thank you for joining in. 180 points down on the Nifty, 22,710 is where we are at this point in time, and we'll basically end down by that much, around the 22,700 level. Now, the Nifty Bank will be down about 1.25%, 48,600 roughly is the close coming through there. The small cap index, when we started, was in the green. It's just absolutely flat, almost unchanged as of right now compared to yesterday's close. And the mid cap index was down, is still down about 0.5%, 0.4% down on the mid cap index coming through there. But of course, lots happening with specific names that we've been discussing. Rima.
Well, banks were the principal culprit for the way the indexes ended lower. So Nifty Bank down 560 points, more than a percentage point down, with names like ICICI Bank seeing more than a 2% fall, Axis, HDFC weak, life insurance companies to tumble, and Tech Mahindra was one of the notable losers, 2% gone on that. The top gainers include Hindalco, Divi's Laboratory, Power Grid, Bajaj Auto. These four stocks had gains of more than 1%.
If I look at the volume charts, then actually a lot of bank stocks falling on big volumes. I mean, even the percentage cuts that we're talking about, like, HDFC Bank or an RBL Bank or an ICICI Bank, basically all this has happened on big volumes. That's point number one to note. Apart from that, if we look at some of the movers and shakers of the day, then in terms of positive result reactions, it's got to be Campus Active all over the place once again. 17% on that stock. Mazgaon Dock, 11%, and this is also, we're talking about results here. So 11% on that stock, very, very smart. And AB Fashion and Retail looking good with a 5% up move by the end of the day's action. Ditto for Paytm, with talks of about of a potential investor perhaps coming in on the parent company level. The negative sort of reactions were MTAR, RR Kabel. These were some of the weaker stocks, IRCTC, etc. Down in PNB Housing Reserves, the mentioned block deal happening over there. Stock ending down about 7%. So all in all, second day of cool off with the Nifty finally closing at the 22,700 mark. Well, with that, it's a wrap on this edition of Closing Bell. Thank you very much for being with us, but don't go anywhere. Markets Forward will take the action forward.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
In the last couple of weeks, the aluminium prices have spiked up, but they've been fairly volatile. There have been sort of $100 swings each way, currently running at $25.50. I think that, we are sort of working with the fact that the numbers are going to be a little bit more stable around 2,400 rather than the current 2,550 or 2,600. I think our input cost, especially coal cost, there's enough coal available. So I think our cost of production in Q1 is probably going to be a couple of percentage points even lower than Q4. So I think that the EBITDA per ton in Q1 will be certainly higher than the Q4 $967 per ton.
My role would be focusing more on strategic financing and M&A, because I think that these are very important things that the company is now looking at to transform itself into a global top 10. I think, this role is going to be, more, as I mentioned to you, on strategic financing, M&A, and I would also have, to be involved a little more on the subsidiaries itself. Ashok Leyland has a lot of subsidiaries which are today, on value generation mode. So this is another part of my role where I would be interfacing with the management of these companies to look at opportunities for value enrichment. At the moment, it's a little too early for me to state what the specific M&As would be. As and when they happen, you will certainly come to know of them.
The passenger vehicle, two-wheeler and four-wheeler stocks have become slightly more fairly valued versus last time. Incrementally, I'm a bit more bullish on CVs because, traditionally what we've seen with CVs is that it goes through deep down cycle and a sharp up cycle. But the sustained momentum in the team.
A weekday of trade ahead of election results. Financials turn out to be the biggest losers. The Bank Nifty ending down over 1%. Mid-caps were relative outperformers, although the mid-cap index was also down Pharma, metals and a few PSU stocks manage some gains.
S&P affirms India's credit rating at BBB-, upgrades outlook from stable to positive, hints at an upgrade in the rating if the government debt drops below 7% of GDP.
Sources tell CNBC-TV18 that Paytm's Vijay Sharma may be engaging with prospective investors for them to buy a slice in the payments player. Hindalco's US subsidiary Novelis has filed for an IPO on Wall Street. It hopes to raise nearly $1 billion, valuing the company near $11 to $12.5 billion. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we will try and wrap up the day today, that is for you. We'll also get you up to speed, get you trade ready as we come back and look forward to tomorrow's session. I'm Prashant, with me, my colleague Rima. Rima, hi.
Hi, and we're going to be with you for the next 20 minutes with all the big news, key developments in Dalal Street, top corporate voices, the events to track. But first, the day's market action. Another cautious session?
Just waiting, Rima, right?
Waiting,
I mean,
right?
I think that's the definition of today's price action. Although, you could look at the market and say that there was pressure and there was selling, there was a little bit of nervousness. And I think all of that would be true. But is it really, in a way, pre-positioning to what may come? I would not go that far. Because that would be kind of saying, well, is the market kind of sensing something and is trying to sort of pre-position ahead of what is the expected outcome? I think the base cases we've been putting out and all the brokers have their notes out is pretty much the fact that there perhaps will be continuity. But it's just that lately we had a decent rally, and from, of course, a new all-time high, the market's giving back and pulling back somewhat. So that's essentially, I think, what went on today. So in terms of near-term levels, both the Nifty and the Bank Nifty ended below the very, very short-term kind of support levels, 40 hourly averages. So, near-term, that's a bit of a negative indicator. But because we are so close to a big event, wouldn't really take that point too far. Broader markets ended mixed. So you had the small cap index, which actually ended almost flat on a day-on-day basis. The mid-cap index was down about 0.4. Market breadth was negative. At one point, it was almost 1:1. Pharma did better, metals did better, and of course, we'll talk about Hindalco there. PSUs and especially the defense names, BDL, Mazgaon, Cochin, those were some of the names. We'll, of course, put out more names with Hormuz in just a bit from now. Rima.
Well, although there is caution, it's not that the markets have given up too much by way of ground. It was just last week, towards the end of last week, that we hit all-time high levels, and we're just about 1.7% away on the Nifty and on the mid-cap index from our all-time high levels. Today, there was an important update about S&P raising the outlook on India from positive to stable, but it didn't seem to have too much of an impact on the markets per se. Banks were under pressure. The Nifty banking index down more than 1%, underperforming the benchmarks for the second day in a row, with big cuts visible in ICICI Bank, Axis and HDFC Bank. And Pharma came to the rescue. The Nifty Pharma index seen some buying, and that index was up close to about 0.5%. But let's also tell you what we have for you on our show today. We start with the top movers and shakers of the day. Hormuz joins in. Hindalco took the spotlight after the company's US arm Novelis filed for an IPO. Meanwhile, other stocks that were on our radar were Paytm and Campus Activewear. So stay tuned as we get you all the details on these stocks. And last but not the least, we delve into the key market events to watch out for. But as promised, first to the big stock movers of the day with Hormuz.
It's difficult for the index to recover from lower levels if one of its biggest constituents underperforms, and that is what happened today when the banking stocks were mostly underperforming in today's session. And the Nifty Bank has been pretty resilient over the last few days, but unfortunately it fell prey to selling pressure today as well as in yesterday's trading session as well. There you can see ICICI, HDFC, Axis Bank, all of them ending near or at the lowest point of the day, 1.5 to 2.5% cuts on all of these names, and that had a consequent drag on the Nifty as well. Along with banking stocks, insurance stocks were other underperformers in today's trading session, and ICICI Prudential ended at the day's low, 4% lower there. HDFC Life, SBI Life, LIC, Star Health, all of them ending at the lowest point of the day, anywhere between 2 to 3% cuts there as well. Plenty of earnings that continue to keep coming as we wind down on this earnings season, but Campus Activewear is the standout, 17.5% higher there. above its IPO price after 4 months in today's trading session and also turned positive for the year, did the stock. But on the flip side, MTAR Tech had a forgettable day after the cut in guidance, 10.5%. Mazgaon Dock numbers came in just a few minutes before close, 11% there as well. Samvardhana Motherson and Aditya Birla Fashion stock in the F&O band but ended 5% higher after the results. The other sector that did well today, as you highlighted, was Pharma and Gland Pharma, Biocon, Glenmark, Torrent Pharma, all of them having a good day in today's session. There were some other stocks within the broader markets that were bucking the trend, even as the market breadth remained towards the lower end. The Titagarh Rail was one of them. Sumitomo Chemicals continues to grow from strength to strength, another 9% today. EID Parry, Cochin Shipyard, as you highlighted earlier, along with Mazgaon Dock, some of the other positive movers in today's session. Back to you guys.
All right, Hormuz, thanks very much for that. So that's an exhaustive list of what really happened. Mayuresh Joshi is with us, William O'Neill, and Ruchit Jain is also with us, 5paisa.com. Gentlemen, good afternoon. Good to have both of you here. Mayuresh, I'll come to you, but Ruchit, a quick look at the price action first, and what would you take away from what we saw today? Ruchit, if you can hear me? I think you'll have to unmute yourself, Ruchit. Can't hear you.
Yeah. Am I audible, Prashant, now?
Yes. Please go ahead.
Yeah. Hi, very good afternoon. Well, in last 3 trading sessions, we have seen some pullback in the market, but we have not seen any kind of short formations in this pullback. And if you look at the broader market view, then the broader trend for the market still remains positive. So it just seems to be a correction within an uptrend. Markets, Nifty has very strong support around this 22,600 to 22,700 range, just where we have closed today. So we believe that downside seems to be very limited from here on. Maybe tomorrow, first half of the session, we could see some kind of profit further downside momentum towards the 22,600 mark. But that would be a good level to take some contra trades and go long on. So we are advising our clients to continue to trade in the direction of the broader trend. And any dips towards 22,600 tomorrow would be a good opportunity to take some contra longs here.
Okay, let's get to the big movers then. And Hindalco was the top Nifty gainer after the company's US arm Novelis filed for an IPO and will list on the New York Stock Exchange. The company is targeting a valuation of up to $12.5 billion, and they're looking to raise nearly $1 billion from the public issue. Nigel joins in with the details and what brokerages are saying on this. Nigel.
Well, that's right. The brokerages are quite positive with regard to this news that's coming in on Hindalco, going ahead with the Novelis IPO. They've given out a few details. $18 to $21 per share is what they're looking forward to. Hindalco will look to sell closer to around 7.5%. And for the 7.5%, depending on the price band, they'll get anything between 6,700 to around 7,800 crores odd. What about the valuations? Well, going by this pricing, the equity value will be either $10.8 billion at the lower end, and at the upper end, it will be around $12.6 billion. But need to rope in $3.4 billion of debt, which takes the enterprise value up to around $15 to around $17 billion. Now, assuming that Hindalco does close to around $2.1 billion of EBITDA in the coming years, well, it trades at nearly around 7 to around 8 times. Now, most brokerages on the street are anything between 6.5 to around 7 times odd. So in that context, well, they're getting a bit of a premium to the multiple that was given, which is good news, and the street took that positively. Only a couple of challenges that will be there going ahead. One is there will be holding company discount that will be assigned, point number one. Point number two is the FIs hold closer on the 4th, 25% of the total Hindalco shareholding right here. And if they want to play Novelis, now they have another option. They can go and play it directly. So both those two will be some challenges going ahead. For the time being, the street took it positively. And brokerages, JP Morgan as well as CLSA, both of them have a buy rating or positive rating with the target price in excess of 750 rupees. Back to you.
All right, Nigel, thanks very much for that. Mayuresh, you heard Nigel there. Hindalco, what's the view?
So afternoon, Prashant, again. I think what Nigel has mentioned has been very crisp in terms of the evaluation expectations for Novelis, and it has come a tad bit higher. Obviously, the business underlying for Novelis is also expected to remain extremely stable in the quarters to come. And with expectations of some element of recovery in the Chinese market, there is a huge possibility that aluminum prices, which have sunk to a low of around $2,100 per ton, should start showing signs of recovery, both in terms of demand coming back and restocking happening. So to that extent, I think Novelis's valuations that they have probably got and the expectations of future earnings remain extremely robust. When it comes to the standalone performance, again, the expectations for Hindalco's standalone performance should be relatively better. The access that they've got to the alumina and the bauxite mines safeguard them from any volatility in input costs going forward. And therefore, on a reported EBIT or a reported EBITDA per ton basis on the standalone numbers, it should show signs of sequential improvement. Any improvement in LMEs directly adds on in terms of the operating leverage as well. So yeah, we remain optimistic and positive on Hindalco and markets.
Okay, let's get to the other mover of the day. That's Paytm. The founder and CEO, Vijay Shekhar Sharma, is engaged in exploratory talks with potential investors, including the Adani Group. Sources tell CNBC-TV18 there is no clarity yet on the status of these talks or a possible deal closure. In a statement to the stock exchanges, both Paytm and Adani have denied any deal talks. Ritu joins in with the details. Ritu.
Thanks for that, Reema. Yes, we do understand that Paytm's founder Vijay Shekhar Sharma has been in talks with potential suitors to buy a stake in 197 Communications, that is for the suitors, which is the parent entity of Paytm. And one of the suitors that Vijay Shekhar Sharma has sounded out is the Adani Group. But there is no clarity on the status of these discussions or any confirmation if the deal will actually fructify. It also remains unclear so far on whether Vijay Shekhar Sharma is looking to sell stake or one of the other investors. Now, if you look at the shareholding pattern for 197 Communications, Vijay Shekhar directly holds 9.1% stake and another 10.3% is held by a firm registered by him, which is called Resilient Asset Management in Netherlands. Now, if you recall, last August, Paytm had announced that Vijay Shekhar will acquire this 10.3% stake from their Chinese investor Anfin through an off-market transfer where Resilient will issue OCDs to Anfin without any actual cash transfer. So Anfin continues to hold these OCDs in Resilient, which it can choose to redeem or convert at a later date if it wishes, depending on the contours of the agreement between the two parties, which have not been made public. Now, besides this, Anfin also continues to hold 9.8% stake in OCL, other key investors being Surf Partners, that has 15%, the company's directors about 9.3%, and so on. Now, a quick word on Paytm Payment Bank as well, where OCL, of course, holds 49% stake. We understand there are no talks to sell any direct stake in the bank, and until all of the customer deposits in the bank and wallet are fully moved out, even the regulator is unlikely to proceed with any next steps or action otherwise. The Adani Group has called reports of acquiring any stake in OCL baseless and false, while Paytm clarified to exchanges that the company is not engaged in any such discussions.
Mayuresh, very quickly, do you have a view? Ritu, thanks very much for that. Paytm?
No, so Prashant, I think let the clarification come through. Adani has already responded, and if there is no merit to this news based on the clarifications and circulars which have come out, I think numbers will still take some amount of time. So I think there are far better stocks in the broader markets as we see it.
We'll talk about some of them in a bit. Let's move on to the next one. So this is Campus Activewear, right? The footwear maker really rocketed some 16% post their fourth quarter results. And Mangalam is here to quickly wrap out the earnings for us. Mangalam, over to you.
Well, the promise of better growth ahead or the hope of worse times being behind Campus is actually what led the stock price higher. It was a beaten down stock from its peak. It's down almost 50%. So maybe, today's up move has got the share price back above its IPO price of close to around 292. What was good in the numbers is, we saw a few signs of growth coming back. 4.5% revenue growth. The EBITDA growing a little higher with a 130 basis points improvement in the margins and a 40% jump in profitability aided the business. And the internals look strong as well. The management focusing on trade channels, them having repaid debt of close to 156 crores and improving the working capital discipline too. With all of this, brokerages are also increasingly turning positive. Kotak has an ad rating with a target price of nearly 285 on that stock, which is a little under where the stock is currently given its valuations. But what one will look at is the management commentary where they've guided for near double-digit volume growth, double-digit revenue growth going forward with margins between that 17 to 19% band itself. We've seen a couple of footwear companies go out and show signs of recovery in demand. Whether this continues for Campus or not is the big question. But today, the hope of that led the stock higher today.
Okay, thank you very much for that, Mayuresh. Campus Activewear is coming out of a rough year where generally foot makers have struggled. But do you think Q4 is encouraging and therefore you would bet on Campus Activewear?
So, Reema, I think Q4 numbers were definitely better compared to the rest of the pack. And therefore, I think if you're probably looking at vertically integrated players, Campus is one of the few players who are completely vertically integrated, right from uppers to soles to the assembly of shoes. which is a unique positioning in itself. When you're probably looking at the addressable market size as well, I think the sports and athleisure addressable market size for India itself is pretty large. So if you go through their presentations, which I did in the morning, the expectation is that this market will reach around 90,000 crores from almost 50,000 crores in the next 3 to 4 years. And the sports and athleisure market where campus is presently active, I think that should do phenomenally well as well. They've sold almost 22 million odd pairs this year. They've got capacity of almost 36 million odd. So they've got enough headroom to probably embark upon fresh capex. They repaid debt, as Mangalam said, and there has been an improvement in return ratios as well. So yeah, hopefully this is the beginning of a quarter where things begin to improve for campus.
Ruchit, if I were to ask you, I mean, of course, because there's a big event, it kind of adds to the uncertainty. But and you said, well, tomorrow maybe there perhaps is a little bit more left on the downside, right? That's what you began by saying. What are the best trades out there, stock specific, as we look to tomorrow?
So I think we are looking at some of the stocks which have been outperforming in this last 3 days of corrective phase. Stocks such as Biocon within the pharma space is looking quite positive over here. Last 1 month we have seen the price up move, which was supported by good volumes. On corrections, we have not seen any kind of sell-off. So Biocon within the pharma name could be one of the stock which can do well from current levels. One can go initiate fresh longs as well over here for potential targets around 340 to 350. And I think Crompton Consumer is another name where if one has to do some stock picking, then one can look at a long underperformance was seen in Crompton Consumer. But the May series has been quite bullish for the stock, especially the last couple of weeks we have seen good long build up in the futures segment. And so in the cash segment, we have seen the price up move supported by good volume. So certain names which are outperforming in this last 3 days of correction, I think those stocks can tend to do well.
Some of these defense names, the Koche, Garden Reach, Mazgaon, Rujit, I mean, very strong price action. Came off a little bit too in 2 days, but then back again today, sharply.
So it's good to ride the trend if you are already holding long positions from lower levels. But frankly, for fresh entry, the risk-reward ratio does not seem to be that favorable because technically the stop losses are too far. So rather, if I look at the entire defense pack, then I would prefer going long on names such as maybe Bharat Electronics, where the up move still seems to be could be much sharper. So I think the shipping stocks are the trend, no doubt remains positive, but good to ride the trend if you are existing holder, but not for fresh entry. Maybe a buy and dip approach could be a better trade over there.
Gentlemen, thank you very much for joining us today on the show. We need to get into a very short break. On the other side, the top corporate voices and the events to watch out for. Stay tuned.
Today could mean that the last 1 to 2 years of consolidation we've seen in CV volumes, unless we see a bit kind of global recession or big unexpected shock, we might see the CV cycle bottom out at these flattish volumes.
The car. We are in fact here at Yerwara police station. There are 3 FIRs right now.
Welcome back. You're with us here on Markets Forward. So just to get you a summary of the most important management commentary that we had on the channel through the course of the day, as we always do. Borosil Renewables was one company we had in the morning after numbers. Of course, the problem here has been that there is no import duty on solar glass. And there's a lot of it coming from China, which has really hurt Borosil Renewables in FY24. The management told us that, freight rates from China to India have risen sharply. They're now about $3,500 per container, used to be $700. And this, in a natural way, has essentially increased the price of import of this Chinese solar glass. And that basically has made the product more competitive. They're expecting also favorable laws with respect to solar glass in Europe. They've got some capacity in Europe. And of course, on the big one, which is when will this import duty, customs duty on solar glass come through again? It was there till August of 2022. The management said they're confident it's around the corner.
We also spoke to the management of MedPlus. The company says FY25 sales growth should be at least 20% compared to 23% last year. They're guiding for 6% EBITDA margins and they plan to open 600 stores this year.
Kabel, the stock sold off actually today. The company told us that they're targeting a 20% volume growth in FY25 and will improve margins by between 100 and 125 basis points. The management, though, refrained from commenting on the termination of their CEO, which of course happened late in April, and said that the board will take a final decision on whether a replacement is needed or not.
And the top story this evening, S&P Global Ratings has revised its India outlook from stable to positive. The firm has also affirmed its overall rating at BBB-. The credit rating agency said the upward revision in its outlook was driven by robust growth and an improvement in the quality of government expenditure.
Okay, well, before we wrap up on this program, as always, let's get you the key events to watch out for as we come back tomorrow. Mangalam has got that list. He's standing by. Mangalam.
Well, first up, it will be the stocks that, will be reacting to numbers that were reported post-markets in today's trading session. And to that extent, Tata Steel will be extremely crucial. What happens in the European business is something that the street will be reacting to. And in light of what happened with Campus today, Bata's reaction will be extremely crucial to watch out for as well. Then you have the results of Apollo Hospitals tomorrow. Tomorrow's among the last few days of results. So a lot of companies reporting numbers, among which the key numbers would be, coming in from Muthoot Finance, M&M Finance, and National Fertilizers too. Then we have a couple of listings. So Office Space Solutions, the IPO lists tomorrow. We'll watch out for that. And remember, it's a Thursday tomorrow and the last Thursday of the month of May. So that tells you it is the monthly expiry for the markets, Nifty and all the F&O stocks for the May series too. Also keep an eye out on the bond yields tomorrow, the Indian bond yields that is, because tomorrow the RBI, as planned, will conduct a 40,000 crore GSEC buyback. So as a result of which we might see an upward move in, rather a downward move in the yields and upward move in the prices of a lot of the bonds. And then from the global data, the US most important, watch out for jobless claims and the first quarter GDP as well. All of that will have a bearing on what the US Fed does.
Okay, thank you. And with that, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates.
The Pune Porsche drunk driving case. One of the FIR is by the driver's family, who would allege that that he was kept illegally confined inside the staff quarters at the family household. He was, in fact, he had also mentioned that he was kidnapped and was not allowed to speak to his family for a very long time. Now, this car is the car which was used to pick up the driver. Cops have now taken this vehicle into their custody. In fact, my Vijay Vasant will show you visuals of how there is a notice that has been put in the car as well. In this very car was where the driver was taken, following which he was kept illegally confined. Now, cops have taken this very vehicle. They've seized it and kept it in the custody at Yerwara police station. Along with that, the Porsche car also, in this case, has been kept just a few cars away from this vehicle. Yesterday, at this very spot was where technical analysis of the car had taken place. This is a part of the investigation, so this car would also be used for further investigation in the case. So this is the progress of the investigation so far at Yerwara police station. But parallelly, when you speak of the blood samples, crime branch is looking at that case. Details in this very case emerged, show how the sequence of event that took place on Sunday. At around 11 a.m. on Sunday was where the blood samples had reached Sassoon Hospital. Both of the accused in this case were using iPhone. So they had made a WhatsApp call so that the call cannot be traced. Through that WhatsApp call is where the conversation took place. It was Dr. Ajay Tavre, whom the father of the accused had spoken to, asking for the blood samples to be changed. On the recommendation of Dr. Tavre was where the CMO, Dr. Halnoor, ensured that the blood samples are changed. There's a middleman that could possibly be involved. Cops are trying to investigate and find out who that middleman actually is.
domestic economy seems to be having more momentum, higher growth, better macro stability than the global economy. And two is that even from a valuation perspective, some of these themes we think are, given the kind of growth that may happen, given the kind of multi-year cycle they are in, we think the valuation